is because this is the first meeting that the Cabinet Committee on Economic Affairs held with the Niti Aayog, with economists and other involved parties. This is the first meeting in about 5 years that has taken place. And this kind of then shows the intent that perhaps what has been a promise as far as GST is one, but maybe there is more coming. At least the government wants to do it and move in that direction in terms of intent. I'll just circle and tie in the levels. The big question is whether there is more left after yesterday's big move. The Nifty yesterday managed to end above the 20-day moving average. It has also retraced 50% of this entire fall from the highs that we've seen. So support for the market comes in at the 20-day moving average, the first one, 24,753, and then the lower end of the gap. That is basically the gap between Thursday's close and yesterday's gap up. The lower end of that gap is 24,673. Resistance comes in, 50% is done. 61.8% is 25,160. For the Nifty Bank, the resistance comes in at the 40-day exponential moving average, 55,938. And then the second resistance is the 50% retracement, which is 56,267. Support is the lower end of that gap area, which is nothing but the high on Thursday. 55,472 is that sort of level on the downside as far as the Nifty Bank is concerned. GIFT Nifty will give you a sense. I was saying this yesterday. I think the bulk of the GST-led move is done unless and until what we hear from the group of ministers in terms of proposals, etc., is really big. So I think more normalized kind of market after that big gap up and the decent 250-odd point higher close that we saw on the Nifty. But what are the F&O cues? Nigel is across on the wall with exactly that. Nigel, over to you.
Well, yesterday was a good trading session. There was a bout of short covering that did take place in yesterday's trading session. So both the Nifty as well as the Nifty Bank. The Nifty Bank, which has been a relative underperformer, there was a bigger short covering bounce that played out here because that index ended high with a gain of around 450 points or thereabouts. And you had the open interest that was down. And that perfectly ties in with what the FIs did because they covered short. Some short covering is what we saw on index futures. Even on stock futures, there was some covering that we saw and there was some long addition. So in yesterday's trading session, there was institutional buying and there was short covering, which in turn pushed the markets higher. Moving to how are they positioned right now? Well, they're pretty much still very, very net short on the index. So the net short positions continue to remain at close to around 1.7 lakh contracts. In percentage terms, it's at around 9%. So some part, it was just some kind of glimpse of short covering that we saw yesterday. There could be more in store if we get more positive news flow that comes in. Moving to the options data, then the 25,000 call, well, that was very active in yesterday's trading session. The premium at around 80 rupees. At one point of time, it was more than 100 rupees. There was writing that we're seeing at this particular level. On the downside, though, the 24,800 put, 24,700 put, there was writing even at those strikes. So just for the day, if we're looking at levels, that you're going to be looking to work with, the 20 DMA, that got crossed on the Nifty in yesterday's trading session. That becomes a bit of a support zone, and that's a support range you're looking at. Going by the options data, going by the technical levels as well. Yesterday, we rejected the 25,050 odd mark, 25,050 to 25,100. So that's the broad range you're looking at. The Nifty Bank, it showed signs that it wants to come back to life yesterday. Unfortunately, it ended off the top. And that's the resistance zone you're working with. The 20 DMA around that 56,000 odd mark, and yesterday's high around that 56,200. Crucial resistance zone for the Nifty Bank. Finally, stocks that we're looking at, we told you in the last 30 minutes itself. PNB Housing Finance, possible stock that comes out of the F&O ban. That's precisely what's happened. You're looking at now who's going to be the new man in charge on PNB Housing Finance. The new CEO announcement is something that you're going to be eyeing. And in terms of valuations, it trades at around 0.95 times price to book. So that's the stock that I'll keep on my radar for today's trading session. Back to you guys.
Okay, all right. So we'll watch out for all of that. By the way, Prashant, you'd know this. I don't know about Nigel, but all the meetings that were happening yesterday and the fact that the conclusion is that they'll continue to meet reminded me of the Jaspal Bhatti episode. I'm sure you know which one I'm talking about. Meeting ke baad kya hua? Well, we decided ugly meeting ki date. So essentially, that's how the global...
legendary show.
legendary, yeah. So that's how the global diplomacy theatre is playing out. Very quickly, Asian markets. And yeah, that flash on the screen is really interesting. That's the biggest news across Asia this morning. SoftBank is investing $2 billion in Intel. It's picking up about 2% stake. Markets are a little concerned. SoftBank shares are down 5% on the back of that. It's a big global news development. Overall markets in Asia, range bound. The bias is slightly negative, and the implied open is suggesting that we'll also start quiet, maybe 4-5 points on the lower side. Okay, so with that, let's quickly move on and get to the equity call of the morning. Rhythm Desai of Morgan Stanley says earnings for the broad market were in line with narrow indices. Likely improvement in growth coupled with recent developments provide triggers for indices to make new highs sooner rather than later. They are overweight on a host of stocks, including L&T, Adani Ports, JSW Energy, Eternal, Memphis, Coforge, Kotak Mahindra Bank, among others. And they are underweight on the likes of Concor, Tata Elxsi, Tech Mahindra, Federal Bank, L&T Finance, Cipla, Hero Moto, and Amara Raja, along with Metropolis. So some stock-specific calls coming in from Morgan Stanley this morning. Let's take it forward then. Our first guest on the show this morning is Robert Subramaniam, Head of Global Macro Research at Nomura. He's joining us from Singapore. Robert, great to have you with us. Thanks so much for joining in. So like I said, we don't know which way all of these meetings are going. Eventually, hopefully, there's a breakthrough, especially for us from India. So let's work with what we have right now. What we have is come the 27th of August. We're looking at 50% tariff on all our U.S. exports. How do you look at India amidst all of this? And do you think it could have a meaningful repercussion on the economy and the outlook here?
I mean, if the 25% so-called penalty tariff goes into effect on 27 August, as you say, yeah, that would have a very big impact. I think it is. We have to appreciate as tariff rates go higher and higher, the impact on the economy is likely non-linear. You might remember when China and the US had their tariff trade war and tariffs went over 100%, it got to the point where it was almost like a sudden stop in trade. So the impact gets increasingly bad the higher the tariff rate goes to where it's just not economical to trade. So, you know, we'll have to see. This may not go through. It depends, I think, partly on what happens with the Russia, Ukraine, US, EU talks that are ongoing now. If that comes out to be a good outcome, maybe the financial sanctions and so forth on Russia will come off. The other thing I would say, though, is India, I think, is doing a very good job on looking at policies to kind of offset the tariff impact. So domestic policies, you know, whether it's encouraging the public to buy India products, whether it's the VAT rationalization or ease of doing business, I think there's a lot in the works that will help counter at least the 25% tariff. I think it would be harder to fully counter, as I said, if we get the tariff rate going up to 50%.
Right. How do you model the, let's say, assume 27th is not far, 50% goes into effect, Rob. Morning, Prashant here. How do you model for that? You say, let me change some numbers, and how will investors look at it? I mean, obviously it can't be permanent, right? I mean, it's not, if they're not, it's not negotiated down before 27th, it will be, perhaps takes more time.
Yeah, I mean, it's not easy to model, to be very honest with you, Prashant. I mean, the reality is, if you're looking at the details, it's not completely 50%. There's a lot of exclusions that are involved as well. And as I said, the impact starts to be non-linear as tariffs go higher and higher in terms of, is it economical to still make those exports? So, you know, we're at the moment, we have not modeled into our forecasts an additional 25% yet. And I think that's probably the case for a lot of economists and market participants. I think it's kind of waiting and watching to see what happens. And I think my sense, speaking to investors overseas, not so much in India, is that if that penalty 25% tariff does go into effect on 27 August, I think that is not fully anticipated. And so you will see a negative response to that.
Hi, Rob. Good morning. Good to see you. With Nigel on this side. You know, in times of uncertainty, you look inward. And what kind of measures can the government do, or the regulator or the RBI do, to help the domestic economy? That said, the RBI, well, the monetary stimulus has been quite good. You know, they have eased rates considerably. Do you think there's more in store? There's an outside chance maybe we see another cut in December? Or do you think the RBI is done with what they had to do for 2025?
That's a great question. I would say, you know, the S&P upgrade that India was awarded was very well deserved. And it's a reflection of, I think, years of prudent monetary and fiscal policy that India has achieved. And that puts India in a good position. In a way, it's saved for a rainy day to be able to ease policies in response to this external headwind of tariffs. And we've seen it, and we think there's more to come. So, on the RBI, we do think inflation has come down nicely, and we think that there will be 2 more rate cuts before the end of the year in October and December. And then on the fiscal side, this VAT rationalization, we don't think it's actually going to add that much to the budget deficit. We think it's going to be cleverly crafted where low cost products are going to have moved down in the rungs of VAT rates, but expensive products, luxury items are going to go up. So the net effect in terms of revenue raising won't be such a big hit. We think it may only add maybe 0.1% of GDP to the budget deficit. Maybe it could be even revenue neutral. We'll see. But we do think it will help support consumption, especially lower income households. And we think it's going to be disinflationary, so provide more support for the RBI to cut rates. So overall, we're getting more optimistic on the monetary and fiscal outlook. We think it will provide decent support to what we think is going to be a slowdown in exports.
Well, the policymakers here will really appreciate that view, Robert, because you seem to be saying that it's going to work like magic without causing any excessive damage. 0.1% increase in deficit, not much perhaps. You mentioned that if this additional 25% tariff were to come in on the 27th, it will have an impact. You meant from a market standpoint that it could, provide another leg down maybe for equities over here. You're saying it's not technically in the price.
That's right. It's hard to fully judge, but my sense speaking to investors is they're still not fully convinced it's going to go through, particularly with the stepping up in negotiations between Russia and Ukraine happening now. The probability, the likelihood that maybe there is a good deal and that this 25% tariff will not go in effect. There is a window for that. So, investors are open to that possibility. And I think as a result, are not fully pricing that this will go through. So if it does go through, I think it will be a negative for India.
Right, Rob, of course, fingers crossed, we'll see what happens, but would love to have you back after the 27th, one way or the other, right? There will be
love to be back.
Stuff to talk about. Thank you very much for joining us here today. Let me just quickly run you through what's lined up here on the program. So 8:35, Ashok Leyland management will be speaking with us on the first quarter numbers. Stock was up very sharply. Numbers came through on last Thursday. 9 o'clock, we'll have Gaurav Malhotra of Axis Capital. Is there a implicit tariff increase which has happened for the industry? We'll tell you why and the implications there. Rajiv Batra of JP Morgan at 9:20 is a market master today. 9:30, you'll hear from the management of JK Cements, talk about demand trends, GST reforms. Rajagopal Sastry of Endurance Technologies will be speaking with us at 9:40 to talk about the quarter gone by. 9:50, Yanesh Chaudhary of Vikram Solar as their 2,100 crore, near 2,100 crore IPO opens today. It's the economy with Lata in conversation with Samiran Chakrabarti of Citi and Soumyakanti Ghosh of State Bank of India. That's coming up at 10:15. All right, time for a break. We are back on the other side. Top stocks to watch for the day with our research team.
Welcome back. Well, lots of stocks on our radar as well. Overall cues, as we've been telling you, across Asia are thin. US futures are flat right now. And it's all eyes on the eventual outcome of all of those meetings that were going on in the White House till late hours. That's the implied open, just about 8 points lower. Plenty of stocks on the radar. As always, we have Sudarshan joining in with the most interesting ones. Good morning, Sud.
Morning, Surabhi. So earnings season is over, so I have taken stocks in news as part of SIN for today's trade. So first one in that list is Vedanta, which is going to consider second interim dividend for FY26, and that board meets on August of 21, and record date for interim dividend will be August 27. Earlier to this, company had announced first interim dividend of rupees 7 per share on June 18. That was worth rupees 2,737 crore. Next is Vodafone Idea. After earnings, company had held earnings call yesterday in which it has commented about funding as well as AGR dues. Company is saying that it has been in engagement with government related to AGR dues, and it has requested government to complete the resolve AGR issue before March of 2026. Regarding funding, company say it has been in engagement with banks, but it's also looking at other sources of funding, and that funding amount can be less than rupees 25,000 crore that company had earlier announced. Next is Hindustan Zinc. Company is going to set up 10 MTPA tailings reprocessing plant at Bhilwara in Rajasthan. That will be done with an investment of more than rupees 3,800 crore. And this is part of company's plan to increase, double its production capacity. GMR Airports, company's board will meet on August 21 to consider fundraising of more than rupees 5,000 crore. And that can be done in one or more tranches via QIP or other means. Keep an eye on all these cotton importers like Indocount, Vardhman Textiles and other companies, because government has announced that it has temporarily exempt cotton imports from customs duty. It has removed 11% customs duty till September 30th. Last one is Lodha Developers. Rajendra Lodha has resigned as director of the company effective August 17. But the important part is company is saying that certain matters related to Rajendra Lodha to his conduct are under review by company's ethics committee. That's the reason stock will be in focus.
Okay, all right. Thanks a lot for that, Sudarshan, for giving us that list of stocks. Well, Reema joining in to tell us about Reliance Jio, because it's indirectly hiked tariffs by around 20%. Reema?
Indeed. So what Jio has done is discontinued its entry-level plan, thereby effectively raising the tariffs. So earlier, the entry-level plan was 209 rupees for 22 days or 249 for 28 days. For the sake of simplicity, let's take the 249 rupee plan. Okay, now that 249 plan for 28 days has now become 299 rupees for 28 days, effectively increasing the price by 20%. Now it's at par with the rest of the industry. Even Bharti and Vodafone Idea's entry-level plan for prepaid users is at 299 rupees. Now Jio, though, continues to offer more value. Their 299 plan, the new one, gives you 1.5 GB of data per day, while players like Bharti and Vodafone Idea offer you 1 GB per day. So the chance of down trading, which basically means that I'm okay with less data, I will go to a lower price plan, that does not exist. Now, what is the impact? IFL says that 249 is not that popular, so according to them, the impact on Jio's revenues, mobile revenues, could be less than 2%. Axis believes the impact could be 4 to 5%. But the big question is, will Bharti and Vodafone Idea follow suit with a tariff increase? Back to you.
By the way, Reema, another subscription plan which I heard was ChatGPT's plan, right? Did you see that? ChatGPT Go in India at 399 rupees. I don't know if Reema's there.
Oh, sorry, I missed that news. I was away this weekend.
No, welcome back. I mean, so that's the other one, right? 300 and, I mean, I'll have to see what this is about. 300 per month. I think it was $20, right? ChatGPT globally, the plan was. Have they changed it? I'm not really sure. But that's the other big one, which consumes a lot of data. My point was, I mean, it consumes a lot more data. I mean, all these large language models.
Yeah.
And as adoption there increases, I mean, the demand for data anyway sort of gets a big lift. I mean, that's what we've seen globally. Let's talk about some brokerage views as well, right? Sudarshan is back with us, and we've got views on Reliance and JSW Infra. So, good morning.
Morning, Prashant. So besides tariff hike that Rima has talked about, there is another positive trigger for Reliance Industries, and the city has come out with a note. First, it has maintained buy call and targeted 16 and 90 per share. City's note is based on SEBI's proposal related to large IPO. So City is saying that SEBI has proposed to modify minimum public offer requirements for large IPOs, and key proposal that SEBI has talked about can have meaningful positive implications for Jio's potential IPO that City believes. It says, SEBI's proposal says for issuers with a post-IPO market cap of more than ₹5 lakh crore, for which minimum public offer size will be reduced. So, and it would be reduced to 2.5% from 5%. So why it is positive? So as per City, a 5% offer will be $6 billion plus of share supply. That will be fairly large for market to absorb. But if it's reduced to 2.5%, that offer will be of $3 billion plus, which can reduce the supply overhang, and basically it would be positive for Jio's IPO whenever the company comes out with. Another brokerage note is on JSW Infra that Jefferies has written. It has a buy call and target is 375 per share. It has mentioned 3 catalysts. First one is 31% capacity addition via commissioning of underdevelopment ports or terminals. Second is potential project wins with an uptick of public-private partnership project awards for government-owned major ports. Also, capacity increase that company is planning to increase to 400 million ton by FY30. As per Jefferies, it's intact. And apart from this, logistics, Jefferies believes, is another sweetener for JSW Infra. That's the reason it's positive on the stock.
Okay, all right. Got it, Sudarshan. Thanks very much for that. So a lot of broker notes, and we'll keep them on our radar as well. Let's do a quick roundup of all the commodity market action. We have Manisha joining in with the latest. Manisha, good morning.
Morning, Zilbi. Thank you for that. I'll start with the crude oil prices, and after, even as we are down 9 to 10% for the month of August, but the crude oil prices overnight saw a percentage point of gains. I mean, there's just so much to watch out for when it comes to the international markets. After the US and Russia presidents meeting, it has been US and Ukraine and European leaders meeting as well. And there are various kind of statements coming in right now. Well, to begin with, there is an expectation now that US, Russia and Ukraine, a trilateral meeting could be happening, and we would see a result out of that. Having said that, the markets already believe that if there is actually a resolve here, then you could be looking at the crude oil prices going sub 60, because the Chinese data has been on the weaker side. OPEC Plus has been increasing production. So there's less reason for the crude oil prices to increase unless you see more sanctions on Russia and secondary sanctions on buyers continue. So it still is a wait and watch when it comes to the crude prices. Having said that, the weak China data clearly has had an impact on the metal prices, where you are looking at copper, aluminum, steel, iron ore, all of these prices trading declining on a declining mode for a second straight day. All these markets clearly now are looking out for the Jackson Hole Symposium meeting and the forward testimony from there. That would give us further direction.
Okay, all right, Manisha, thanks a lot for that. Well, on that note, though, we'll slip into a short break. On the other side, we have Mayuresh Joshi, who's joining in to help us out with some fundamental stock talk. Welcome back. Well, let's take a quick check on the Asian markets. The GIFT Nifty was last suggesting that we're likely to open up with a bit of a downtick, maybe a 50-point downtick. That's something that we were trying to work with. No, around 20-point downtick, so not too bad. And I think Asia was a bit of a mixed bag to kickstart trade. So I think we should get the Asian markets as well up for you. The Hang Seng, if I'm not mistaken, that was trading with some mild green. So mixed start is what we're seeing on the Asian markets. Hang Seng flat as can be. Taiwanese index down 0.4%. But I think we can hop across to Parikshit, who joined to tell us about China assuring to address three key concerns of their pact with India. Parikshit joins us to tell us more. Parikshit?
Right. We've seen an important meeting that has taken place between External Affairs Minister S. Jaishankar and Chinese Foreign Minister Wang Yi, who is in India. Yesterday, the External Affairs Minister had made a point that both countries must move forward with their bilateral relationship after having seen a difficult period in the relationship. And he had spoken about three key concerns over there. Now, we hear from sources that China has actually promised and assured India that they will be addressing these key concerns. What are them? One, of course, is the rare earth magnet crisis. We have been seeing how China has brought in a licensing system for export of rare earth magnets to all countries. And this has been in place since April. So essentially, we've got no imports of Chinese rare earth magnets since April this year, while other countries are getting it on a case-by-case basis. Then you have fertilizers. We have been seeing how specialty fertilizers is an area where China has been holding back exports to India for many months now. So China has assured India that they will address concerns and ease up supply of these two products. And then tunnel boring machines. We're a big importer of tunnel boring machines from China, and these imports had also been held up. Now, China holds supply chains of certain very critical components where India does not have a manufacturing base, and we are reliant on imports. So this meeting was very, very important for our industry. And in a way, it could lead to a breakthrough and opening up of imports of these three items in the months to come. Let's not forget, he will be meeting NSA Global this afternoon, and later in the evening at 5:30 p.m., Wang Yi calls on the Prime Minister. And all of this is leading up to the SCO meeting in China, where Prime Minister Modi and Xi Jinping will come face to face.
No, absolutely, Parikshit. So fertilizers, rare earth magnets, and tunnel boring machines, right? I mean, those three areas. Parikshit, briefly, what do the Chinese want? Do we know?
China has overall been asking us to ease the regulatory environment for them. Over the last few years, especially since the Galwan clashes, we have seen this demand where China has sought stable relations. They have said that there should not be any kind of economic coercion of their companies. Currently, investments in China are scrutinized by the Indian government. They are not through the automatic route. You have to get an approval from the government. There have been certain criminal cases against Chinese companies as well. So there is this atmosphere of distrust. So China wants all that to be eased up. For example, you've got Press Note 3, which says that all investments have to be approved by the government. So China wants us to do away with all of that and give them a level playing field, just the way they treat other foreign companies from US or Europe for that matter.
Right, access to the market, basically. That's the big one, right? What Parikshit essentially is referring to.
Absolutely, Parikshit, thanks so much for that. I was just mentioning that I guess most might have noticed the Americans are also taking note, right? Mr. Peter Navarro's comment yesterday, first of all, slamming India for continuing to buy Russian oil and financing, quote unquote, the war. And saying now India is closing after China. So all of this is being watched very, very carefully, very quick shifts in diplomacy.
Let's actually quickly look at the rallying auto stocks as well, right? I mean, the back of likely GST rejig. Our colleague Sudarshan caught up with Shenu Agarwal, Managing Director and CEO at Ashok Leyland, to discuss the impact of GST rationalization on the first quarter performance. Listen in to excerpts out of that conversation.
I think if the GST rate cut happens, the CV industry would probably fall into the 18% category, which is a 10% reduction from the current rate of 28%. We really think that this would be a landmark reform in many different ways. First, it's overall going to spur a lot of economy, especially consumption, and therefore it would be better for the CV industry because there would be more freight to carry. And secondly, it will have a direct impact in terms of affordability of the trucks and buses. The prices will go down. Also, we are hearing, other than GST, that there is some action that RBI is contemplating to increase the credit supply and credit access for the automobile sector. I think if these both can happen simultaneously, of course, we have to wait to get a confirmation and more details about this. I think that would be really a boon for the CV industry. As we know that, we have been waiting for a trigger like this because we know that the aging of the fleet is at its all-time high. So maybe this can come as a big trigger for onset of a positive cycle.
So if both these things happen, RBI action that you have talked about and GST rate cut, can we see an increase in the outlook, CV outlook, industry outlook for FY26 that currently you have for mid-single digit growth outlook that you have for the industry?
I think so. I think it will have an immediate impact, and it will have a substantial impact as well. And therefore, the outlook of the CV industry for this year and the next year should improve from here on if it happens.
Great. Now coming to Q1 earnings. So you have literally outperformed the industry, especially on the volume front. Your profit too has seen an expansion of 13%. Revenue has grown by 2%. I remember when we were chatting after Q4 earnings, you had told me that Q1 might be slightly muted, but you have done better, especially on the margin front. You have done 11.7%, and that is almost 50 basis points expansion that what you have reported overall for FY25. So I know that medium-term guidance for margin that you have is of 15% or a little more than that. What is the margin range that you would be working for this fiscal, or if I can say FY26 and FY27?
Listen, we are very happy with the Q1 results. Of course, this was seemingly a tougher quarter with a lot of pressure from the commodity side. Also, the market last year, as you would recall, Q1 had a growth of about 5% in MHCV. And therefore, we were a little worried about how the market itself would perform. But I think despite all these uncertainties and the geopolitical situations, the commodity situation, I think we have done a good job in Q1. We have been able to raise our EBITDA by 50 basis points. And also simultaneously, we have increased our market share both in MHCV and in LCV segments. So it's a satisfying quarter. Going ahead, our mantra remains the same, that we want to gun for profitable growth. There is nothing like if we can achieve both the increase in market share and profitability, because I think these will, in our case at least, these will come from different levers. But from a market side, the industry side, we are also optimistic because Q2 last year was a very low base, because as you would recall, the CV industry grew by about 14 or 15% last year in Q2. And therefore, in Q2, at least we are operating on a low base. So I think there are good times to come for the industry. And of course, we'll try to do better than the industry.
So what is the current market share for M&HCV and LCV? And if you can talk about what was the gain in the market share that you have seen in Q1?
Yeah, so Q1 gain in market share was 1.3% in MHCV. Actually, in the truck segment, we have gained even more, which is to the level of 1.8%. We had a little bit of a market share loss in the buses, but that is not really concerning because we know the specific reasons for that. There has been a sudden shift in the demand of the fully built buses, and therefore, our whole capacity was completely choked as far as buses are concerned. We are ramping up our capacity on the buses in short term and also in the medium and long run. So we will cover that loss in the buses, but we are very happy that in the MHCV truck business, we have gained 1.8% market share. The story is similar in the LCV segment. LCV, we are now reporting 0 to 7.5 ton segment because we have talked in the recent past that we want to focus on the entire LCV segment from 0 to 7.5 ton and no more just 2 to 3.5 ton or 2 to 4 ton. So that change has to come in internally as a measure also. But in overall LCV 0 to 7.5 ton, we have also gained 1.2% market share.
This export business that you continue to do well, even in Q1, you have seen a growth of 29% despite this geopolitical tensions and all these tariff tantrums. How do you see this 29% growth that what kind of growth range that you'd be looking for FY26? Do you think that you'll be able to maintain this 29 to 30% range?
Listen, our exports target for the year, for the whole year, is roughly growing it by 20 to 25% in terms of volumes. I think with Q1 growing at 29%, that really helps us in achieving that overall year target. We are not still upping our target. We still want to gun for that 20 to 25% growth for the year. But yes, Q1 was good, and therefore it emboldens our ambition in exports to some extent.
All right. Well, Mayuresh Joshi from MarketSmith India joins in on the show. Hi, Mayuresh. Good morning. Good to see you in. Mayuresh, what do you make of the auto pack? Yesterday you had a big run on a lot of these names. You heard the management of Ashok Leyland. What's the view on this name or Maruti? Both of them were the standout gainers yesterday.
Morning, Nigel. Always a pleasure to be on your show. Two things. One, I think from a sector perspective, I think we remain optimistic on select names. And therefore, names like a TVS Motor, Hyundai, which I've discussed on your show numerous times, is something that we continue holding in our portfolios. Obviously, with the announcements that have been done, the expectation that is largely getting built in now is that there will be some increased activity as far as volumes are concerned. And therefore, I think a stock like Maruti, which probably has a lot more in its product suite, right, from entry-level vehicles to the new vehicles that they are now developing, both in the hybrid and the SUV category, at very attractive price point amidst competition. And let's not forget the sales network, the after-sales network, the spare parts, which are very, very reasonable as well, becomes a huge value addition. So yes, I think that probably becomes something to be watched out for. But in my opinion, again, I think a few auto ancillary stocks might also start doing well. I think they have had some reaction yesterday. You did see some element of action happening within the entire pack. But a stock like Minda, as an example, is something that we've kept on our radar. For the simple reason that a large part of this business comes domestically, 89%, 11% from global operations, again, largely diversified between Europe and North America as well, which probably hedges the risk in terms of higher tariffs. The EBITDA margin performance was reasonable because of higher input costs. Obviously, the margin hit was there on both autos and auto ancillary at the pack. But generally, I think with better orders expected to come through with the European FTA, the UK FTA as well, the expectation largely is that the kind of products that Minda has, right from switches, acoustics, to seats, I think it services a large part of addressable solutions, which is very, very evident in terms of the entire EV transition that they're probably doing. And the content value per kit from ICE to EV, which can be 3 times from 11,000 odd to 35,000 rupees, which can be a huge value addition going forward. That equity is also not too high. And therefore, in my sense, auto selectively should continue doing well. We continue holding Hyundai, TVS Motor, Maruti remains on our watch list, and so does Minda.
Okay, so that's as far as some of these auto stocks are concerned. Mayuresh, hi, good morning, good to have you on the show today. What about consumer durables, ACs, coolers, even the B2B suppliers? All the stocks were rallying yesterday. Would you rush in? Because otherwise they've been dealing with sluggish demand, untimely rains, and it's been a complete washout Q1 for all of these companies. Would you be a buyer?
Morning, Surabhi. I think the sentimental reaction has come through. Now, the actual numbers, how do they play out in terms of demand trends, is something to be seen as we head into the next few quarters. I think the hope here is that demand should come back quite significantly as we head into the festive season. But my own sense is that whatever we've seen in the past, and this was what we were analyzing over the last few years as well, once the consumption demand starts coming back, I think it's more bottom-up as we see it. So I think it will start from lower-priced items to the higher-priced items as we've seen. In the higher-priced items, with the exception of premium autos and a select few items which have still not got affected because of slowing urban or semi-urban demand, I think the entire pack will move in slowly. So I think the volumes will come, but they will come with a lag effect. It's not that Q3, Q4, you would see sudden spurt in volumes coming through. And therefore, our own sense is that the lower end of the value chain, as far as consumption is concerned, select FMCG stocks, select footwear stocks as an example, certain apparel stroke grocery players, I think they should see the first element of uptick in terms of consumption demand and in terms of volumes, same store growth as we call it, or otherwise revenue trends which should improve. Consumer durables and specifically white goods should see demand coming back, but it should be slow and steady. So we are not going out there and buying these stocks as we speak. I think we're better off with FMCG, select apparel names, select footwear names, which look better off from a risk reward perspective.
You know, what we'll do is take a quick commercial break here. We'll come back with some technical calls. Sudarshan Sukhani and Mitesh Thakkar are going to be with us for that. And we'll sort of get you those trades in just a bit from now. Stay with us.
Welcome back. The color across Asian markets is mixed. A little bit of red, a little bit of green, but the color across our windows in Mumbai is entirely grey. It's been absolutely pouring for the last 24 hours and very, very heavy spell of rain since last night. Waterlogging has been reported in major parts of the city. Schools and colleges are shut for the day. So let's take stock of the situation. Mahesh Palawat, VP Meteorology and Climate Change at SkyMet, is with us. Mahesh, thank you so much for joining in. So what is the forecast next couple of hours? And how is it likely to be for Mumbai?
See, now we think that moderate intensity rain will continue throughout the day with short breaks in between. And until 5:30 hours morning, there was 185 millimeter rain over Santa Cruz and many other parts of Mumbai and suburbs, they have also recorded around in the tune of say 200 millimeter rain during last 21 hours. And these heavy showers are expected to continue intermittently until tomorrow, and thereafter there may be some reduction in intensity because the cyclonic circulation which is persisting over Northeast Arabian Sea will move away, and the depression which is over Odisha, South Odisha, it will also move up to South Chhattisgarh, but its impact will be reduced over particularly over coastal areas of Maharashtra. However, South Gujarat may continue to get heavy to very heavy showers.
So reduction in intensity would be day after tomorrow, you're saying?
Yeah, day after tomorrow. And by tomorrow evening also, we think that intensity will go down slightly. But moderate showers with isolated intense spells may continue. But overall intensity may reduce by tomorrow evening. And day after tomorrow, there will be further reduction with short breaks in between. Light to moderate rain is anticipated during that time.
Okay, this would be, you said that up till 5 a.m. this morning, there was 185 mm of rain recorded at Santa Cruz. This would be among probably the wettest spells of the season for the city, MMR?
But on 16th also, 16th night, there was 245 millimeter rain in 24 hours. But main intensity was between 11:30 night to 2:30 morning. During this 3 hours, I think rainfall was around 134 millimeter. That was the heaviest spell in short duration. And this is one of the second, you can say this is the second heaviest spell. And usually during month of July, 2 to 3 heavy spells are most probable over these areas due to the formation of a low pressure area over Bay of Bengal or some disturbance over Northeast Arabian Sea. But this year we have not seen very inclement weather like this, which is presently we are witnessing now.
Yeah, I mean, in a way, I mean, hopefully everyone is safe, and in a way it's perhaps good because July seemed to be a bit drier than usual, at least for the Mumbai region. Yeah. So very quickly, last 30 seconds, sir. Overall, monsoon so far in terms of just the quantum of rainfall and its geographical spread, how would you rate it?
It is 101% as of now, and although statistically it is showing that Rajasthan has recorded very good rain, but rainfall was very heavy until first half of July. Thereafter, weather is almost dry. So Rajasthan is farmers of Rajasthan are eagerly waiting for rain. So we think that by 24-25 rain activities.
I think we lost the line there, right? I mean, can you guys hear Mr. Palawat? No, I don't think we can. I think we lost the line there. Maybe rains, right? Mr. Palawat, if you can hear me, sir, thank you for joining us with that quick perspective. I sometimes wonder with the amount of rain that you see around you, right? I mean, water harvesting should be done on war footing, right? In a state like, especially in a state like Maharashtra.
Yeah.
Where you're talking about rain for 3 months, and then there is, and then you're dependent essentially on what the rain that you got. So, but that's another story. But I think, I mean, water, of course, is going to be one of the big issues going forward beyond the here and now. So, for a later time. Let's just get back to the market, right? I mean, SPML Infra was a stock that Nimesh put up on his D Street chatter list. I think this was last week. Yesterday, he said that there is the order perhaps which is coming, and I think that order has come through. It's a small name. Stocks, of course, blasted higher. Nimesh, congratulations.
Thanks, Prashant. So, yes, they've backed the order. It's an official announcement that they've backed an order worth 1,070 crores. And this is for water supply for the Indore government. So, that's the order for. Now, just to put into context, as of 31st of March, the company's order book was close to 3,000 crores. And they had said that they were L1 for another 2,500 crores. So maybe all these orders are part of the L1 that they already mentioned in the March ended quarter. So that's the perspective in terms of the order size. Now about the company, the stock is now currently trading at close to 40 times on current PE. In the last 6 months, the stock has rallied 70%. So there has been a big up move in the stock price. But in Q1, the sales declined for the 6th consecutive quarter. And for the last 1 year, the company has been reporting operating margins of between 5 to 6%. So that's the operating margins and the numbers. But a big order win for SPML Infra of 1,000 odd crores. And as I said, they had announced that they were L1 for close to 2,500 crores. So maybe all this is part of it. But you might see a bit of further reaction because they've backed a large order win today.
Nimish, the other one is, thanks for that, that's SPML. The other one is Adani Ports that you put out yesterday, right? I mean, the name came through?
Not really, Prashant. So, while there was a large block, 1.5 crore shares, but it got split between the two exchanges, BSE and NSE. And hence, maybe the reporting has not come. The volume shows that there was a high delivery marking, and that was because of the large block of 1.5 crore, where I understand one of the largest FI was a buyer in that block deal yesterday.
Okay. I mean, the whisper name is Fidelity. Nimesh, thanks very much for that. So that is Adani Ports for you as well. So D-Street chatter coming up a little later in the day. We'll take a quick commercial break here. We're going to come back with a pre-open session. We'll also have the Telecom story for you. Gaurav Malhotra of Access Capital to talk about, what seems like tariffs moving up. Not a hike, but tariffs, the floor seems to be moving a little higher. I guess that's the way to put it. Conversation with Gaurav on the other side. Okay, welcome back. There's just market pre-open coming up for you in just a bit from now, right? We'll look at what's rates are in a bit. But let's just get you the technical trading ideas out of the way. Sudarshan Sukhani and Mitesh Thakkar are with us with exactly that. Gentlemen, good morning. Great to have both of you here. Ended higher, not quite at the highs of the day, but strong close. Mitesh, flattish start this morning. That's the implied open. What is the trade? What should be trailing supports, and what should one do? Indices first.
Morning, Krishna. I think on Wednesday we were talking about the fact that after a long time, the intraday indicators are now looking up on the hourly to hourly charts, and we should have a some kind of a relief rally. I think that's happened. The first targets were around 24,950, 25,000. I think that zone was tested. We just ended below that. Now, I think with the way the price action happened on Monday, 24,800 on the Nifty is the big support area. Any declines closer to that would be an aggressive buying opportunity. And on the upside, the next target would be in the zone of 25,260 to about 25,320.
Sudarshan, good morning. What about you? How would you approach indices first?
Yeah, good morning. Well, the idea was to go and buy a dip yesterday. If you have a long position, I would suggest closing it. The chances are that today will be a choppy day. A narrow range and choppy day doesn't give any rewards to anyone. So avoid the Nifty and the other indices for today. Focus on stocks.
Yeah, all right, let's get to stocks then, Sudarshan. What's on your radar?
Well, it's an all buy list. 361 is a buy with a stop under 1030. HDFC Bank is a buying opportunity. It's also a positional trade with a stop under 1960. ACC is a buy. I'm hoping the correction is coming to an end with a stop under 1800. And Oro Pharma is also a buying opportunity with a stop under 1050.
Okay, all right, gentlemen, got that. Let me come to Mitesh as well. Mitesh, morning. What about you? Stock ideas for the day?
I have more of buy calls. HDFC AMC is a buy with a stop at 56.80 for targets of 5800. Colgate is a buy with a stop below 2209 for targets of 2260. A sell on REC, it's a conditional sell. So if it breaks 375, take a short position. Look for targets of around 362 and keep a stop at 381. And a buy on AB Capital with a stop at about 277 for targets of 295.
Okay. Got that. Thanks very much, Mitesh and Sudarshan, for those specific trades. We'll chat again at 9:10 on some of these. We've got the rupee, which is opening up at about 87.25, 87.35 was the close yesterday. And there is a 10 paisa lift, which is coming through on the dollar rupee rate. Now, SEBI is proposed to ease IPO norms for large companies in terms of the requirement with regards to how much they need to dilute above a certain threshold, etc. And this has got implications for specific companies, as some brokerages are highlighting. Let's get the proposal first, and then we'll get to the impact as well. Hormuz has read up on this, and he's got details. Hormuz, good morning.
Morning, Prashant. And so a slew of measures that SEBI has highlighted with regards to these minimum public offers for large-scale IPOs. And the rationale they highlight for this is that such large supplies could be difficult to absorb for the Indian markets, and hence they are coming out with this proposal. But a striking feature of that proposal is one of those which says that issuers with a post-IPO market cap of over 5 lakh crore rupees will have their minimum public offer size could be reduced to 2.5% from the current proposal of 5%, from the current threshold of 5%. And although in these recommendations they have retained this clause that the 35% of the IPO size will be reserved for retail investors. Now, such a move could have implications for an IPO as big as Reliance Jio, a potential IPO whenever it happens. There's Citi is highlighting in its note that this could have meaningful positive implications for Jio's IPO. They are valuing Jio platforms at an enterprise value of $135 billion in their sum of total parts. And they mention that in case if this 5% threshold was to remain, this would result in an equity supply of over $6 billion whenever Jio's IPO happens, which could be too large for the Indian market to absorb, particularly for the fact that 35% of those would be reserved for retail investors. But in case it is revised lower to 2.5%, it would result in a supply of $3 billion. And this would not only remove a supply overhang, but also limit the holding company discount for Reliance Industries during the IPO. So these are some of the positive implications that Citi is highlighting in its note, expecting some positive implications for a potential Jio IPO going forward.
Okay, all right, got it. Hormuz, interesting. Thanks very much for keeping that on our radar as well. Let's discuss this development and, of course, the fact that Jio has done away with its lowest priced packs and what that really means. We have Gaurav Malhotra, Executive Director at Axis Capital, joining in. Jio definitely in the headlines this morning. Gaurav, thanks so much for being with us. Okay, so what do I discuss first? Let's start with the tariffs first, because that's already happened. The IPO, of course, everyone's waiting for. What are the implications? Because Rima was telling us that by doing away with this 249, I think was the pack, and taking it up to 299, it's effectively a 20% tariff hike. What are the implications?
Yeah, so see, there are like 2-3 things to sort of note in this, right? One is that this is a targeted implied hike, right? Versus the wholesale hikes which we have been seeing in the past 3 hikes. So this is just taking the the base plan and sort of eliminating it, and sort of getting people to upgrade to the next tiering of the plan. And that leads to that 17% hike from that perspective. At the blended level, the benefit from an ARPU perspective is obviously going to be much smaller. So it could be, say, 3, 4, 5%. But I think so the more important aspect is that, look, tariff hikes have been built in all analyst numbers, right? Over the next, say, 3-4 years, like we are taking an assumption of, say, 7 to 8% ARPU CAGR for Jio. So the tariff hike per se is not the sort of the key sort of aspect to look at here. The aspect is that, look, rather than making tariff an event, which is what it has been till now, you are sort of doing a more sort of structured hike. You're essentially trying to sort of fix the current issues, right? What are the current issues? That you're giving a lot of data at very low levels, so people are not sort of really upgrading as quickly. The other thing to note is that, look, globally, this is the way operators take up tariffs, right? So they will discontinue a plan. They will sort of give you a new revised offer, which will be at some premium to your old plan, but with that they will give you some additional sort of data. So this is how sort of globally the large telcos sort of do increase their tariffs. And this is, if this were to start, this is just the first point. So we'll have to see whether others follow, whether this is a more sort of ongoing phenomena. But at least it's a good start the way we are thinking.
But Gaurav, again, coming to the implication part of it, there were some notes that were suggesting that this plan, this 249 plan, I think was contributing by a little less than 10% to overall revenues for Jio. So will it be meaningful? And should we expect the competitors to also do something of the same? So again, I mean, ARPU impact, revenue impact, any rough numbers or ranges we can work with?
Yeah, so from our perspective, we have assumed that will have some impact of around, say, 4%. But like I said, the more important aspect is that, rather than, everyone waiting every 2 years for like some wholesale tariff hikes, if the hikes can be more structured, more targeted, that actually is beneficial to everyone. It benefits the operators, it benefits the users also. So we are actually focusing more from that perspective rather than, whether it's a 2% or a 4% kind of a benefit at this particular hike. And the second point is whether the other operators will follow. Look, Bharti has been saying this quite regularly, that they do feel that, look, the tariffs need to be structured better, right? So they are quite open about, fixing that. And obviously Vodafone has its own challenges. So the likelihood of the other operators, following suit should be a reasonable probability in our view.
Okay, Gaurav, I have a slightly longer run question. Morning, Prashant here. As the people start using all these large language models more and more, right? I believe power, yes. I mean, I think compared to a simple web browsing the web, using some of these requires far more. Data usage is higher. I don't have the numbers. But I do believe that is true. Can you confirm that? And does that provide a broader lift to everybody in terms of data consumption if this really picks up in a big way?
See, to be honest, I don't have the exact numbers with me, but let me give you the context, right? Today, Bharti Mobile, on an average, per day data consumption is around 0.9 GB a day, right? Which on its large base means that there are enough and more people who are like at 1.5, 2 GB, even more consumers of data. And this data consumption is an ongoing structural trend, right? So one is that your LLMs, but look at anything, right? Every app progressively only gets heavier. The videos get of better quality. So data consumption keeps increasing on an ongoing basis. At 8 GB a day, 8 GB a month, people used to say that India is on the higher side of global, so how much data consumption can increase? We are now closely almost touching like 30 GB. And this is a structural trend. So obviously all your LLMs and all this AI, etc., will obviously help, but everything is going to be helping data consumption, things which we would not even see it, right? So like I said, apps, video quality, games, everything is getting a better quality progressively.
I mean, if there's one thing we're using more of and we will use more of is data. And that is absolutely right. Thanks very much, Gaurav. Good chat and good perspective overall on an important sector. We don't spend too much time talking about that sector. Few listed companies, I guess that is why. But stocks have done very well. Bharti and others as well. Just a quick look at the stocks, right, which we've covered through the course of the morning so far and where they've all landed as far as the end of the pre-open session is concerned. So Vedanta is up about 1%. Hindustan Zinc is up on your screen about 1.5% there. GMR Airports is raising money, right? I mean, 1% there. There's Lodha Developers, which should put out 0.6%. Nothing very large across the board. By this time yesterday, you had about 10 stocks on the back of GST-related news, which were up between 5 and 10%. There's Indocount, Vardhaman Textiles, which are also in focus, where with regards to cotton imports, some of the duties have been taken away. So a slight lift as far as those sectors are concerned at this point in time. Let's just get you the 9-10 calls. Sudarshan is with us. Sudarshan, what do you have?
Well, I have 361. Consider buying that with a stop under 1,030.
Mitesh, what about you?
Well, you go with the buy on Colgate for targets of 22.60.
Okay, Colgate and 361 are the two specific names which are coming up on the radar. Mitesh, since I have you, just one more name. Maruti saw a big move yesterday, and I was looking at the F&O stats, big increase in open interest as well. Technically, how is this one looking?
I think Maruti looks very strong. One, it made a fresh. There's a big gap. The F&O additions are all good. The only problem is that the way the stock price moved yesterday, there's always a chance of a pullback. Give me one and I'll be very happy to buy it around 13,800, 13,850 and add more on declines. I think the stock now will be staying about 13,400, 300 zones, and therefore any declines will be welcome buying opportunities.
Okay, all right. Mitesh, thank you very much for that. Sudarshan, thank you very much. 3 minutes to go for market open. Let's just talk about IDFC First Bank now. Gaurav is here to tell us why. Gaurav, morning.
Well, yes, IDFC First Bank is going to be in focus because now Investec continues to be bullish on the stock with a target price of 85 rupees per share. What they're saying is that they recently met with the management, where management reiterated their guidance for ROAs somewhere in the range of 0.9 to 1% by the end of FY26 versus what it is right now at 0.5%. Now remember, management is saying that this ROA pull will be because of three factors. First is operating leverage, which they believe operating expenses will increase in the range of 11 to 12%, while the loan book growth is expected to increase by 20%. Second lever will be credit cost. Remember, they have given a guidance of 2 to 2.05% of the credit cost versus what it is right now at 2.8% in Q1 FY26. So credit cost is also going to be lower. And third is the normalization of NIMs. Now all these factors will pull the ROAs towards 0.9 to 1% as per management. Even with this, Investec is also being bullish. What they're saying is that IDFC First Bank remains one of their top mid-cap picks, and they also believe that operating leverage and other rooms like more room to cut SAR rates, that will actually help the bank to get ROAs to 1%, and that is the reason they have given a target price of 85 rupees, which leaves further upside of around 23% from here. So definitely watching out of this stock today.
Okay, all right. Thanks very much for that. Maybe we just run through this about a minute to go, actually, not very much to go for market open. But autos, I think we did pick out and put out. Maybe we just look at names like, I mean, the durable names, right? PG Electroplast. I don't know if you have time to pull those up. Amber, Blue Star, IFB, Voltas, Havells, Whirlpool. Apart from autos, this was the other pack, right? PG is up 1.5%. Amber is slightly higher. Maybe Blue Star comes up. IFB, Voltas, Havells, Whirlpool, etc. the other ones, which perhaps we're able to pull up right now. And of course, there's apparel and footwear and cement and so much was happening, right? But all, of course, related to that one theme, which is hopes around GST rationalization. Today, of course, much quieter after yesterday's. big moves that we saw across sectors. What do we have? First rates coming up. It is absolutely flat. Nothing very much to go on with, but Nifty starting with 20 odd points, 24,900. Sensex is up 120 points, 81,350. Small cap index is, wow, it's up about 1.33%. Is that the actual rate? No, it's not. It's just changing now. 17,799. 17,800. Those are the first rates. Again, absolutely flat. And I think the small cap index will come up on your screen. The mid cap index, beg your pardon, which is also 0.15. So nothing at all. Nifty heat map should give you a sense of where most stocks are opening up on the index. And then we will move on with individual names. More down than up at this point in time. RIL is higher on one end. On the other end, you've got HCL Tech. Surabhi.
Okay. Let's take a look at what's going on. Actually, if it was not for Reliance, then the market could have seen a bit of red as well. Reliance with the news on Jio, the changes in their packs, and obviously the SEBI moves as well, which perhaps the market would want to believe it takes it a step closer towards that much anticipated Jio listing, 2% up on Reliance Industries. It has taken Bharti up along with it as well, 1% higher on Bharti. Let me just check Vodafone Idea. There was some commentary from Vodafone Idea as well on some AGR relief and what the next steps could be from the government's perspective. 2% up on Vodafone Idea. So Telecom is looking good this morning. NTPC 1% higher. There's some gain on Adani Ports, about 1% or so. There's Hero Moto that's still continuing its good form from yesterday, 0.5% up. And then it starts getting really quiet. Tata Consumer, Trent, Titan, and Lever. Just some consumer names which are seeing a little bit of green, but not too much. On the downside, there is Axis Bank, Shriram Finance, Bajaj Finserv, Bajaj Finance, SBI Life. So basically, financials are not that hot this morning. And M&M is seeing some profit taking after its big run as well. 0.5% lower on Mahindra and Mahindra, but it's really Telecom and Reliance leading the charge today.
Well, that's right, Shirbi. And a couple of other stocks, Vedanta, they're going to be meeting going to be having a board meet to pay out dividend. The street likes that. That's the one that, in fact, is in focus. And that NCLT hearing as well is sometime during this week. So that's why that stock is up 1.5%. Reliance Industries, that's the big boy in there. Yes, it lost its way a little bit. Now it's gradually moving up. And that's the big gainer actually this morning. Bulk of the gains that we're seeing out of those 40 points are on account of Reliance Industries. But from the broader markets, stocks are doing a thing of their own. HLE Glascoat, they have announced acquisition of assets of Omeris, and the street likes it. That's one of the top volume gainers from the broader market. So HLE Glascoat should come up for you on the screen. The other one we're looking at is All-Time Plastics. There was a large trade. Manish Chukhani bought closer around, a stake for closer around 10 crores. That's the other big mover this morning. That's up closer around 4.5%. I think it's a recent listing. You have Lakshmi Organics as well. That's moving higher on fairly good volume. So all those, the big movers in today's trading session. And Indocount, the other one that's moving very, very well, up 6% as we speak. That one, in fact, is flying away. And also keep an eye out on PG Electroplast. Yesterday, the stock saw a big run. There was some short covering that we saw. Now, it's on the verge, actually, of moving out of the F&O ban. I think either today or tomorrow, that's a strong possibility that one comes out of the F&O ban if it continues with such strength. So that's the other one that I'm looking at today. In terms of losers, SML Isuzu has come in for some mild profit taking. That's down close to around 4%.
All right, I think we've got the sort of stocks opening up and down. Nothing, of course, like in terms of the sheer size of the moves, nothing like what we had yesterday. But 40 points is not bad after a 250-odd point bump that we got in terms of trade. More stocks in a bit from now. But let's welcome in Rajiv Batra, who's head of Asia and co-head of Global Emerging Markets Equity Strategy, Chief India Equity Strategist at JP Morgan. Rajiv, good morning. Great to have you with us here. Thank you for your time. The question is about flows, Rajiv, and FII flows, for all the bluster sometimes that we get, do matter because locals have been big buyers, some $55 billion YTD. FIIs have sold about $13.5 billion YTD, and of course, we know what the market's done, right? Or not done. What are the 2 or 3 important determinants from here which will tell us or mark the return of foreign money in a sustainable way? Is it valuations? Is it something else? Rajiv, go on.
Thanks, Prashant. Thanks for having me over here. I'll say only one variable is important, growth. And I have said on your channel in past also, foreign investors are growth tourists. They invest in the destinations that offers them premium growth. Till India was offering them, India was all in favor. Now, even if I will say that, absolute sense, India valuations are expensive, but in a relative terms, looking at average valuations of India to emerging markets or other EM peer, we are well below the average ranks of that premium also. Still, people will not visit because the complaint will be that PEG ratio of country is still not around 2 or below 2 kind of a mark. So only one variable which is important is growth. And hence you can see in flows, if you take the passive guys out, because in 13 billion, close to 8 billion has come from the passive side in India, net inflow. Active guys have seen close to $21 billion kind of an outflow. So growth is a key ingredient for active foreign fund managers to make a comeback.
Okay, and what? So you're talking about earnings growth, Rajiv, right?
Yes. It will start with your high-frequency macro growth data points, which are your monthlies and weeklies, and then followed up with the earnings data print. We have a pretty good high single-digit earning growth for MSCI India for first quarter FY26, but that doesn't still bring India's PEG ratio to close to 2. So once we come around the territory of 2, that is around 12 to 13% earning growth kind of a criteria, it may satisfy my foreign investors' need.
Just one clarification, that flow number that you mentioned, could you just repeat that? I said $13.5 billion out of India from foreigners, and then you said passive and active.
Passive and active
that was in the... Sorry, go on.
Yeah, the passive and active divide is net inflows in India through passive route is 8 billion, and net outflows are from active side is $21 billion.
Okay, that's a big one, and that tells you a lot as well, right? That active managers have been going elsewhere, where perhaps earnings growth is higher, or maybe tactically, I mean, it's just a better play because of valuations. We know that, Rajiv, we've seen that South Korea has been a market well loved. There's been money going into China as well. The question is, when does it reverse? Now, you said 12 to 13% earnings growth. What is the visibility you have in the future? I mean, do you see that happening? We got a ratings upgrade from S&P. For instance, S&P is saying this whole US tariff business is not going to impact India too much. So when do you see us getting to 12 to 13% earnings growth?
So first of all, on the rating upgrade, market participants believe it is a belated one, but I'll say it is still it still signals a positive shift in perception of India economic strength and stability, which matters a lot from long-term perspective when you take into account borrowing cost and the risk premium for country. Remember, it has been declining from 4.5% a decade back to now almost 2.5%. It can slide down further from here and supports India valuations in future. Now, what could bolster the earning growth and GDP growth? I believe catalysts are getting unleashed one by one. Like, let's take into account monetary policy, which have been in complete drive from November last year. We have seen cumulatively 100 basis point repo rate cut, 150 basis point CRR cut, and now fiscal has started giving full push. Remember, this is not just something new we have seen from fiscal side. Almost for a year, consumption has been getting boosted by fiscal measure, like first by subsidies, then followed by tax cut for middle class, and now this potential GST tweaks. So the twin policy tightening, which was in play in India till November last year, have now shifted towards safely to twin policy easing. So give it a quarter now from here, or max 2 quarters. Expect your double-digit 12 to 13% growth handle will appear on Indian equities.
Oh, okay, that sounds good. Just 1 to 2 quarters and we get back to double-digit growth. I think the bulls will love the sound of that, Nigel.
Well, that's right. Hi, Rajiv. Good to see you, Ben. Then what are the sectors that you're most bullish on? Because the globe is still a very sticky place, but it appears India is set to give up its underperformance. Last 1 year, we have underperformed. The earnings have been weak. Some domestic factors as well have been soft. Let's talk about the largest constituent. That's the banking names. What's your view out there? How do you approach it? There have been some kind of pressure in terms of asset quality. Credit growth as well has been soft, but the optimism is that we'll gradually see a pickup in credit growth. Your take, and what do you like from there?
No, so definitely when you are doing this much amount of an easing as per economic concept, what we have learned and what we have seen in the previous cycle also, that it may take 2 quarters, it may take 3 quarters, but usually credit growth start appearing post the start of the monetary policy cycle easing in with this much amount of a lag. Taking that into account, it will be unfair to assume that we will immediately go towards 18, 19% kind of an handle. Because remember, when the two big institutes got merged, at that point of time, the structural credit growth of the country brought down from 16.5 handle to 12.3%. So if we scale back to 11 to 12% kind of a zone also, it will be very healthy scenario overall. And remember, as I've said, the big part of India credit growth story for the last 5 years or maybe decade have been consumer. Because of excessive tightening, or you can say higher risk weightages and stuff, that particular zone start getting impacted. But now with the easing coming into the picture, even reductions in the risk weighted norms or provisionings also will try to spur up credit growth initially from that end. And once because of that consumption comes in picture, you will start seeing demand from corporate also, maybe led by working capital need or even by the capex related need. So it's kind of a cycle which got stopped, and maybe we are kick-starting the new cycle over here as such. But all in all, we are very gung-ho on financial space, and particularly private banks and non-banking financial companies.
Got that. You know, is there a way to make up, or actually let me ask you another way, for foreign investors that you advise, interact with, is this India, US, and what has happened there with regards to relations, etc., ever come up in conversations? In what way, shape and form? Obviously, this additional 25% tariff is not, even if it goes into effect from the 27th, it's not going to be permanent. I mean, it'll be negotiated lower. But does that come up, and in what way, Rajiv?
No, so most of the time the geopolitical uncertainty comes off the investor's mind whenever it starts hitting the headline. But if you look from the last 20, 30 years perspective also, it has rarely derailed the long-term trajectory of Indian equity market. Usually this kind of a volatility ends up as an opportunity to accumulate the quality stocks. Now the question that comes from investors are that how this equations will impact the growth. Now, I do agree whether it's a political equation or a trade along with the capital flows interact with the growth from external demand perspective, because this external demand has been the key driver for India GDP growth from 2019 to 2024 rather than the private consumption. Now, suddenly if this factor starts slowing down, you need extra growth boost coming from the other side, which is your domestic demand and private consumption. So till you don't see a resolution around the corner on that particular conversation, I think most of the burden for driving growth will be taken on the domestic end. But I do believe, like near term, we should not get too concerned about if this situation persists for longer, how we could be impacted. Yeah, number one will be the risk premia, which we have enjoyed due to the geopolitical diplomacy and got the risk premium of 2.5% from 4.5-5 territory. That can scale up back if the situation persists for a longer time, or the trade and the capital flows for country start getting impacted. But too early to say, because the situation is still evolving.
Rajiv, finally, from a thematic perspective of just building a portfolio for the next leg of the bull run, if I may say, I mean, if this is still a structural bull run in India, should that portfolio be more geared towards consumers? And this is a play both on obviously earnings and also valuations and tactical call. Should it be more geared towards a revival in consumption and therefore consumers? Or should it be more geared towards industrials and capex, which was the case? I mean, those were the earlier leaders of the previous cycle.
No, the thumb of the rule in emerging market is you invest as per what your policymakers are guiding you towards. So since February, we have seen the pivot has been made towards consumption side from capex. And right now we have seen, even with this GST tweaks, it will be more favorable for consumption. And rightly so needed, because as I've said, if external engines are slowing down, like JP Morgan estimate close to 1.6% GDP growth only in US. So even if the tariff concern resolve, external demand is not gung-ho overall. So taking that into account, domestic demand will be the play, and how you play the domestic demand, where maximum support you are getting your policymaker towards consumption side. So we pivoted towards consumption over capex in February last year, and we are still reiterating that. And the broad overarching theme, not just I will say within India, but emerging market with the global growth slowdown upon us, is domestic demand over exporters. So more you position your portfolio towards domestic demand like financials, staples, discretionary, real estate, hospitals, and maybe some of the material plays which are purely dependent on domestic demand, that will help you generate a high return and maybe even outperformance to your regional peers.
Okay, all right, Rajiv, we appreciate you joining in and giving us all of those details. All the best, and hopefully, as you said, things will recover from here on. Positive measures being taken both by the centre as well as the RBI, and those results will be seen in the coming quarters.
Thank you.
Well, let's move on then, and let's move on to JK Cement. We have with us Anuj Khandelwal, the business head, Grey Cement Division at JK Cement, who joins us on the show. The three big key talking points that we'll be looking at in today's interview is that you have expansion that was announced in Rajasthan as well as Punjab, GST rationalization. What's the impact on cement, as well as how is cement pricing and demand shaping up? To answer all of that, we have Anuj with us. Hi, Anuj. Congratulations first. You know, JK Cement enjoys peak valuations, peak multiples, but earnings growth has been superb, volume growth has been superb, and now you're peppering the street with that 4,000 crore capex plan that you've announced. Break it up for us. How much of this capex plan will be via internal accruals, and what kind of debt will you be using to fund this?
So, Rajal, firstly, many thanks for having me on the show. Yes, we've announced an expansion in Rajasthan, where the integrated plant will be in the Jaisalmer sector, and there'll be two grinding units, one in Rajasthan and one in Punjab. Overall, the capex will be around 4,800 crores. 65% will be funded through debt, while 35% will be funded through internal accruals.
Got it. All right. And what does this mean in terms of the debt trajectory? As of last year, I think you ended consolidated debt was around 3,200 crores for the entity. With this capex plan, what is the peak level we're looking at in terms of capex?
So overall, look, you are right. The net debt last year hovered around 3,000 odd crores. Our estimates are that once the peak debt will reach to around 5,500 crores as a net debt. Right now, the ratio which we look at more closely is the net debt to EBITDA, because it tells us our ability to service the debt. Last year, it was around, we closed at 1.3 times of EBITDA. Even June quarter was around that number. Our internal target is that even at the peak levels, we should not, be much beyond 2. So around 1.8 to 2.2 is the sensitivity which we kind of look at. So peak debt levels of 5,500 crores, but net debt to EBITDA of around 1.8 to 2.2.
Okay, all right, got that. Now, with this capacity expansion, you'll be at around 39 million tons, approximately, with what all you have announced. But you have to get to around 50 million tons. So for that additional 11 million tons, where are you going to be looking at? Currently, I think most of your capacity is in North India, and that seems to be the focus area. For the remaining 11 million tons, any kind of geographic target you're looking at? A couple of big assets, Anuj, which are available in South India as well. Why don't you go ahead and just buy one of them? 5-8 million tons will come easily.
Look, I really enjoyed this conversation. See, look, we've grown from 20 million 2 years back to now with a visibility of around 39 millions by, let's say, mid of 2027. So that's a very, very steep kind of a journey. And, it's not just enough to put up plants. It's also important to monetize it. And our track record is good, but we want to maintain it. To your second question on where do we see the path from 39 to 50 million, there are many possibilities. One, we are looking at the south cluster, where we have a plant at North Karnataka, Muddapur. There in that cluster, we want to aim at around 5-6 million tons post the Jaisalmer expansion. And after that, we can again circle back to central India and try to put up another line. So, combination of that would get us to 50 million. But as I've always reiterated in my earlier conversations, we try to balance the need for growth and financial prudence. So as the things progress, we'll be announcing basis our financial situation.
All right, Anuj, for this particular capacity that you have announced of around 4,800 crores, a couple of brokerages have written, like, JM Financial, they are talking about a 10-year capital subsidy that you'll be entitled to. What is that amount over the next 10 years that you'll be entitled to? As per their estimates, it's around 1,000 crores. Would that be fair?
Look, I can't divulge the exact numbers, but just if I can give a breakdown, basically, any of the capital investments across the country, basically there are two types of subsidies. One is the capital subsidies, which you generally utilize for large investments. For example, in this case, Jaisalmer plant. And there is a SGST reimbursement incentive, which you generally utilize for relatively smaller investment, which is our two GUs in Rajasthan and Punjab. So capital subsidy, look, is a percentage of the effective capital investment, and it really depends on how much you are investing and what area you are investing in. So there's a standard package by government of Rajasthan. I can't divulge the exact numbers as to how much will it yield to, because it's confidential, but suffice to say that combination of all the incentives can bolster our IRR by a couple of percentage points.
Okay, Anuj, what I was getting at is there any risk to this particular incentive? I asked this because everyone is celebrating that we're going to see some rationalization of GST rates. Now, as you said, SGST will be some part of that goes to the state as well. So effectively, if the GST comes down from 28% to 18%, then instead of 14%, the state will be getting 9%. Just, going by this example. In that case, does it put some kind of risk to the incentive you'll receive, the kind of leeway you'll get? Tell us your understanding, because everyone's celebrating the good part, but could this be a risk?
So we are also celebrating it because, look, GST rationalization has driven a lot of positive sentiment, and it finally lead to a lower cost of consumption for our customers. In terms of risk, as far as the GST policy goes, look, on places where you have a capital subsidy, it really doesn't matter how much GST are you paying to the government, whether it's at 28% rate or 18%. It's basically a fixed amount of money which you get over a period of time, right? So it is not really dependent on GST rates being 28 or 18%. Places where, yes, there's a SGST reimbursement, what would happen is, theoretically speaking, if the rates come down from 28 to 18%, and of course we need to see the fine print, etc., basically the per ton incentive will reduce. But in most of the packages, there is an annual ceiling. So rather than meeting the annual ceiling, let's say by December or January, you might start hitting it by March, or might forego a little bit. So it's not a huge impact at any stretch of imagination per se to the subsidy income which can come to the companies.
All right. So you don't see this as a big risk. You rather celebrate the fact that the cost of constructing a house goes down. And in that case, it could help volumes and help demand on ground as well. Would that be the way to look at it?
Sentimentally, yes. But,
it's inelastic. Cement is inelastic,
yes,
as we know. And
exactly.
as a cost of making a house, I'm reading a note today, it is just around 1%, less than that as well. So it's a more sentimental positive. Is that correct?
It's a sentimental positive. Can help infrastructure sectors a bit more. But on the housing sectors, yes, look, if a person has decided to make a house, he will make a house. Not really, a little bit of GST rationalization on cement will not change the decision that much. But yes, from an infrastructure projects perspective, it can lead to a significant cost reduction. So overall, I understand that cement is slightly inelastic, but sentimentally is a good positive for us.
All right. And if you could tell us about incentives on an annual basis, what is the rough incentive that you receive, if you have that number handy, as a company, JK Cement?
So look, I don't want to get into specifics. Maybe I think it's a good number, but I don't want to get into specifics.
All right. The short point is just saying there's no risk to the capital subsidy that you get as well. As you're saying, it's assured by the state government. Got that. Good to see volume growth. You outpaced the industry. 15% grey cement volume growth came out of nowhere. And from there on itself, the stock has started its big rally. What's the view for the year? What kind of volume number do you end this year with? And you'll definitely be gaining market share because, the industry grew at around 7% at best. Your volumes grew at 15%. So target for this year.
yes, Q1 was good. Industry, I guess, grew by 5-6% and we grew by 15%. But look, a lot of our growth came in central India, where our capacities are still new. So we were able to gain a lot of market share in central India. In North India, the growth wasn't that much, but the new expansions will solve for it. Overall, the full year picture which we are looking at, we are really targeting the magical number of 20 million tons of sales this year, which will be around 13% odd growth versus the last year. This is with the assumption that the industry will grow by, let's say, 6-7%.
Okay, all right. Final question then, with regard to your cost-saving measures. You all have been guiding for, I think, 150 to 200 rupees, cost saving. For this year, how much of that will be achieved?
So I think we'll easily achieve half of it. Quite a bit of it is already, I think, in the pocket. Around 50 odd rupees, I would say, would already have been realized. Maybe 30-40 rupees more. We have many initiatives coming up in the later part of the year, whether it is on renewable power, on AFR, and the likes. Even in the medium term, we have other cost-saving initiatives also lined up. In my previous interview, I also said we have secured a coal mine in Madhya Pradesh, which will get, let's say, operational in 2.5-3 years' time. And when that happens, the cost of coal will reduce for us for our central plants, where we are becoming much more prominent. So cost saving is a perennial journey, but we are tracking well, and we are on the target to achieve the numbers committed.
All right, Anuj, good speaking to you. Thanks a lot for joining in. You're quite gung-ho about this new capacity expansion. As you said, there is a capital subsidy. There's a bit of a cushion with regard to the state GST as well. And for the year, you're looking at around 20 million tons in terms of capacity. Thanks a lot for joining in. Wishing you and the team all the best in the time to come. Okay, all right. Well, let's move on to our next management. We have Endurance Technologies that reported a healthy set of numbers in the first quarter in a tough environment, actually. The revenues are up by close to around 18%. The profit as well was up close to 11%. We have with us Mr. Rajagopal Sastry, the Group CFO, who joins us. Hi, sir. Good morning. Thanks a lot for joining in. First, tell us about this GST rationalization. How it's going to help your business, because you'll have a dual impact, right? There's the ABS as well that comes into play. So for that, your company is required. And if sentiment improves on the whole, then inventory gets cleared out, and that's good for your volumes. So first, comment on that.
Good morning, and thanks for having me with you. GST definitely will be a very big positive overall on the economy, because it will increase the demand. And looking at our own scenario, yes, we will have an impetus on the demand because of the GST, because the vehicles are going to get cheaper. Albeit there would be a lull till the announcements are made and the demand really kicks in, factoring in the new change in the GST rates. What we are also seeing is that our stated objective of growth in aftermarket will also get a shot in the arm, because this will augur well for the organized sector. So overall, for this announcement, while we are waiting for the fine print, while we are waiting for how it will actually pan out and how will be the response of the market for that, our initial thought is that it's a very positive for us.
Mr. Sastry, hi, morning, sir. So right now, I think there are two different slabs, two different rates, 18 and 28%, depending on which component we're talking about. Most of the products that you make, are they in 28% or 18?
Yeah, we do use the 8708 or the chapter for the automotive, and our output is all at 28%.
Okay, so that should move down to, as is being discussed, perhaps that comes down to 18%. I mean, since you're part of the chain, you're claiming the input tax credit as well. Materially, on the P&L, will this cut make any difference?
On the P&L, it should not make any cut. It will only do good to us if there is an uptick in the volumes. And like we said, it should give a good benefit in the aftermarket sales, because that is always profit accretive for us, and if that boosts aftermarket demand, and that will be good for us.
Yeah, okay, got that point. Sir, you've had a good quarter, pretty decent growth, 11% growth coming in, and, Europe is a big geography for you. I think you get almost 30% of your business from Europe. So let's just go there. I mean, what are the conversations you've been hearing over the last 3-4 months with so much happening in the tariff world? Is there some additional opportunity? Would perhaps some of your European customers look to source more from you vis-a-vis the US? I mean, I'm just trying to understand if this whole tariff storm if it has any real implication for the business?
Both our Indian operations and the European operations, we generally produce for the local market. So there is no export from exports of our products into US, and there is no exports from India also into US. So we are very much local for local. In terms of the impact of the tariff, yes, it did have certain amount of uncertainty in the OEMs of the Europe. But these demand drop of over, they grew 1.6% in this quarter in terms of overall sales. However, what you would notice is that this uncertainty in the demand in the OEMs has been for quite some time now because of the transition from ICE to electric vehicles and the latest tariff related discussions. But what we see is that all these difficult situations will have to find an equilibrium, and soon there would be growth back in the European sector, because overall it's a strong market any which way, both from a technology perspective and the demand perspective. And coming to our own performance, we have been acquiring capacities and we have been putting in capacities. We have been very careful in not to add to our costs, which are permanent in nature. And overall, close to 320 million euros of orders we had acquired in the past 4 or 5 years. All these are also helping us to see that our growth is intact. And we are also carefully looking at acquiring companies which are in good health, which are accretive to our margin, which are also synergistic to what our business, like it would be seen in the recent acquisition of Stefferle, which gave us capabilities and also profitability. So overall, our story so far has been good, and our plans for the future as we go forward is also very strong.
No, got that. You know, how big is this ABS and two-wheeler opportunity that you're estimating? I think the government has proposed new safety requirements mandating 100% use of ABS for greater than 50cc ICE two-wheelers and all two-wheeler EVs. Can you talk about what's happening there? Any orders you've got in this regard?
Yes. This is a very important move. I mean, first, primarily, we congratulate that the road safety is being given more importance, and an anti-lock braking system is extremely important element of two-wheelers to promote road safety. If you look at numbers, last year, the country had 2.38 crores of two-wheelers produced, out of which roughly around 30% had ABS. Now, this 2.38 also had the exports, but those are small numbers. If you remove the export numbers, the entire market of, let us say, assume 2 crores would be ABS. And that's a significant market growth of 5 to 6 times. Given in that sense that we're already available there in that anti-lock braking system. So we did have capacities, which we announced, of about 6.4 lakh anti-lock braking systems per annum, out of which we were producing something like 4.8 lakh. And our aim is that with all the preparations which I have been doing in the past few years, with our own test track, with enhancing our R&D capabilities, both in terms of talent and also homogenizing the technology which we had acquired from our overseas partners. So we are ready for a significant growth in the anti-lock braking system. What's interesting is that we do have the technology, we have the people, we have the R&D capabilities, and we are in discussions with all the OEMs. In the past few years, the quality of growth of the company has been very good in that we were growing across all the OEMs and across all the product segments, which is giving us a good entry point and being a partner of choice for the OEMs to implement ABS into their vehicles. And this is auguring well for us. And what is also important is that it's not only the anti-lock braking system, which they will also see a growth in the braking per se. So we need hydraulic disc brake systems to be easily able to applicate anti-lock braking systems. And that means our demand, the demand for disc brakes and the hydraulic braking systems is also likely to go up, and for which we have been preparing right from acquiring land banks so that we can put up factories. And we also have been setting aside capital so that we are able to invest, and that those actions are already in place. And we are seeing that this is a big positive for us.
We'll leave it there, sir. Good getting that perspective. Very, very useful. Appreciate you joining us here on the channel this morning. And good luck with your plans as you execute. I just want to take a quick look at what the market is doing and some individual names. Guess what the number one volume-led gainer is now on the NSE? It's Ola Electric. Ola is up 6%, 43, 44 rupees, and very large volumes at this point in time. There is Vari Energy, which is up about 3%. 3080 has got very large volumes, number two in terms of volumes. There is Inox Wind, which is up 4.5%. Stocks at about 146. There is Bellrise, which is up 4.5%. Recent listing, stocks at 146 rupees there as well. Actually, yeah. HLE Glass, I think we highlighted this in the morning. 16% on HLE Glass. 483 on humongous volumes, actually, for a stock like that. So HLE Glass Court is coming up. Denta, D-E-N-T-A, 14%. So 391 on that one. There is, which is looking very good. And, we highlighted this stock, All-Time Plastic. It started higher and it's up 7%. An influential investor picking up stake. And this one is up 6%. Started, I think, about 3-4% higher, 310 at this stage. So there is lots of stuff which is coming through and volumes are picking up in right earnest now. We'll take a quick commercial break here. We'll talk to a company from the renewable space, from the solar space specifically. Vikram Solar is going to be talking to us about their upcoming IPO. The issue, of course, open for subscription today. Yanesh Chaudhary, CMD of the company, on the other side. Welcome back. One of India's largest solar photovoltaic module manufacturers is Vikram Solar, and they're coming to the market with a 2,100 crore rupee IPO. It's open for subscription today. In this segment, we will focus on three main points with the management, which will be with us in just a bit from now. Have solar gear makers reached the peak of their returns and margins? That's point number one. It's a question we've asked for already listed companies as well. Second, what is the impact of the ALMM scheme, which aims to boost local manufacturing and what it spells for the business? Number three, finally, we will also try to understand the company's expansion plans. So let's get straight into it. Yanesh Chaudhary is Chairman and Managing Director at Vikram Solar. He's with us. Mr. Chaudhary, great to have you with us here. Thank you very much for your time. Prashant, this side. Almost 97-98% of your revenue comes from solar PV modules, right? And about 80% of that comes from just 5 customers. So give us a sense of, concentration risk here, Mr. Chaudhary. That is one. Second is the number one issue that I highlighted. Are we at the peak here? Because the worry across the board for companies like you, and we already have a few listed, is that in about 2 years' time, the supply is going to overwhelm demand here in India with the amount of capacities which are being set up. So let's just start there with your perspective, Mr. Chaudhary. Go on.
Hello, Prashant, and thank you for having me. I'll first talk about the sector and how the technology has evolved over the years and why that is the most significant game changer for the solar sector. We started with a 200-watt solar panel. Today we are at a 600-watt in the last 10 years. So the overall form factor is much more efficient over the years. And not all companies are able to make use of this technology and ensure that they are producing and manufacturing at scale. Vikram Solar has been in the sector for the last 2 decades, and we are able to leverage the power of high efficiency and technology to deliver products. Now, as far as your question on overcapacity is concerned, I think the market, we are sitting at the tip of the iceberg. If you see the way this space has grown exponentially, I think it's still that much more or even more growth is expected to happen over the next 2-3 decades continuing. India is a developing country. We know that every year we need to add 3 to 4, 5% of new energy in the grid, considering the demand cycles, as well as not much is getting added from the fossil fuel side. So renewable is the answer, and within renewable, solar expects to gain large volumes, considering the depth and the.
No, Ganesh, no one's taking away from the use of solar and the use of renewables anyway. What we are trying to understand from you is your sense of whether a year or two. First of all, how long will it take for your capacities to come on stream? Because the objects of this issue are to put up fresh capacity as well as expand current capacity. I think you're doubling your current capacity as well. How long will it take for your capex to come on stream? And by that time, is there not a risk of maybe some sort of, if not a glut, but definitely an oversupply in the market?
So first of all, our capacities, we are currently at 4.5 gigawatt. By the end of this fiscal, we will be at 15.5 cumulative gigawatt. So we are adding significant capacity out of this fundraise. We will go backward into cell manufacturing capacity next year. So that will be another significant deployment of capital for that. Now, as far as the glut situation is concerned, the point I was trying to make was this is a technology space, and not every manufacturer, every player is able to leverage the power of this technology, considering that there is a lot of evolution that has happened over the years. And going forward, the large IPPs and the producers and the utilities will only need a certain level of efficient products which have bankability as well as stability, because a solar panel has to last on the field for 25 plus years. So this itself is a very big ask, and only so many companies are able to deliver that with a lot of credibility and legacy in place. So Vikram Solar has been in the space, as I said, for 2 decades. We are in the position to cater to this market in the most significant way.
No, I'm just quoting some numbers, Ganesh. Correct me if I'm wrong. I mean, these are from various research sources.
Yeah.
Last year, we added record, solar capacity. I think it was almost 24 gigawatts was added, which was a record for the year.
Correct.
So again, how long will it take for your capacity to come on stream? Does it take a year? Does it take more than 2 years? And what is the current demand-supply gap? And where do you expect it to be? I mean, what is the projected, demand by the time your capacities go on stream?
Great question. I'm sorry. Great question. I think when we talk about... I'm sorry.
Yeah, go on.
When you say 23 gigawatt that has been added last year, that is AC capacity. So when you talk about in solar panel terms, you have to add 1.5 times to that. So overall, last year we added around 35 gigawatt of solar panels. And this year, already the run rate shows 40 AC. So that's about 50 gigawatts of DC capacity being added. Now, within this, if you see the overall ALMM listed capacity on MNRE projections, we have about 76-80 gigawatt available in India. And out of that, if you look at the capacity utilization factor, that you bring that down to another 40%, and then technology, you bring that down to another certain percent. So the overall percentage of high quality latest technology product that is available comes down to a bare 20% of this capacity that is published on the MNRE.
We have 2 more questions. I'm sorry to press on this, right? But that's the number one question on the minds of investors as well. By F5 27, the number that I have is domestic supply will be about 75 gigawatts per year.
Correct.
Against a likely demand of between 35 to 40 gigawatts per year.
Yes.
And hence that question that we are pressing again.
So this is nameplate capacity, and nameplate capacity is usually based on the highest efficiency and the full 100% capacity utilization. So where we in a general sense in the industry is to reduce that to an available and operating capacity, which comes down to 60%. So this 75 gigawatt, 60% of that is the available capacity. And from there, we talk about technology. So there is monoperc, there is multicrystalline, there is polycrystalline, there is TOPCon. TOPCon,
Sure.
which is the highest efficiency, which is further reduced in terms of available capacity, which is the desired product by all IPPs.
Okay, Ganesh, must say you've put up a great defense. We've been grilling you on just one point about possibility of overcapacity, but obviously, I mean, you have your ear close to the ground. Very quickly, just on the operations as well, the company saw about a 35-36% growth from the previous fiscal to FY25. You're working, I mean, you were at almost 16% margin. Last year, you closed at about 14.5%. Steady state when all this capacity is on stream. I mean, your current margins, are they the sustainable range? Could it be lower, higher? I know you can't talk too much numbers, but give us some sense on the sort of model that you're looking to build.
I will try to refrain from talking about forward-looking numbers, and I hope you understand that. However, the way we see this market evolving is that there's going to be a lot more domestic content requirement going forward. We already see that there is, Chinese dumping has come to a grinding halt because of the basic custom duty as well as the ALMM. And going forward, we see this continuing. While the market is expanding, the way domestic content is being not just favored but mandated. The government ALMM list 2, which ensures that the cell that goes into the solar panel is also domestic, and hence our grand expansion of 12 gigawatt in solar cell. So from next year onwards, we hope to stabilize our margins at the levels that we are today, probably look at some improvements, but that remains to be seen.
All right, Ganesh, we hope to speak to you soon again on the day of listing. Thank you for joining us. Good luck with the issue and appreciate you coming on here on CNBC-TV18. Thanks indeed. All right, that's Vikram Solar with the perspective on the business and, of course, the offering which is coming through. I mean, lots of stuff added to the list in terms of what's moving. I think Vardhman Textiles is up 7%. Vardhman Textiles is coming up at about 440 rupees. It's a big one, which is showing up right now. And of course, the others we've been mentioning, earlier as well. Ola still remains up 5, and so on and so forth. So,
and the one that's come out of the F&O ban as well.
PNB Housing.
PNB Housing Finance. Last half hour of trade yesterday, I said this, right? That going by the looks of it, last 30 minutes, but it appears set to come out of the F&O ban. Remember, there were lots of shorts in the system. The stock has seen a big correction post that resignation at the top. Now all eyes on the new CEO that's coming in there. And valuation-wise, it trades at around less than 1 times price to book after this sharp correction. So that's one of the big movers this morning, up 2.5%. The other one I'm going to look at now is PG because in the next 2 days, that could possibly come out of the F&O ban as well. Let's get in Mitesh Thakkar. Mitesh, mild green to start off trade. The Nifty Bank underperforming yet again. Your view on the index and 2 stocks that you have for us?
So, one, I think, the opening is slightly better than expected, but the other thing is that the structure remains positive despite the fact that the Bank Nifty is mildly negative and Nifty is practically flat. So I would maintain a positive stance. Disclaimer that we have today initiated some bull call spreads on the Bank Nifty. And waiting in case we get Nifty closer to about 24,850, 820 zones, we'll add similar positions on the Nifty as well. So in that sense, it's a positive outlook. On the stock side, I think it's the telecom names which are very strong. Reliance and Bharti Airtel. Reliance is a buy with the stock below 13.95 for targets of 14 plus. And Bharti, I think, I'm waiting for the stock to clear today's high, which is around 1932, 33. That's the pivot. Once it crosses that, buy with a stop at 1915 and look for targets of 1965.
Okay, all right. Thanks very much for that, Mitesh. Those are individual trades coming through. It's past 10. We'll take a quick commercial break here. Manisha will be joining us with what's top of mind for her as far as commodities go. Stay tuned. Okay, welcome back. Let's shift focus to the commodity space. Manisha is here with what is top of mind for her. Manisha, good morning.
Morning, Prashant. Thank you for that. Well, I'm looking at cotton prices right now, where the international markets actually have seen some bit of a decline continuing there. When you look at this year, we are down by 3% in the global markets as far as cotton goes. For the Indian markets, overnight was a notification that came in from the ministry and the regulators, where government has scrapped levy on cotton imports, and this is until 30th of September. This is from 19th of August starting today. So this is basically for these 42 days only. 11% duty has been on cotton imports, which totally has been done away with. Markets clearly cheering this up, as you have yarn, fabric, apparel industry actually showing a thumbs up on this. Remember, when you look at the international markets, we are slightly not competitive when it comes to exports, but the international prices have been on the lower side, and with the 11% duty done away with, it would be cheaper imports that would be coming in India. These are the kind of numbers that we anyways have been doing in sense of imports of cotton. So 23-24 was 15.2 lakh bales of imports that India saw. Last year was a record import at 39 lakh bales. This is because the international markets were trading cheaper. India has had a lower sowing, lower crop as well, and much of those imports really came in because of that. Now with the 11% duty also done away with, we are anticipating that you could be looking at higher imports, at least for the next 45 days, 42 days, that is, until the time that you have this temporary import duty done away with. Interestingly, also, when you look at the India's sowing, cotton, remember, is a kharif crop. So we've seen sowing happen in the months of June and July, and the arrivals start coming in the months of October to Feb, that is. So area under cotton cultivation has seen a decline as compared to previous year. Last year was 11.04. This year is 10.69 million hectares therein. Also, what India has a target from the Commerce Ministry is exports of textile to the tune of $100 billion by 2030. Now, industry has been telling me that this is achievable only if we are competitive in the market. Now, with the kind of tariffs that we have, especially from US, which also is a stronger market for us, we stand at around 50% after 27th of August if nothing changes. In the meanwhile, you have our peers or competitors like Bangladesh and Vietnam looking at 20%, Cambodia at 19%, even China for that matter is lower at around 30%. So India really looking at means and ways of ensuring that exports do not get hit. Further cheaper imports would ensure that our profitability and India industry margins improve and the export in that sense become profitable or at least competitive with the kind of tariffs that we seem to be facing.
Okay, all right. Thanks a lot for that, Manisha. Well, let's stick with commodities then. I'm looking at Vedanta today. The street is clearly excited because they're going to be meeting on the 21st of August to consider an interim dividend. The record date for that particular dividend will be 27th of August. Remember, just, in the first quarter, they had approved a dividend of close to around 7 rupees. So that's a dividend-paying machine. The street likes it. What happens when they pay dividend is the promoter's in better shape because he can repay some of the debts. That's Vedanta Resources. And for shareholders as well, they receive the dividend. So the street likes it. Also, all eyes are on the NCLT hearing that will take a call with regard to that demerger. So both those two triggers, dividend as well as demerger moving forward. That's being tracked by the street. Stock up 2.5%. Well, time to slip into a quick break. On the other side, our special segment, It's the Economy. Lata talks to Samran Chakraborty of Citi India as well as Soumyakanti Ghosh of SBI. Stay with us.
Welcome, it's the economy. The equity markets cheer over the twin good news of S&P upgrade and promise of GST cuts looks like lasted only for a day. The bond yields have done worse. Yields fell on Thursday after the rating upgrade. They fell to as low as 6.42% from 6.5%. But currently, today, they stand at 6.51%, a 10 basis point increase almost. This is the highest level since April 9, which means not only the rating upgrade, but even the 50 basis point repo cut of June is being ignored by the bond markets. Clearly, the market is worried that the centre and definitely the states may borrow more this year than budgeted, which means at the moment, the bond markets don't think the economy will grow fast enough to give more tax revenues to the government. To get a 360-degree perspective of the economy, the fiscal deficit, inflation, interest rates, I have with me two preeminent economists, Soumya Gandhi Ghosh, Chief Economic Advisor of State Bank and Finance Commission member, and Samiran Chakrabarti, Chief Economist, Citi India. Gentlemen, thank you very much indeed for your time. And a bigger thank you to you, Soumya Gandhi Ghosh. Soumya has just come out of the, yesterday evening from the government meeting with economists and landed at 3 a.m. in the morning in Mumbai. So deeply grateful to you, Soumya. Well, for starters, what is the sense you are getting? Is the bond markets worry that the fisc is going to be stretched, that there may be even extra borrowing from the states and centre? Legitimate fear?
Yeah, thank you, Lata, and thank you for the nice introduction. If you just give me 2 minutes, I'll just explain. I think, yes, there are two sides to the story. The first is the potential revenue loss is going to happen because of this GST rationalization. I think there is various estimates in the market, but we think that the revenue loss actually is it's two sides of a coin. On the one side, you will lose the revenue. On the other side, you will gain the revenue because you are moving 28% to 40% some of the goods. So from there will be an equal share distribution with the center and the states. So in the end, the revenue loss could be anywhere between 1 trillion or so for a full year. So that means for the next 6 months, it could be around 50,000 crore. So obviously the fears of the bond market is that whether this 50,000 crores will be, or this 1 lakh crore or whatever is the amount will be able to be adjusted by the center in its fiscal numbers. Our sense, we believe that I think there is a deeper aspect of the story. As you know that the compensation cess has ended, but the center has given back-to-back loans to the states with the states now repaying. And this year already around 6,000 crore has been repaid. Around 49,000 crores will be repaid in November 2025. And next year, April, I think the entire amount of 130 trillion will go out. So the entire repayment will be made. So and there is also an amount which is lying in the compensation cess.
Okay.
The estimate could be closer to this 50,000 crore number. So our sense is that in the overall analysis, the revenue loss could be compensated significantly by this compensation cess because the states will now be free because this money will not be deducted from the states because they will not be repaid to repay the amount. So
Got it. So your math is suggesting is that the bond markets is probably worrying in vain. That, for this year itself, it's only going to be probably 50,000 crore shared by centre and states. Part of them could be met for the centre at least from the excess money lying in the compensation cess. Samiran, this math, I'm not hearing it first from Soumya. Something akin to it is available in the market. It is floating, though not so precisely. Then why is the market behaving the way it is behaving? What is its worry?
So thanks, Lata. I think I almost entirely agree with Soumya on this. To start with, the way I put it is that tax is a zero-sum game. So if whatever amount the consumers are going to gain, it is going to be exactly the same amount, which will be a revenue loss for the government. But for us analysts to estimate that amount, which will be the gain for the consumer or for the loss for the government, is very difficult because of at least three reasons. One reason is that we do not know how much is going to be the pass-through of these tax cuts to actual prices. GST is an ad valorem tax. So we might not see the entire reduction in revenue because the companies might not pass on the entire price cut. The second is obviously the Laffer argument that actually economic activity consumption might improve because of tax cuts, and that will lead to higher revenues. So there are multiple such things which are very difficult to estimate at this point of time, including something like input tax credit. So whatever number we are working with right now, there is a considerable band of uncertainty around it. I think the market is reacting to that uncertainty.
Okay.
That confidence that was there in the market, that fiscal deficit will definitely be met at 4.4%. In fact, could be slightly better because of higher RBI dividend and a higher nominal GDP number. That optimism might have got a hit, and that's probably the reaction that we were seeing.
Okay. Soumya, since you are freshly landed from the capital, one of the guesses of the market could be that there is a fiscal package coming for exporters. Surprisingly, today, all the textile stocks are doing well, actually, or many of them are doing well. Is there a chance that something will be designed for those who are impacted? You see, the data is there with the government. Who exported what to the US last year? And therefore, to compensate them for the extra penal 25% is not methodologically difficult. Will that be a course the government may take?
No, I think there, as I have understood in the media, I think there are something which is being worked out in terms of a compensation structure for the exporters. So what form it will take, it is a little difficult and tad to say at this point of time, because again, it is uncertain. We don't know when the trade deal is going to materialize, whether this 50% will stay from the end of August till the September when the Prime Minister visits the US. So basically the trade deal could culminate at the end of September when the Prime Minister visits the US. That also is an uncertainty. So my sense is that, yes, there is some package which the government is thinking about, but the government is also in a wait and watch mode to see what will be the impact, because already reports suggest that August exports have been significantly front-loaded. So maybe if we can pass through this period of August, there will be another month of uncertainty. So maybe all these options the government will look into, but there is obviously an option of looking into a package for the exporters, specifically the textile, gems and jewelry, made in products and others, which is a significant share of exports to the US market.
Oh, yes, marine, very big. I mean, the shrimp exporters are practically entirely dependent on the US. And for what it is worth, the state of Andhra is a political ally of the centre. I mean, they may help even otherwise, but that's also a point. Samiran, I went through your note. You are saying that there is a 0.6 to 0.7 benefit or percentage of GDP benefit because of all the cuts, the income tax cut, the GST cut, etc. Will all this be taken away if it is 50%? And are we working with a flat GDP? You have not given the negative, obviously, because there is uncertainty. But what is your ballpark guess?
So we were partly anticipating this stimulus of about 0.7 to 0.8% of GDP, including the income tax cut, the GST cut, as well as the interest rate cut. On top of it, there could be some additional coming out of higher credit growth if it materializes. So ballpark, let's say about 1% of GDP is the stimulus towards the households. Now, one question is how much of this stimulus is going to be spent versus saved. And that is more a function of consumer sentiment, which in turn could be impacted by the wealth effect coming out of asset prices. As of now, the asset prices have been pretty flattish, which is why probably the consumer sentiment is somewhat weak. And that's why we are not yet seeing the larger part of the stimulus being spent rather than saved. But on top of it, we have this headwind of how much fraction of the GDP I should take out because of the higher than expected tariffs. Yeah. At this moment, it's so fluid that we haven't been very precise in that estimate. We have put it in the form of sensitivity that at 25% tariff, it's still about 0.3 to 0.6% of GDP is a sensitivity. However, our estimate has on growth for FY26 has always been a notch higher than the official estimates from RBI, because we thought that because of some statistical reasons in the first half, as well as the stimulus impacting in the second half, we should see a slightly higher growth this year than what the current estimates are. So we are slightly ahead of the street on this.
Okay. You know, another factor which we are not discussing, but the stock market is giving us some signs. L&T did not rise. Yesterday, there was a 1%, at one point, even 1.5% gain in the markets. It was all consumption stocks. CapEx was clearly sulking. Shaumya, should we worry that, you know, the CapEx expenditure might soften, and definitely in the States, if not in the center, because they are likely to be hit more by the GST?
Yeah, I think, Lata, that's a possibility, because capital expenditure at 3.1% of GDP at 11 trillion in the budget, I think has already reached its peak. But you also need to understand that there is an grants which the center gives to the states as a part of the overall larger fiscal architecture, which is around, I think, which adds to around 1.2% of GDP. So my sense is that as long as these grants continue, this creation of capital assets will continue in the states. And the states have also been given this 50-year interest-free loan, capital expenditure by the center, which has been used quite well by the center. Of course, there are conditionalities. So my sense is there will be some impact on the capital expenditure. Obviously, it has peaked and it cannot go any further higher from over there. But again, I think it's a matter of debate how much the hit will be, because the evidence on this is still forthcoming.
All right. Okay, I'm being hounded that I'm running out of time. So 2 quick questions. Same question to both of you. Samiran, does the CPI fall even further because the GST will bring down prices of some things? What are your rate cut forecasts now? 1 more cut, 2 more cuts?
Lata, it's difficult to give you a precise number on CPI because we do not know what the pass-through for the companies are going to be. But 11 to 12% of the CPI basket is likely to be impacted positively by the GST cut, with medicines and apparel being the largest components within that, is what our sense is. Not putting in another fresh rate cut right now, because it seems like the RBI is looking at the forward-looking inflation number, which still remains quite elevated.
Okay. Shaumya, bringing down inflation, are you? Rate cut expectation?
I think if we assume that there is a full pass-through, the impact on CPI could be as much as 45 basis points, 40 to 45. But even if there is a 50% pass-through, I think their impact would be around 25 basis points or so. So I think there will be obviously an impact on the headline inflation. But the important thing is that at this point of time, again, we are not building it any rate cut by the RBI, and we'll believe that the RBI will wait and watch the next year's CPI new base, these new numbers, so see through to see what will be the impact on the headlines. Yeah.
Okay, that may be the other reason why the bond market is not reacting. Okay, I want to invite both of you again to look at the new Gen Next reforms that the government is contemplating. But since it is just on the cards, we will postpone that for the next time we meet. Thank you very much, Samiran and Shaumya, for improving our understanding of the macros. We wrap up on Bazaar Chartbusters coming up.
Well, shares of textile stocks surge as Vardhaman Textile, Gokuldas Exports, Wellspun Living, Ambika Cotton Mills gain in trade after Centre removed the 11% import duty on raw cotton till September 30th.
Reliance is one of the top gainers on Nifty as Jio discontinues its entry-level plans, with brokerages expecting it to lead higher revenues for the company. In an added tailwind, the SEBI proposal to lower minimum public offer requirements for large IPOs could have a positive impact and implication for the potential Jio IPO.
Vedanta share price rises as it announces the board meet later this week to discuss what would be the company's second interim dividend in FY26.
New entrant on D Street today, BlueStone Jewelers lists at about a slight discount to its issue price of 517 rupees. We will be speaking with the management shortly. Stay tuned in for that.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Vinny. And the markets are holding with some gains of around 35 to around 40 points. After the big rally that we saw yesterday, holding up in the green is something that the street would like, Vinny. And plenty of stocks, though, from the broader markets doing a jig of their own.
Absolutely. Plenty of stocks that are in focus today. And good morning to you as well, Nigel. Now, obviously, markets managing to hold on to that some bit of a gain. Yesterday was a very good day, right? Now, today, obviously, a mild day coming in, but nothing bad and nothing to complain on that front. And like you were talking about as well, a lot of stocks that are in focus on the broader end of the market, especially look at the textile stocks that have come in as well, right? They are buzzing in trade because of the import duty that has been stopped right now for 42-day period that is starting 19th August to 30th of September on import of raw cotton. So that will help them in terms of their cost, at least, given that there was so much of an issue coming in, Nigel. But we do have BlueStone Jewelers that has listed today on the exchanges, a debutant coming in there on the D Street. Discount at a discount is what the listing happened today. Now, to talk about their overall performance and outlook going forward, what should we be watching out from the company? We have Gaurav Singh, who is the CMD as well as CEO of BlueStone Jewelers and Lifestyle, joining in with us for that. Gaurav, good morning and congratulations firstly in terms of your listing. Muted day coming in terms of the listing today, but a lot to watch out for from the company going forward, right? So let's start by talking about first in terms of overall your profitability. You know, that's what we were talking about even last time as well. Now, you're saying that net losses last time you mentioned mainly was a reason because of the front loading in terms of investments. By FY26, FY27, if you could give us a number, when can we expect the company now to start seeing profits? When will this front loading of investments end?
Sure. I think, so first of all, thank you for hosting me today. It's a big day. It's an exciting day for all of us at BlueStone. And we are excited to be listed in the public markets, and we hope to kind of continue delivering great growth and great results going forward. Yeah, I think one of the things which was talked a lot about was losses, but I think also we need to look at those losses in the right fashion. So in fact, people who are kind of better, who understands accounting, etc., better, who can actually see that there's a multiple non-cash components were also that were sitting in there, which is kind of more of accounting, which is more of because of accounting standards. For example, ESOP losses or ESOP cost, which was I think somewhere around 50-60 crore. For FY26, which is a non-cash, it's more of a remuneration to the early employees, etc., which is there and which generally eases off in a year or two. Similarly, India's accounting, 116 accounting, actually it front loads a lot of rentals. So because of the accounting practices, the rental which is booked in the books is significantly higher than the actual rental that goes out. So I think if you account for a lot of those things, or if you actually take a lot of those things into consideration and then look at YOY numbers, there is a significant improvement. I think so. We'll soon be releasing our quarterly results. Also at that time, we'll be talking about forward projections and forward guideline, etc. Right now, it's just I think it's a little too early for us in the day.
All right. Hi, Gaurav. Good to see you, Win, and congratulations on the listing. A lot of happy faces out there, and good job with the bell. You're giving it a good ring, But the street, when you report your numbers, they'll be focusing on profitability now that you're listed. So we take everything that you said into account. You know, you're indicating a couple of those points are probably one-off in nature. For FY26, the company turns profitable?
See, I still hold back my comment on that to the quarterly results when we declare those in coming weeks. I think we've not worked on that honestly, in the sense that the exact forward commentary that we want to give, though we have the plans etc. in place, and it's going to be significantly better. In fact, last year also, while what the market sees a full year number, but with that 40% growth year on year, if I see the difference between the quarter 1 and quarter 4, that itself is significant. Now, given the nature of disclosure standards, etc., I cannot break down the quarterly numbers when I file my RHP or DRHP, etc. But when I start declaring the quarterly numbers, I think the difference, people will see a significant difference between the yearly numbers and the quarterly numbers themselves.
One number that you can give me is ad spends as a percentage of sales. You know, you told me that's likely to come down. Come down to what levels?
Like I said, I think any of these forward-looking statements would just wait for...
Gaurav, it's permissible now. You're listed. You can give
now you can say whatever you want to say.
It's on board. I mean, you know, when you come to money, we know that it's under regulations. But once you're listed, you can give us aspirations. No problem.
Sure. So I'll tell you a few numbers. So essentially, I think for the last full year, that number was around 9%.
Yes.
On a run rate basis, that number is trending closer to 7%.
Got it.
Okay.
And it's going to come down from there.
Okay, great. Gaurav, you know, what
there's there's significant operating leverage sitting on different
absolutely different levels.
Similarly,
and different
corporate and common cost is also kind of on a quarterly numbers, those are significantly down.
Okay. And Gaurav, what about in terms of the SSSG growth as well? How is that shaping up? How is the demand shaping up? If you give us an indication in terms of that, you know, obviously over the years from FY23 to FY25, I'm seeing a bit of a reduction coming in there. But from here on, is this 32% level maybe something that we'll see this stabilize at?
So we'll definitely see above 20%. So in fact, so far what we have seen is even for the oldest of the cohorts, stores which are open 4 years, 5 years, 6 years back, there also the SSSG was in excess of 20%. So we have never seen any cohort of stores where our same store sale growth has ever dipped below 20%. So I think, and that is something that we continue to see in our current numbers also. So I think SSSG is going to be very, very strong. We are very strongly supported by multiple tailwinds. I think the kind of designs that we operate in, the kind of use case that we operate in, the way we operate, the whole omni-channel behavior, which is becoming more and more commonplace over, let's say, whatever the behavior was around 5, 10, 20 years back, where people would just walk in cold into stores. These days, people actually research online. People do a lot of discovery online, and I think all that is aided us, and all those tailwinds are the ones which are resulting in very strong sales growth. When we see those numbers, we actually see them distilled by different cohorts and so on and so forth. So we have a better understanding of how the granular performance is. I think at a blended level, because we are front loading our investments to grow at a fast pace, some of those numbers are not kind of are fully realized in our P&L right now. But I think the moment we kind of we slow down in percentage terms, so not in absolute terms. So last year when I opened 95 stores, that was on a base of 190 stores. So that's a dilution of almost 50%, or 50% of the existing stores were opened in the next year. This year when we are planning to open 75 to 80 stores on a base of 275 stores, that dilution is significantly lesser. So I think as those, and then also at an increased top line, I think all the common costs like advertising, corporate and common costs, etc., will also start becoming smaller and smaller percentage of the overall revenue. So I think the profitability, there is going to be a very sharp turn to profitability. And I think in quarterly numbers, we'll be able to kind of talk about those in a lot more detail.
You want to give us your market share in comparison to the peer set?
So I think CaratLane and BlueStone are the only two companies which operate in operate in the omni-channel space. I think between the two of us, we have less than 1% of the overall jewelry market share. So I think what's more important is that this new way of buying jewelry, that is catching up. So I think it's less about the share between CaratLane and BlueStone. It's more about together CaratLane and BlueStone, what kind of market share can they generate, or can they garner over years?
Okay, Gaurav.
I think CaratLane did last year with 3,500 crore or so.
Okay, Gaurav.
Ours was around 1,770 crore.
Sure. So we will watch out for more details, Gaurav, and we're going to hold you to coming back after your earnings that you report as well and give us more details in terms of numbers.
I know. So in fact, I'll also get slightly more used to. I'll also get slightly more used to.
Nigel grilling you, that's what you'll get used to it as well.
Gaurav, we look forward to having you back on the channel post your quarterly results or other developments that you will be announcing. For the time being, celebrate with your family, with your team. Congratulations on the listing, and we look forward to chat up with you in the time to come. Thanks a lot for joining
Certainly,
in.
Nigel. Thank you, Nigel. Thank you, CNBC team. Thank you.
Okay, all right. Let's slip into a short break. On the other side, we have Somal Mehta, who will be joining in to give us his technical view on the markets.
Welcome back. Thanks for staying tuned into Chartbusters on CNBC-TV18. As of now, the Nifty is where we started the show with, right? Not much of a move today. 47 points uptick is what the Nifty is managing to hold on to. And clearly that advance decline ratio today also continues to be in the favor of advances versus declines that we've seen coming in. But IT, that continues to be under pressure. Today we're seeing banks. That's also flip-flopping between the red and the green. So keep an eye out on that as well. But now let's bring on board Somal Mehta from Mirae Asset Sharekhan to understand and get a check in terms of the markets and the technical front. What are we watching out for? Somal, good afternoon, and thank you as always for giving us your time. Let's talk about the Nifty as well as the Bank Nifty. What are the important levels that we're keeping an eye out on? Today also, Nifty is around the 24,900 mark, managing to trade above those levels. What is the important level for the Nifty today as well as the Bank Nifty?
Hi, Vinny. Good morning. Nifty has just started a uptrend in the very short term. We've seen a good correction in the last 6 weeks and a positive close last week, which was the reversal, first reversal from down to up now. Triple bottom in the last week around 24,300 levels. So overall, the positive view for short term, for medium term outlook in the Nifty. Bank Nifty has a little bit of concern where Bank Nifty is still trading below 20 and 40 daily moving average. On the other side, Nifty is already trading above 20 and 40 daily moving average. That's one concern. But the positive thing is that PSU banks have just started to move in the positive zone. The Canara Bank, PNB, SBI, they are all started looking really good from these levels. So I'm very positive on the markets at the moment. Nifty, Bank Nifty, both. For Nifty, my targets would be in the very short term, 25,200 would be my target. And above that, the previous swing highs of 25,680 would be 670 would be my targets in the short to medium term outlook. For Bank Nifty, also my targets would be around 56,500. I'm expecting Bank Nifty to start moving up with a positive momentum about 20 and 40 daily moving average. So the strategy should be to buy on declines, and PSU banks are looking great.
Okay, PSU banks are looking great. Strategy to buy on declines. Saumil, what about individual stocks?
Individual stocks, as I said, PSU banks. So first would be Canara Bank. Canara Bank is looking great, just about 20 and 40 daily moving average. A small consolidation has broken on the upside. So stop loss would be 108 and target would be 118. It can go higher as well. But in the short term, the target would be 118. The next stock I have is National Aluminium. Overall, the middle pack is looking great, but this stock has very good risk-reward ratio, taking support at 200 daily moving average. A small consolidation break on the upside. Stop loss would be 185 and target would be 200. I'm looking for a very good medium-term rally as well in this, but in the short term, 200 would be my target.
Okay, Saumil, keeping an eye out on those stocks over there as well. But thank you so much for joining us as always and giving us your time. But now let's shift focus to our special segment where we will get you a few ideas for profit from Money Control Pro. Bharat Giani from moneycontrol.com joins us to talk to us about the stock that he's tracking closely. Bharat?
Today's ideas will be Lemon Tree Hotels Limited. The company posted strong Q1 FY26 results with revenue growth of 18%. RevPAR grew 12%, driven by 6% improvement in both the occupancies as well as the average room rates. Operating margins improved by about 150 basis points, driven mainly by operating leverage due to strong top-line performance. The demand momentum continues to remain strong. The Lemon Tree portfolio at 72% occupancy, there is a significant scope to improve the occupancies at the existing assets. The company aims to add 8,000 keys over the next few years, mostly via the management contract basis, which will also aid the top-line growth. With healthy occupancies at the industry level, the industry is able to sustain the pricing growth, which will also aid in the overall growth momentum. We expect the margins to improve for Lemon Tree as the major innovation exercise gets completed by first half of the next fiscal. Lemon Tree is witnessing about average 15 to 20% increase in the room rates post innovations. This will be a key margin driver for Lemon Tree Hotels. If the GST rate on hotel rooms below 7,500 rupees, which is the mid-market space, is reduced from 12% to 5%, then it will be a big positive for Lemon Tree Hotels, which primarily operates in the mid-market space, as it will help to significantly boost the demand. At the current market price, the stock is trading at an EV by EBITDA of 15 times FY27 projections.
Thanks a lot for that, Bharat. For the time being, though, we'll slip into a short break. We'll come back. We'll get you more news on the markets and stock-specific action. Welcome back. Well, the markets are holding mildly in the green. We're up close to around 50 points or thereabouts. In fact, now we're holding on to those gains as we speak. But heavy rains continue to torment Mumbai as torrential rains lead to heavy waterlogging, transport disruption and flight delays. The IMD has issued a red alert for the city with a forecast of heavy to very heavy rainfall at few places. Santya joins us to fill us in with an on-ground report. Santya?
Heavy rainfall in Mumbai and nearby areas continues on Tuesday morning. The situation has become worse because of the combination of heavy rainfall along with a high tide of over 3.5 meters. Right now we are in Mumbai's BKC area and what you can see in front of the camera is the Meethi River. So this is how bad the situation is. BMC Commissioner told CNBC-TV18 that the danger mark for Meethi River, the danger water level is 4 meters and at present the water level of Meethi River has crossed to 3.10 meters. So that's the situation. Keeping this in mind, BMC has started evacuating the nearby slum areas. People who are not from Mumbai, viewers who are not from Mumbai, there are multiple slum establishments on the banks of Meethi River, and that's why those people are vulnerable, those establishments are vulnerable. Keeping that in mind, the evacuation work has started. Total 5 NDRF teams are deployed in Mumbai alone. Keeping the extreme situation in mind, BMC has declared a holiday for government and semi-government offices, barring those who are a part of essential services, emergency services. Other than this, BMC has made an appeal to all the private organizations as well to give a work from home or a holiday to their employees depending on the nature of their work. As of now, this is the situation of Meethi River. A holiday has been declared for all the schools and colleges, not just in Mumbai but also in Palghar, Thane, Raigad, Ratnagiri and Sindhudurg areas. IMD has issued a red alert for Mumbai, MMR region and North Konkan belt for the entire day for the next 24 hours. Keeping the extreme situation in mind, BMC Commissioner has assured CNBC-TV18 that the entire BMC machinery is on the field to ensure that Mumbaikars don't face inconvenience. Talking about the commute, massive traffic jam on Western Express Highway continues. Local trains on Central Railway are running with a delay of 10 minutes and local trains on Harbour Line are running at a delay of over 5 minutes.
Okay, Santya, thank you so much for that. As of now, a red alert that's come in for Mumbai. So do stay safe if you're traveling as well. But as of now, Nifty managing to hold on to almost 50 points. Bank Nifty, like I said, is flip-flopping between the red and the green. We'll be closing the show with Bank Nifty in the green. But with that, it's a goodbye from Nigel, myself, as well as the team who put the show together. Don't go anywhere. You're trading on. Up next.
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Rima and Hormuz. Good morning, guys. Well, after that stellar rally yesterday, the markets are quiet, but not so quiet as well. We have seen a gain of 50 points on the Nifty as well, managing to be above that 24,900 mark. Bank Nifty has seen a recovery. So off the day's low, around 140 points on the Bank Nifty itself, and that is something which is supporting the Nifty as well. In terms of movers, we have individual names. The auto pack continues to do well after that 4.5% uptick that we saw yesterday as well. The small cap index up 0.5%, and that is one which is outperforming majority of the indices as well. We do have the PSU banking names which are supporting the moves that we are seeing on the Bank Nifty as well. But all in all, it's very sector specific and very stock specific as well. Though earnings are done with, we still have a lot of news flow to talk about.
Yeah, auto stocks right on top. So Tata Motors is your top gainer right now, up nearly 4%. Bajaj Auto, Hero MotoCorp racing ahead with a 2% gain. And then the other big mover is Reliance Industries. And today it's above that 1,400 mark on Reliance Industries. Sectorally, I think the two sectors where things are a bit subdued include the defense and broadly the CPSE index. The Nifty CPSE index is in the red and the defense index too is down close to about 0.5%. But let's tell you what we have for you in the next 1 hour on Trading Hour. First up, we speak to the management of BlueStone on the impact of the likely GST cut for consumer durables. Mukesh Jindal from Alpha Capital will be joining in to decode the latest trends from the space of crypto. Later, Devang Mehta of Spark Private Wealth Management will join in to discuss his take on the markets.
Okay, all right. So that's what we have lined up on the show for you today. But before we go to Hormuz for some of the buzzing stocks that we'll be talking about, some stocks which are otherwise buzzing as well. HPCL, for instance, is up 3%. There's a note today coming in from one of the brokerages which talks about how Russian crude imports continue to be a strategy for all these oil marketing companies. Now, do remember, HPCL has the biggest exposure to the marketing segment. So if they buy cheaper crude and sell petrol and diesel at the prices that they sell at, they will see the biggest benefit on the marketing side, and that's the reason that stock is at the day's high currently. We'll take a look at IOCL and BPCL as well to see how they are reacting to this particular brokerage note that has come by. Both of them at the day's high actually. So IOC up around 1% and BPCL as well will be on your radar as of now. But let's go across to Hormuz. He is here with the other movers that we have in the market. Hormuz, tell us more.
The markets may be quiet, but there is a lot of stock-specific activity that is taking place and on very significant volumes as well. We'll take a look at HLE Glasscoat, and that is the stock at the top gainer on the Nifty BSE Small Cap Index today. There's an acquisition-related announcement that has come and snapped a 3-day losing streak with this 18% move that you're seeing today, almost 19% now. Almost 33 lakh shares have already changed hands in the first couple of hours of trade compared to a 20-day average of just 1 lakh. And this is going to be the first positive annual return that the stock is likely to deliver after 3 years of negative returns. The other outperformer today is GE Power, and the stock was up around 3 to 4% yesterday. It's building onto those gains, 11.5% higher today as well. Almost over 20 lakh shares have changed hands today at a 20-day average of just 2 lakh shares. And courtesy of this 11% move today, the stock has turned positive on a year-to-date basis. And springing up in the list of gainers today is Ola Electric, and that 7% move is the third instance in the last 4 sessions that the stock has gained. We've already had 23 crore shares that have changed hands in the first couple of hours of trade today, and compared to a 20-day average of just under 3 crore shares. And it is exactly a year ago on the 20th of August 2024 that Ola Electric had hit a post-listing high of 157, and since then the stock is down 72% from those levels. And lastly, Motherson Sumi Wiring on our list today. The third straight day of gains. It was up yesterday as well, building on to those gains. Over 1 crore shares have changed hands today, a 20-day average of just around 20 lakh shares. And courtesy of this up move today of almost 8%, the stock has broken above its 50-day moving average on the charts and has also turned positive on a year-to-date basis.
Okay, thank you very much for that. Moving on then, inviting the first corporate on our show, the centre has proposed to cut GST rates from 28 to 18%. And if you fall in the 12% bracket, then it may come down to 5%. Now, the move is likely to spur demand for consumer durables like ACs and others. To understand the impact, the demand trends, we have with us B. Tyagarajan, MD at BlueStar, joining us on the show. Mr. Tyagarajan, always a pleasure to have you here with us on company, the industry. So first tell us, I mean, what is the GST rate that you pay on the finished good and even your various parts, the components that go into the making of the ACs and your products, and what is the expected change to your mind going to be?
Good morning. It's a pleasure interacting with you. Right now, for the room air conditioner and certain type of commercial air conditioning products, it is 28%. And the expectation is that it'll go down to 18%, which means a reduction of around 10%, and that is the expectation. And it's a great move. It will indeed spark demand, especially in a year when the summer had failed and there are stocks in the pipeline, and there is going to be an energy label change that is going to take place on 1st January 2026. We welcome this move that a 28 to 18% will help the industry in a big way.
Mr. Tyagarajan, you said that because of unseasonal rains as well this time around, demand was impacted for room air conditioners. So even if GST is cut, would it spur demand the way it is expected to? Because seasonal changes will mean that we won't require ACs the way we would require it in summers. First question on that. And second is, have you had word with the ministry? Do you think the proposal will actually go through because the states still have to approve this change?
Excellent questions. First thing is, whenever summer season fails, the festival season does well. We are talking about the comparison with the previous year. And we anticipate, even though the summer season sales did not take place, overall, I had stated that full year basis, FY26, 10 to 15% was possible. With the GST reduction, it can further grow. That is the expectation. Now, as far as the ministry is concerned, we are in touch. There are 2-3 problems here. First one is, this is the first time an announcement has been made the GST rates will be rationalized, but the specific date has not been mentioned. There are quite a bit of processes that will have to be completed. So imagine if you are to buy an air conditioner, you will postpone it. So actually the sales are going to come to a standstill. The dealers will not lift the material. The consumers will wait and watch whether it is from 1st of September or 1st of October. And therefore, what is going to happen is August, September sales will be indeed impacted. One will have to go through that. So we are requesting the government that please expedite this decision. Otherwise, consumer durable sales will not be there at all during these months. Second part is connected with, you're right, 28% coming to 18%, whether it is a revenue neutral proposal, in the long run it may be, but in a financial year, it may not compensate the states and they will have to arrive at what they want to do. And what we do not want is that 28 becoming 18 and some cess or something introduced in order to compensate, which will be counterproductive. We have to wait and watch.
Mr. Tyagarajan, firstly, thank you for joining in. And just to play the devil's advocate here and to take forward Sonal's point, the earlier generation was focused more on roti, kapda, makan as the basic necessities, but the generation of today has their priorities completely different. So whether if they want to purchase something, they would purchase it irrespective of the rate or the taxation or whatever. And if there is a saving that they have, they may be wanting to use it for other avenues. So do you believe that the issue surrounding the industry right now is a pure play demand issue and not just taxation? Or do you actually believe that this would actually lead to some sort of on-ground demand revival come the festive season? As you mentioned that the subsequent couple of months might be subdued sales because people would be in some wait and watch mode.
decode this for you. The penetration levels in the air conditioners, the household penetration is in the order of around 8%, so it is bound to grow. Whatever happens, CAGR of 19% between 2025 and 2030 will take place. 1 year it may be a 50% growth, another year it may be 10% growth, another year it may be flat. But the room air conditioner market is destined to grow in the country. There is absolutely no problem. 40% of the sales are taking place through consumer finance, and 90% of the buyers are first-time buyers. And more than 65% sales are taking place in tier 3, 4, 5 towns. More than 80% of the products are entry-level products. So now you will get a picture that this is a category which has arrived and everyone would like to buy it, basically because the temperature conditions are going up and you are getting used to air conditioning in any environment you are in, car or cinema theater or office, so on and so forth. Now, power bills are also affordable thanks to the energy labeling scheme. And for 2 apps, whatever one will pay is the cost of electricity you will pay for using air conditioners for 6 to 7 hours a day. And therefore, I am not worried about the demand. Any benefit like this, income tax reduction or a GST cut, further spurs the demand, given the fact that India is a highly price-sensitive market. And industry requirement was earlier different. Industry wanted 5-star air conditioner or highly energy efficient air conditioners, GST rate should be brought down. But we are getting a bonus that all air conditioners, the rate will be brought down. So this transition is the one that we have to manage. You know, there are many moving parts. One, there is inventory pipeline in the system because summer failed. That is 30 to 45 days, more inventory is available. There is an energy label change that is going to take place on 1st of January. In the meanwhile, this announcement, which is remarkable, has come, but it should be expedited quickly for notification to happen.
Yeah. But Mr. Tyagarajan, since this is the big issue, right? Long-term things, it's a positive, but just in the immediate term, there is a risk of customers deferring their purchases because of this lack of clarity of the effective date. What is Blue Star planning to do? Have you thought of a plan B option to navigate if, things come to a standstill and slow down?
Very little one can do. The first one is, this is not a cost reduction taking place due to input costs, right? It is basically because you are charging a customer, you are collecting a GST, you are remitting it to the government. So the rate change, I won't be able to do anything. The full reduction will be passed on to the consumer, but unfortunately, the effective date is not known. All that we can do is to persuade or follow up with the government to ensure that these changes are effected as early as possible. Here, I cannot even tell the customer, you book now, I will deliver whenever it is required, because he will wait for. There is nothing that can be done. This is unprecedented. The announcement coming without stating a date. You know those days. There will be a union budget. That day, midnight onwards, it will be applicable. Or a GST council meets, that immediately it will come into effect. Here, there is an idea that is mooted, but already stock market or consumers have concluded this is going to be the rate. They will indeed wait.
That's right. Mr. Tyagarajan, that's the big point, right? It's a proposal. There's no clarity on the final date, and that is something which could actually impact demand rather than improving it till the time there is more clarity. So thank you so much for explaining that to us. And of course, we'll have a conversation again when these rates are finalized and what the ground reality really is like when you pass on those cuts in the GST rates, which are proposed as of now. Thank you so much for joining us today with your thoughts. That's the word coming in from Blue Star, but we'll slip into a break now. Up next, we'll focus on the crypto market with Mukesh Jindal from Alpha Capital.
Limited. CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Well, welcome back on Crypto Corner. Today we are joined by Mukesh Jindal from Alpha Capital. Mukesh, hi, thank you so much for joining in. I mean, this is like the new asset class that everybody seems to be talking about, and that is because it's given very strong returns in the last 12 months. From where we stand right now and the conversations around it, would you say that this asset class is not just charging ahead, but slowly getting into mainstream in any sense?
Absolutely, Manisha. In fact, last few years have been fantastic for Bitcoin. Bitcoin has gone up by 7 times in last 2 years, from $17,000 to $117,000. I think it's the newest asset class we have because it came only in January 2009. And your other asset classes like real estate, commodities have been there for thousands of years. Even stock market has been there for 200, 300 years. Lot of investors, in fact, majority of the investors perceive crypto to be a speculative or a scam kind of investment. But let me tell you, it has been in existence for now 16 years, which is a very long period. And globally, it has become very large. Your crypto market cap is now at $4 trillion, which is similar to the Indian economy. Bitcoin alone has a market cap of $2.3 trillion. On perspective, you can think that gold has a market cap of $23 trillion, so it's already at 10%. And now we have Bitcoin ETFs in US and other places. It came last year, and in just last 1.5 years, it has an AUM of $150 billion. It's the fastest growing and the largest ETF in such a short span of period. And $150 billion, just on a context, it's 13 lakh crores. So it's here to stay, and it's also attractive because, see, Manisha, in the last 15 years, out of last 15 years, 12 years, Bitcoin has been the top performer, and it has given per annum return of more than 80%. So fantastic asset class, which investors are considering.
Oh, well, absolutely. Those numbers are bang on, Mukesh. But people or investors are still slightly cautious with the kind of volatility that we see within the asset class. Would you say that seems to be maturing now? Because when you look at the last 2 or 3 years, we are looking at maturity also coming in under control. The credibility clearly has been on the rise. And as you said, the ETF money, the US also pushing with its regulations, friendly legislations has been a supportive factor. So would you say that if there was somebody who wanted to start investing in cryptos, what is the best way to do it? Is it trading? Is it long-term investment? Is it SIP? How would you advise to approach it?
So, Manisha, you're right. The asset class, the Bitcoin, has become relatively stable in the last few years. The volatility has come down, majorly because internationally we have better regulations now, and we have institutional investors investing in Bitcoin through ETFs. Now, for retail investors or HNI investors, my suggestion will be that you need to be more aware about this. You need to spend enough time to learn about it. And my advice will be that you start small. And the best way is that you do a monthly systematic investment plan for next 10 years and forget it. Because as you said, Manisha, the crypto or the Bitcoin has high volatility. It becomes extremely difficult to buy cheap and sell high because it moves very fast. And when you are doing SIP, gradually you get an average out price. And if you do it for 10 years, you're reducing significant risk. What is also important, Manisha, investors should not allocate a large part of the portfolio in crypto. I think up to 5% of the portfolio allocation in crypto or Bitcoin should be fine. So I think if they follow these rules, they should be making money.
Also, would you say that it is about the blue chip cryptos that one should be looking at, because there are about 17,000 cryptocurrencies? India, of course, has much lower as in sense of in which you can invest really. But then again, it's a global market. I mean, it's 24/7 for that matter. But would you say it's the top 10, top 15 perhaps is what you should be looking at?
So in crypto market, you're right, Manisha, we have a lot of altcoins. Altcoins are beyond Bitcoin. And there's only one blue chip, Bitcoin. And that's the most stable, and it has majority of the market cap of more than 65%. And rest altcoins, though there are many, and there are places where you burn your hand, you burn your money. In fact, I myself have burned a lot of money in the altcoins. So one needs to be careful. And my suggestion will be that investors need to follow core and satellite portfolio with 80% of your corpus being in Bitcoin and 20% you can put in altcoins just for fun or to try your luck.
All right. Would you say financial advisors are now looking at this in sense of advising, advocating it to their clients, especially when it comes to India? Because there is institutional buying, there is HNI, even big houses are starting to buy this as well.
So, Manisha, there's a lot of interest from the investors, HNI investors, family offices, they want to buy. The challenge is the regulatory environment, because we know that RBI or SEBI is not a big time, in favor of crypto. So advisors are slightly skeptical. But the challenge on the other side is the new generation investors, the millennial investors, and the next generation guys, they are showing a lot of interest in the crypto. So by default, advisors end up having this discussions. And I think it's high time that advisors equip themselves with enough knowledge to handle the queries of clients on crypto.
Oh, absolutely. Still a bit of a skepticism there, but it seems to be soon catching up with the kind of run-up that we've seen in various other countries coming in. Mukesh, as always, thank you so much for joining in and making sense of that price run-up and how should one really be investing in case of cryptocurrencies. Bitcoin, clearly, as you said, has come up from 17,000 to 117,000 in a matter of last 2 years. So many X of a return coming in on that one alone there. But with that, that's all the time that we have on Crypto Corner today. We strip into a break. We'll come back with more news and updates on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. The markets look to picking up some bit of momentum, and the Nifty now 50 points higher. 24,930 is where the index stands. Mitesh Thakkar joins in for a quick chart check. Mitesh, good morning. 25,000 still a barrier for the Nifty. What's your call here now after the move that we saw yesterday and a bit of it today, and your stock calls as well for the morning?
Yeah. So my view, I think, is slightly positive. Very clearly, the big movement which happened on Monday, which is yesterday, has changed the direction on the upside. In fact, I was indicating that on Thursday as well, that the hourly and 2 hourly indicators have started moving up from oversold levels. So good chance of a bounce back taking place. Now, the first targets were around 24,950, 25,000. They were met. And now I've revised them to about 25,250, 300 on the upside. So I think we're heading towards those levels. And as long as we are about 24,800, 840 zones, any declines or pullbacks to those levels would be a buying opportunity. So very positive over there. On the stock side, Aditya Birla Fashion, that's a buy with a stop at about 76. Look for targets of around 81, 82 to begin with, maybe more. And the other stock which I like, that's Jindal Steel and Power. That's a stock, which has been consolidating and not breaking beyond 1,010. So I would keep a trigger, buy about 1,010, 12, keep a stop at about 995 and look for targets of 1,045 once the breakout takes place.
Okay, all right. Thank you, Mitesh, for joining us. So that is a technical take on the markets. But let's talk about all the trends from the F&O space. Sudarshan is joining us now with just that. Sudarshan.
So Nifty is higher largely on the back of the gain that we are seeing at Reliance Industries because it's the biggest contributor to Nifty. But the good part is that big gain is coming in the mid-cap index that is keeping market breadth in favor of advances. There is not much indication. If you look at the PCR data, it's almost the same level that it was yesterday. Even volatility index, it has slipped below 12. It's currently down almost 3%. But the interesting data is coming from the options front. That straddle play, it's like if you look at 24th and 900, both side, call side and put side, it's the day of writers. So premium is down for both these 24th and 900 call and 24th and 900 put options. So now downside becomes very important level, that is 24,753. So at this point, it looks very difficult for Nifty to slip below that level, and that is also technical wise. If you look at it, it's 20-day moving average. And on the upside, immediate resistance would be around 25,020. That is the 50-day moving average. If we manage to cross that comfortably, next resistance level comes around 25,250. That is the recent high. Two stocks that I have taken, one is Inox Wind, that is seeing fresh longs, and on the short side, that is Nuvama, which is seeing fresh shorts.
Inox Wind seeing fresh long positions. Darshan, thank you for that update there. We'll take a short break. On the other side, continue our conversation on the markets with Devang Mehta of Spark Private Wealth Management. Stay tuned. Welcome back. 24,940 now on the index. So a 10-point move over the last couple of minutes that you've seen on the Nifty. But a day that has been dominated by auto stocks yesterday. They're building on to those gains today as well. And that is the big story of the day on the show today. The second straight day of gains for all of these auto stocks. Sudarshan is here to tell us what exactly is driving this move in these auto names. Sudarshan.
So it's another day of big gain that we are seeing in the auto sector. And yesterday, if it was about GST rejig, today it's a different topic. Now, what sources indicate that Indian foreign minister had a meeting with Chinese foreign minister, and in that meeting, Indian foreign minister has raised few issues, and in that it also includes rare earth magnet supply. And now sources indicated there is a confirmation from China's side that they will look into the issue related to rare earth magnet supply shortage that sector auto companies have been talking for the last few months. And when they had indicated that if this supply issue persists, they might have to go for production cut. But now with this news, we are seeing a big move, not only in the major auto companies, but also auto ancillaries. So this is the news. On the back of this, we are seeing a big gain.
Okay, so Sudarshan, which would the players be which are expected to benefit if rare earth magnet curbs are lifted?
So normally it's the biggest beneficiaries are the companies which have major exposure to electric vehicles, and those companies are like, if you take a look at the incumbent players, Tata Motors has the biggest exposure in the form of JLR. Second, Ola Electric is there. Even Mahindra and Mahindra, after the launch of 2 BEVs, even they have the huge exposure. Apart from this, the companies which are having the hybrid vehicles, and in that list, Maruti comes on the top, because if you talk about the Indian company, it's one company which has the biggest exposure in the hybrid segment. Apart from the main auto companies, it would benefit auto ancillary company as well, like Endurance Technology, Motherson and Bosch India, because they also supply auto parts in which they do require rare earth magnets. So overall, it would be positive not only for major auto companies, but in the entire auto pack, which will include auto ancillaries as well.
Okay, just one quick word. Everyone's looking ahead to the festive season and whether that's going to bring good news for automakers. I mean, looking ahead, what are we watching from the auto sector?
You know, yesterday I was talking to Ashok Leyland management, and after GST rejig, one big point that he has mentioned, there are chances that outlook for the sector can be increased further if GST rejig and also RBI action that he has indicated. So if these two actions materialize, there are chances that CV outlook that currently industry has of mid-single digit, it can be increased further. Even PV outlook can be increased because of the demand can improve if GST cut comes. Also, RBI action will lead to overall increase in the demand. So apart from this GST rejig, RBI action, normally ahead of the festive season, demand improves, and amongst the biggest beneficiaries if the demand improves ahead of the festive season would be the companies having huge exposure in the entry-level segment. So that's the reason over the last few days you would be seeing big move in companies like Hero MotoCorp and Maruti Suzuki. But overall, whatever the news flows we are getting over the last few days, it's positive for the entire sector.
A positive for the sector indeed, as the Nifty Auto Index now 4th day of gains out of the last 5 trading sessions. So Sudarshan, thank you for summarizing this move that we are seeing in this auto sector. That's our big story of the day, and that's the first question we also ask Devang Mehta from Spark Private Wealth Management, who is joining us now. Devang, good morning. Thank you for joining in. It's been the sector that has been in the spotlight now, Devang, this auto sector. First with regards to this potential GST cuts, now with regards to this potential lifting of curbs on the rare earth magnet exports as well. Do you see that all of these steps that have been taken in the last couple of months, even with regards to the income tax cuts for that matter, provide a boost to the sector ahead of this upcoming festive season?
Morning. Thanks for having me on the show. Always a pleasure to be on CNBC-TV18. Yes, ideally, whatever news flow we are seeing in the last couple of days, let alone be GST, but be it the progress of the monsoon, be it the rural India coming out of stress because of one monsoon, second of demand situation improving a little bit. I think whatever sectors are coming back to the fore are sectors which primarily did extremely well from 2003 to around say 2021-22. Post that, I think 2-3 years of strong headwinds for the auto sector, where those selective companies came out and delivered good numbers and came up with aggressive, great models which found favor in the market. I think the trend has completely changed, right? People used to buy hatchbacks, and now I think the elite Indian consumer, aspiring Indian consumer, is now buying more SUVs. My sense that a combination of good urban consumption, good rural India coming back to the fore, I think people are wanting to find substitutes for sort of discretionary consumption, and what better than auto, right? So India still today has per capita in terms of auto super less penetration than what we talk about the developed economies or certain developing nations. So my sense that this icing on the cake which government has tried and provided, if this comes through in the next 1 or 2 months, I think this will augur extremely positive. Macro conditions are positive. RBI has been on a rate cut spree. There is liquidity across the companies' balance sheets are, I think, quite powerful right now. And with the launch of new models with all these companies, I think there is a revolution which is also going to come into EV. So my sense, this sector probably will be beneficiary. Don't look at the short-term repercussions that the stocks have bounced back. But I think this probably seems to be getting into a structural next couple of years. Really, that's what seems right now.
Devang, hi. What would your call be on consumer durable companies? We were just chatting with Blue Star and we were discussing, about this GST rationalization. If the GST rate on room air conditioners comes down from 28 to 18%. While it's good news on paper, the cost comes down for consumers. In the interim, because there is lack of clarity on the effective date, customers might choose to defer their sales. And therefore, if we don't get clarity, then there is a possibility the whole festive season on which the demand rests could be a washout. And there's not much companies like Blue Star can do. I mean, how are you thinking about this issue for consumer durable companies?
Yeah, Rima, very well said, and that is a distinct possibility which can happen, that probably people defer their demand. But what I see for the Indian consumer right now is that I think there has been a lot of pent-up demand for this type of goods over the last 3-4 years, and quarter over quarter, generally we have seen a decent set of numbers coming from this type of companies. But yes, that's very well said. If the clarity does not emerge soon, probably there will be a couple of months of a dull run. But again, market is a discounting mechanism, and the stock prices would sort of not correct big time, because markets know that if people defer their demand, and this cut even comes through probably in the last week of September, or probably even in October, I think then there will be a lot of pent-up demand which the companies would sort of benefit from. Yes, but at the expense of saying that this quarter can be a bit of a drag if clarity does not emerge soon, that can happen. But I think market will take it with a pinch of salt.
Okay, yes, that's exactly the point, because it's still proposed and there's no specific date that has come by as well. Devang, what's your take on oil marketing companies? They have been surging. There's a note suggesting that Russian crude oil purchases would continue, and that's something which would aid their margins. Do you think the triggers for these companies is already priced in, or there's still more room for improvement from here on?
So that ideally, yes, probably there can be some more headroom here. I think what one crude has cooled down around 66, 67 Brent as we talk. Yes, India probably is still on a superb wicket in buying oil from Russia. That's also played out very well. Having said that, these are more thematic or more tactical plays that one should engage into, because if somebody takes a structural conviction call, that is going to be difficult on OMCs, as there is always a crude price pressure that comes onto it. There is always a government compulsion or a regulatory thing which comes in and sort of deters the sector. So as I said, it will be more tactical in nature for the portfolios, but there are n number of great themes available right now, domestic centric themes. Consumption has again come back to the fore. There is capex. There are capex companies which have come up with good set of numbers, be on execution, be on order book. I think I'll probably set my sight in lot to do with consumption, capex, and a bit of financialization candidates rather than being into OMCs for a long-term play. Yes, as I said, it can be more tactical.
Devang, correct me if I'm wrong, but another sector which is difficult to make a structural conviction call is metals, right? Because there are so many moving parts to this sector. What's your call here? And is there or are there sectors where you are betting on as of now, considering the changes that you have seen taking place over the last 1 month?
Yes, so I think we've been very vocal saying that anywhere where there are global linkages can be more tactical, can be sort of more a type of, I'll not use the word trading, but it will not be sort of an investment thesis which one could lay down over there. So in that parlance, yes, we generally have been avoiding something like IT since long. I know that probably the valuations are now probably at a level where a lot of people would buy it, but we are still, as I said, avoiding things which have global linkages. Coming back to the sectors that which we are probably showing strength and we are quite confident on. We feel that typically micro sectors in India, a lot of sectors, I'm not talking micro caps, but a lot of sectors which are probably proxy plays, the first mile proxy play, be it for semiconductors, be it for engineering, be it for manufacturing, be it for stamping, lamination, power automation, cryogenic equipment, port infrastructure. These are companies which probably, if the consumption universe also starts showing strength, there will be a lot of manufacturing which would be done. There are a lot of linkages internally also. So financialization candidates like depositories, like some AMCs, financial intermediaries. These are companies where I think you can lay a lot of strong foundation. All these companies typically would probably have the top line growth anywhere between 12-15% and bottom lines anywhere between 18-22%. So my sense, more domestic centric candidates, oriented, capex oriented companies, consumption we are trying to find out. Yes, the view does not change, but we would love to add certain consumption names in the portfolio. If there are not, we have some consumption names, of course, but we are on the lookout for more consumption type of candidates as the things seem to probably change also on the demand front and also on the GST front.
Okay, all right. Thank you so much for joining us, Devang. So that's a market conversation. But it's time for a short break now. We get you an update on the Mumbai rains on the other side.
Welcome back. The other big story outside of markets is heavy rains, which continue to torment Mumbai. Torrential rains have led to heavy waterlogging, transport disruption, flight delays. The IMD has issued a red alert for the city with a forecast of heavy to very heavy rainfall at a few places. Sandhya now joins us with a ground report.
Heavy rainfall in Mumbai and nearby areas continues on Tuesday morning. The situation has become worse because of the combination of heavy rainfall along with a high tide of over 3.5 meters. Right now we are in Mumbai's BKC area, and what you can see in front of the camera is the Methi River. So this is how bad the situation is. BMC Commissioner told CNBC-TV18 that the danger mark for Methi River, the danger water level is 4 meters, and at present the water level of Methi River has crossed to 3.10 meters. So that's the situation. Keeping this in mind, BMC has started evacuating the nearby slum areas. People who are not from Mumbai, viewers who are not from Mumbai, there are multiple slum establishments on the bank of Methi River, and that's why those people are vulnerable, those establishments are vulnerable. Keeping that in mind, the evacuation work has started. Total 5 NDRF teams are deployed in Mumbai alone. Keeping the extreme situation in mind, BMC has declared a holiday for government and semi-government offices, barring those who are a part of essential services, emergency services. Other than this, BMC has made an appeal to all the private organizations as well to give a work from home or a holiday to their employees depending on the nature of their work. As of now, this is the situation of Methi River. A holiday has been declared for all the schools and colleges, not just in Mumbai but also in Palghar, Thane, Raigad, Ratnagiri and Sindhudurg areas. IMD has issued a red alert for Mumbai, MMR region and North Konkan belt for the entire day, for the next 24 hours. Keeping the extreme situation in mind, BMC Commissioner has assured CNBC-TV18 that the entire BMC machinery is on the field to ensure that Mumbaikars don't face inconvenience. Talking about the commute, massive traffic jam on Western Express Highway continues. Local trains on Central Railway are running with a delay of 10 minutes, and local trains on Harbour Line are running at a delay of over 5 minutes.
Sandhya, thank you for that update. And in fact, Sandhya shared another very important update just a few minutes earlier, that the local train services on the central line between Sion and Kurla have been suspended, and the Harbour Line train services up to Mankhurd have been suspended. So important updates coming in on the central line and the Harbour Line as well, because of this torrential rainfall that is currently lashing the city of Mumbai. We'll get you more updates on the other side with regards to the rain and the markets. Take a short break. We'll be right back.
Welcome back. 80-point uptick on the Nifty, and it's led by some recovery we are seeing in the Bank Nifty as well. So the likes of Kotak Mahindra Bank, IndusInd Bank, all of them at the day's high. Reliance Jio is supporting the gains that we are seeing. Mid caps outperforming, so are the small caps. So with that, we'll take your leave on this edition of Trading Hour. But stay tuned. Halftime Report is up next, takes all the action ahead.
Hopes of a Russia-Ukraine truce and India's engagement with Russia and China offer positive backdrop for gains as local policies seek to boost consumption. Auto, energy and telecom gain, but durables and pharma drag.
Sources tell CNBC-TV18 that the Chinese foreign minister has provided India assurance on fertilizers, rare earth magnets and tunnel boring machines as well. Now, the likely easing of rare earth magnet supplies first fires up auto stocks.
Shares of telecom operators Bharti Airtel and Vodafone Idea, as well as of Jio parent Reliance Industries, rally on expectations that higher data usage will help lead to tariff repair, with customers moving to higher GB plans.
And SEBI has proposed easing IPO norms for large issuers by lowering the dilution amount to as low as 2.5% for companies with more than rupees 5 lakh crore market cap, and extending timeline for compliance with minimum shareholding to up to 10 years. Hello and welcome to Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Ekta Batra as well. Ekta, yesterday surely a good day that came in. Today, we started with the green, not bad, 50 points uptick was there, and now we've inched up a bit as well. Moving towards the day's highest point, if you look at it in terms of the market, more closer to the 25,000 mark now is what the Nifty is trading at, up 0.4%. Bank also has recovered from the day's lowest point. It was flip-flopping between the red and the green, now comfortably in the green, 0.3% of gain. Good afternoon.
Hi, Vinny. Yes, absolutely. What we are seeing is follow-on buying after yesterday's trade as well. So that is indicative of the sense that maybe there is some amount of risk on, which is back on the table. But let's see. We also had the FIIs, which net bought around 550 crores in yesterday's trading session. So that too, let's see whether that sustains or whether there's any kind of momentum change, which is significant enough when it comes to the FIIs. The Nifty hovering around 25,000 as we speak. The mid-caps are marginally outperforming in today's trading session. So maybe the mid-cap index should show up for you, up around 0.6% at this point, and an advanced decline ratio, which is extremely firm on the advancing side. So that stands at around 2:1, 2,400 odd stocks advancing to around 1,600 stocks declining. And you can see that there's a huge gap between the green and the red line at this point in time. And let's see, seems as though it'll probably sustain us through as we go along. With the big trigger, obviously, we will be watching in terms of developments between Russia and Ukraine, and what the repercussions could be on a geopolitical front. So that would probably be the key factor to watch out for.
Absolutely, that is what we'll be keeping an eye out on. On that note, let's get started with the show with our movers and shakers segment, where we track a whole host of stocks that are buzzing in trade on the back of news flow. And first up, let's talk about auto stocks, right? Whether you look at Motherson Sumi Wiring, we have Ola Electric, Electra Green Tech, all these stocks are buzzing in trade. Now, what are the sources saying? That China may actually lift curbs on rare earth magnets. For more details on this, let's go across to Sudarshan. Good afternoon, Sudarshan. All of these stocks are, running away in trade today. What are these important details we should keep an eye out on now?
Good afternoon, Vinny. So another day, another positive news for the auto sector. If yesterday it was about GST rationalization, today it's about rare earth magnet issue. Now, what's the update? Sources indicate that Indian Foreign Minister had a meeting with Chinese Foreign Minister, in which Indian Foreign Minister has raised few issues, and that include rare earth magnet supply, to which he got the assurance from Chinese Foreign Minister that China will be looking into this issue. Now, market is expecting that China may lift curb on rare earth magnet supply. Remember, China almost controls 70 to 80% of rare earth processing. Now, if this curb is lifted, it will be positive not only for the major auto companies, but also for auto ancillary companies. But the biggest positive or biggest beneficiaries would be companies which have the major exposure to EV sector. So if you can see, top Nifty gainer is Tata Motors, up more than 3%. It has huge exposure to EV in the form of JLR. Even Samvardhana Motherson is up more than 3 to 4% because it has some of the clients which has huge exposure in EV. Then Sona BLW is up almost 3 to 4%. It's the same story that Samvardhana Motherson has. So that's one of the major reasons today all the auto companies you are seeing trading with big gains.
Absolutely.
Okay, all right, Sudarshan, thanks very much for that. In fact, the Nifty Auto Index up around 1% today, but it's already rallied 5% this week, and on a month-to-date basis as well, it's up around 7.5%. Let's not forget, year-to-date, it's gained around 11%. So the Nifty Auto Index building on in terms of gains today. But the other segment which is really in focus is textile companies, and we're covering that on our Movers and Shakers segment, as the government has scrapped the duty on cotton imports till the 30th of September. Vinny, tell us the impact.
So absolutely, this is some positive move finally coming in, right? Given those, US tariffs, the concerns around that front, especially for the textile industry, was major. Now, government has said that they will be scrapping duty on import of raw cotton, and this is going to be till 30th of September, starting with effect from 19th of August. So this scrapping of duty, as well as there's going to be scrapping of agriculture infrastructure development cess. This is also a part of it. So this both will be scrapped for a period of around 42 days. Now, the custom duty on imports of cotton was currently at around 11%. So at least for this 40-day period around, where these textile players may get some relief that comes in. And this move mainly was aimed to mitigate the pressure that was coming in on this industry due to that 50% tariff that may come into effect, which is imposed by the US government. So that was a concern, and we had spoken to a whole host of textile companies which also sounded this concern. So maybe at least some bit of that relief that comes in for this textile chain. So whether you look at yarn players, fabric, garment players, made up garments as well is what they're looking out for. So Gokuldas Exports, Vardhaman Textile, Wellspun Living, all these are buzzing in trade on the back of the ceasefire.
Okay, all right. So all of those textile stocks in focus. But Rima, over to you. Jio's new effective entry level plan online is available at around 299 odd rupees. Give us a sense in terms of why Jio is in focus today and hence Reliance Industries.
Thanks so much for that. So Jio has tweaked its prepaid pricing, especially at the entry level. Now, earlier, the baseline or the entry level tariff was you get 1 GB of data per day for 22 days. If you take a 22-day pack, you pay 209. If you take a 28-day pack, a 4-week pack, you have to pay 249. The change is that these entry level plans are still available in a store. You go to a point of sale, a POS store, physically you will get it. But online, these plans are no longer available. Online, if you want to recharge a prepaid card, then the cheapest plan is now a 299 plan. But the change is earlier for 249, you were getting 1 GB of data. Now for 299, you're getting 1.5 GB of data. So effectively for the online medium only, for online recharges, the 1 GB per data plan by Reliance Jio no longer exists. Now this is a positive because indirectly this is a tariff increase. According to certain estimates by brokerages, this can benefit Jio's ARPU anywhere between about 4 to 7%, which is why you are seeing the stock price do well today.
Okay, Rima, just want some more details also on, is there a case for Bharti and VI to scrap this 1 GB day plan as well then?
So, as I was explaining, now for Reliance Jio, online, if you want to recharge, you no longer have a 1 GB data option available. But for Bharti and Vodafone Idea, you still do. They still offer a 1 GB data plan per day, which is priced at 299 rupees. But if they decide to scrap it and they move to 1.5 GB of data, that means then the price goes up to 349. And here we're asking the question that after Jio has moved on tariffs, will its peers, its competitors also move on the tariff front? And the argument that people are saying is that possibly yes, because the industry has been calling for tariff repair, they've been talking about ARPUs inching up, and plus data is now become such a necessity. It is a requirement. Our data consumption has been going up day after day. So therefore now it's no longer an option to downtrade, to say that I don't want to pay more, I'm willing to do with less data for the same price. And therefore analysts are pointing out there is a possibility, or there is a case for its peers also perhaps to discontinue the 1 GB data plan, that's Bharti and Vodafone Idea, and maybe move to 1.5 GB of data per plan. If that happens, again, like in the case of Reliance Jio, you will see an ARPU boost even for Bharti Airtel and Vodafone Idea if they decide to follow suit.
Okay, all right, Rima, thanks very much for that. And in fact, Sudarshan as well as Vinny for joining into our Movers and Shakers segment to give us all of the buzzing stocks at this hour. Well, we'll take a short break, but we'll get you more on the markets and also focus on the monsoon mayhem playing out in the city of Mumbai and Maharashtra.
Welcome back to Halftime Report on CNBC TV18. Markets have inched up a bit more when you're looking in the last 15 minutes as well. Now at 24,974, 0.4% of gain. Day's highest point is what the Nifty is trading at. Nifty Bank also has seen a good move coming in specifically in the last 30 minutes when you would look at it. And Nifty Bank is led by gains that came in for Kotak Bank, whether you look at it, that's buzzing in trade. We have Canara Bank, Federal Bank. All of these are managing to hold on to very strong gains. So yes, a good move that we're seeing coming in overall. But let's also pull up Devyani International. That's one stock that's buzzing away in trade as well today. A sharp up move that we're seeing coming in specifically for Devyani International. No specific news flow that we're seeing right now come in, but as of now, holding on to gains of 7% in today's trading session. But let's talk about the rains and the heavy rains that are happening and we're seeing and tormenting Mumbai since the last couple of days. Now, as these torrential rains lead to heavy waterlogging, transport disruptions, flight delays, the IMD has issued a red alert for the city with a forecast of heavy to very heavy rainfall at a few places. Now, Santya is joining in with us for a ground report coming in from the Andheri subway side. And what's the latest update there, Santya?
Heavy rainfall in Mumbai, MMR and other parts of Maharashtra continues on Tuesday as well. Right now we are in Mumbai's Andheri area, and this road goes toward Andheri subway, but due to waterlogging caused by heavy rainfall, this road has been shut by the local administration. IMD has issued a red alert for Mumbai, Palghar, Thane, Raigad and other parts of Konkan belt. And keeping that in mind, Maharashtra government has declared a holiday for all the schools and colleges in Mumbai, Palghar, Thane, Raigad, Ratnagiri and Sindhudurg. BMC Commissioner told CNBC TV18 that there are 235 water pumps active in Mumbai right now to ensure and to prevent waterlogging as much as possible. But due to the heavy rainfall, you can see that all the low-lying areas are, there's massive waterlogging in all the low-lying areas, especially areas in western suburbs. As you can see, this is how Andheri is looking like, this part of Andheri is looking like right now. Other than this, areas like Hindmata, Dadar, parts of Parel, parts of Science Circle, Gandhi Market, all these areas continue to witness waterlogging. Maharashtra government has requested all the citizens to ensure that they take all the precautionary measures, and they have requested the citizens to do not step out unless it's absolutely necessary. Maharashtra government has also deployed 14 NDRF teams all across Maharashtra. Out of these 14 NDRF teams, 5 are deployed in Mumbai to ensure that heavy rainfall, any untoward incident can be avoided. But as of now, people continue to suffer. There is massive traffic jam on the Western Express Highway, and trains, local trains on the Central Line are delayed by 10 minutes and local trains on the Harbour Line are delayed by over 5 minutes.
Okay, all right. Thanks very much, Santya, for getting us that update from the rain itself. But we also, in fact, spoke to Shubhangi Bhute, who's the head of the Western Zone IMD, about the weather conditions. Listen in to what she had to say.
As of now, depression has been formed over Bay of Bengal, and it is moving northwestwards, and associated cyclonic circulation is also there. Along with that, wind shear is there, which is very much favorable for the extremely heavy rainfall over the Konkan region. For the Mumbai, we generally find this situation along with this offshore trough, which is very active. We can see that winds are quite in our rainfall along with it. This is a typical synoptic situation where Mumbai gets extremely heavy rainfall, which has been realized today morning. Scattered extremely heavy rainfall has been there, and this situation is likely to continue for today, from 8:30 of today to tomorrow 8:30. But the intensity of rainfall may decrease after evening.
Okay, that's the update coming in there from IMD. But on that note, we're going to slip into a very short break. And after the break, we'll have Sachitanand Dutekar from Trade Bulls, who will join us to give us the strategies that we should be keeping an eye out on the technical front.
Welcome back. Well, definitely picking up pace for the markets as we speak. So we have the Nifty, which has now hit 25,000. Remember, we hit 25,000 on an intraday basis yesterday, and we've managed to recapture that level. So let's see whether that sustains or not. So up around 0.5% currently for the Nifty. We have the mid-cap index, which is picking up pace as well. So up around 0.7% or nearly to that level as we speak. So up around just about 0.7%. The Bank Nifty up around close to 200 odd points. If you're talking about the key gainers within the Nifty constituents, you are seeing follow-on buying, which is taking place for Tata Motors. So that one is the top gainer of the Nifty, up around 3 odd percent. We've been talking about the entire auto space, which is buzzing, and that's being led by Tata Motors. Reliance Industries is up around 2.5 odd percent. So that big boy, which has gained around 16% this year, is up around 2.5 odd percent at this point in time. Adani Ports, Bajaj Auto, Adani Enterprises, all of these stocks are showing gains of anywhere between 1% to around 2.5 odd percent at this point. So good going for the markets. We're definitely seeing some amount of momentum on the upside. And like we pointed out, the advance decline ratio, there's a huge gap between the greens and the reds, or the advances and the declines. And that's continuing to sustain, in fact, probably getting better and wider as we speak, giving you a sense of the momentum that we're seeing in the broader market. So that's the update coming in on the markets. Good going, 25,000 is possibly just about here at an intraday basis. But we do have Vimakshi now joining in to tell us about all the other stocks that are moving around in trade. It's a very active day of trade. She's here at the wall to tell us what she's tracking. Vimakshi, over to you.
Well, absolutely, Ekta. Let's first look at Tata Motors. The stock, like you pointed out, is buzzing in trade today. Remember, it's the 6th consecutive day of gains for this particular counter. Of course, this comes in after sources suggest that the Chinese foreign minister has assured India of addressing the rare earth magnet import issue. And given the exposure that Tata Motors has to the EV space, the stock is flying away in trade today. In fact, this is the biggest intraday rise that we've seen since May 15th of this year. The other stock that we're watching out for is IFGL Refractories. Earlier in the day, the stock was up almost as much as 20%. It's holding on to that gain as of now, locked in that upper circuit. In fact, this is the biggest intraday jump that we've seen for this counter since May 12th, and around 6.3 lakh shares have been traded so far, which is almost 16 times higher as compared to the 30-day average. So the up move is coming on the back of very strong volumes for IFGL Refractories. The other counter that we're watching out for is Vardhman Textiles. Now, the government has temporarily scrapped import duty on cotton imports. This bodes well for the company, and in fact, driven by this news flow, the company has posted the biggest intraday advance since April 3rd, and in the last 2 days itself, the stock is up as much as 11%. Last one we're watching out for is Devyani International. The stock has perked up in trade today, up almost 7.5%. This is the biggest intraday rise that we've seen since Feb 1st, and this is coming on the back of very strong volumes. The trading volumes are almost 7 times the average for this time of the day, but on a year-to-date basis, the stock is still down almost 8%.
Okay, Vimakshi, thank you so much for that. Important to keep an eye out on all those buzzing stocks. But what are we watching out for in the world of F&O now, given that we're seeing a bit of a run-up that came in again in the markets as well in the last 30 minutes? 25,000 has come in again, Nigel, today. Now, what are the keys to watch out or levels to watch out for, as well as in the F&O strategy? What are we keeping an eye out on?
Well, Winnie, if you looked at it yesterday, that was a bit of a teaser you saw with regard to the short covering. And if the bulls have the momentum, and you can push this market up, the entire movie will play out. And this market is aggressively net short. Those shorts will be forced to cover out. And just take a look at what's happened today. The Nifty is higher. There's some mild open interest down. That's telling you there is a bit of covering out there. The Nifty Bank, in the last 2 weeks or so, that was a relative underperformer. That's come in for a bigger short covering bounce. Even at the start of today, it underperformed a little bit, but you can see that one has perked up and the open interest is down by close to around 2%. Now, it appears on the Nifty, there's a strategy that's playing out, which is a short straddle. What is that? The 24,900 call, 24,900 put. You pocket the premium of both of them. That's nearly around 210, 220 rupees or thereabouts. And then you're hoping that the Nifty expires in the next 3 sessions in a particular range. And take a look at it. On the put side, there is aggressive writing that you're seeing, because the premium has come down sharply out there and there's a massive open interest build up. But on the call side, keep in mind 24,900 call, you're in the money out there. And yet the premium out there is more or less flattish. So the bears are giving an equal fight over there. Otherwise you've got the direction right in the money call option, but the IVs have come off a little bit. There is writing that we're seeing at this strike as well. And if that short straddle is at play, you pocket 200 rupees, 24,900, minus 200, which gives you around 24,700, and you add 200, which is 25,100. So that's the broad 400-point range you're working with, if in case the short straddle is at play. Moving to the Nifty, well, we've conquered the 20 DMA. The 50 DMA is something that we'll be looking at. So that's the next resistance mark. While on the Nifty Bank as well, you've seen a good bounce. You know, that in fact is just on the verge of taking over the 20 DMA, but the 50 DMA remains a little bit elusive out there. So keep an eye out on both those two technical marks. Stock futures, Paytm, that's come out of nowhere. You know, it's seeing a lot of buying interest today, and there's a massive open interest build up as well. So fresh long addition is what you're seeing on Paytm. PNB Housing Finance, that's the stock I highlighted in the final 30 minutes of trade yesterday. I said this is the one that's likely to come out of the F&O band. Now, since it's come out of the F&O band, it has valuation comfort, and the street is waiting by for the next CEO announcement. That stock is one of the biggest gainers today after coming out of the F&O band. The shorts in the system are getting a little bit nervous. And today I'm saying watch out for PG Electroplast. Why is that? There were massive shorts in the system. Now that appears, at least as of now, at the calculation as of now, it appears it's a candidate to come out of the F&O band. Remember, another heavily shorted counter. So I'll keep an eye out on PG Electroplast as well. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's what's taking place in the F&O space. Let's get a technical check-in now. We have Sachidanand Untikar joining in from Trade Bulls to tell us what he's tracking this afternoon. Sachidanand, welcome to the show. Well, we were just, Nigel alluded to the 50 DMA for the Nifty, which stands at around 25,018. What's your sense? How important a level is that? And do you think that we're going to get there soon enough?
Good afternoon, Ekta. Good afternoon, Vinny. I've been following the 20-day exponential moving average on the exponential side, which is placed at 24,770. And that particular mark has been, convincingly breached. The Nifty is trending above the same as well. When we look at the 50-day exponential moving average support, I think that is placed somewhere close to around 24,820. So unless we don't see the Nifty, falling below this particular level, the trajectory remains on the positive side. If you look at the overall consolidation today, 24,900, 24,850, the put writing action has been very significant, and we are of the opinion that eventually the Nifty will scale towards 25,160, which is the overall retracement resistance of the fall that we have seen from 25,670 towards 24,340. So I think the market is finding a good support here. The supports are rising. Right now, what we are observing is that 24,850 is an ideal support below which the trend momentum may change. But as of now, the data is convincing enough that this particular rally may continue towards 25,160 and may also extend towards 25,400. So the bias for the Nifty remains positive. Even if you look at the Nifty Bank, the 50-day exponential moving average is acting as a resistance. 55,850 would be a critical mark above which we may see, a good short covering move unfolding. But this particular level has to be, managed on a closing basis. On the lower side, 55,820, 840, which is the 20-day exponential moving average, I think this particular support is very strong as of now. Even if you look at the convergence of the short-term averages, it is indicating that sooner or later we may see again one more swing of momentum in this particular pocket. So we are expecting that the rally in Nifty Bank may also stretch towards 56,500. So we are expecting both the indices to scale higher. From a trading perspective, for the Nifty, one can keep a stop loss at 24,880 on a closing basis and review positions at 25,160. For the Nifty Bank, the stop loss should be placed at 55,700 on closing basis, and positions can be reviewed once the Nifty Bank starts scaling towards 56,500.
Okay, those are the levels we'll keep an eye out on. But Sachidanand, talk to us about your trading strategies, as well as, if you could see the charts for Devyani Internationals as well. That's buzzing in trade today. It's up 8%. But overall, when you're looking at it month-to-base basis or last year also, it was not doing anything exciting. So on the charts for Devyani also.
Sure, Vinny. First of all, the two stock ideas that we are convinced, where we expect a good, strong momentum rally. The first one is Tata Motors. Now, this particular stock is showing fresh signs of a impulse. If you look at the overall structure, a 14 days decline has been covered within 6 days of up move. So this is a very strong sign of a reversal. If you look at the weekly RSI, it has given a breakout above that 50 mark on a fresh note. So we are expecting that the rally in this particular counter could stretch towards 735 levels, where its 50-week exponential moving average is placed. So we are recommending building long positions in Tata Motors, keeping a stop loss at 688 on a closing basis. The other stock on our radar is BSE. Even here, if you look at the consolidation for the last 4 weeks, it has been very healthy. Its daily RSI is now trending confidently above that 52 mark. If you look at the averages, there is a good strong convergence of its 5 and 20 exponential moving average, somewhere close towards 2480 levels. So we are expecting that this particular support base may hold, and we may see a rally in this particular counter towards 2640, 2700 levels. So we are expecting and recommending building fresh long positions in BSE. One can keep a stop loss at 2490 for a positional target of 2700.
Okay, all right, Sachinandan, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies. We need to take a short break, but on the other side, Manisha Gupta will join in. She has with her Rakesh Mehra, who is the chairman at the Confederation of Indian Textile Industry. Stay tuned.
Welcome back. Joining us on the show now is Rakesh Mehra. He's chairman at the Confederation of India Textile Industry. Mr. Mehra, hi. Thank you for joining in. And overnight, it's been an 11% that the duty that was on import of cotton has been taken off. What is your first reaction on this, given the fact that this is only till 30th of September?
Thank you very much, Manisha. Yeah, it's definitely a welcome step. We have been requesting for it for over a year now. And I think we are all very happy that this has happened, in spite of the fact that it's for a short period. But nonetheless, it's a beginning, and we will continue to initiate and put our efforts in getting it extended.
All right. So when you are looking at extension, which will coincide with the Indian cotton crop as well coming in, do you see a further decline in prices? Would the Indian farmers then like it?
No, sorry, I did not add it fully. You know, we have always requested to allow free cotton from March to September so that it doesn't coincide with the farmer's crop. We have always been requesting for that. And once that is in place, I think it will be a big boon to the textile value chain and the entire textile industry.
Mr. Mehra, just allowing free duty import for 42 days does leave a lot to interpretation.
Yes, definitely. But like I said, it's still the beginning and it's a welcome step. There will be some consignments in the high seas or in the ports or somewhere, so which should get some advantage, should come to the industry.
Okay.
I would not write it off and I would not rubbish it. It's a good suggestion. It's a good beginning. And as you know, it's not easy. It's a very difficult job for anyone, whether I'm in the government or you are in the government, to remove duty on cotton, which is so, you know, the farmers are involved. So the government has its own compulsions.
How are you also now looking at imports? Because, you know, the kind of numbers that we are working with at around 38, 39 million tons, perhaps, bales rather, is the highest number ever in sense of imports, would you say? And with this duty now going off, are we looking at even a higher number?
Yeah, see, the import is there mostly against advance license, that is advance authorization. So for our exports, people are continuing to import cotton for the simple reason that cotton in this country is more expensive. Even though we have the largest acreage and we still have it's more expensive because of the MSP, the minimum support price, which the government has its own compulsions, like I said. So that makes our cotton more expensive. So nonetheless, that whoever can import is doing it, whether in advance license or through Australia or wherever, from African countries, wherever you find it better, they do it. And this will continue to happen as long as we are more expensive than the international prices. See, we are here, like, we are the two providers of employment, the largest providers of employment, that is agriculture and textiles. So while they have to protect agriculture, one has to see also the impact on the textile value chain. And hopefully we are engaging with the government all the time to see how this can be addressed. That is either remove the duty or give DBT. You know, there are so many other ways of doing it, but the raw material must come to the value chain at a very competitive price, which is comparable to the price which is paid by our competitors in other countries.
I would agree to that, Mr. Mehra. The other thing is that you have a tall ask. India has export target of textiles at $100 billion by 2030. Are we on track for that?
Well, that I think still we have to, we are waiting and watching. You know, it's all very speculative today. We don't know what's going to happen to the US, our tariffs there. So I think it's not, we have a target. And I think if the geopolitical situations are okay and our negotiations are all right, I see no reason why we will not achieve it. But as you know, it's very difficult to predict today what will happen. What is there in store for us for the next 3 months? We don't know.
I know. Mr. Mehra, what is the export as of now, and how far are we from that target though?
No, we are still pretty far away. We're pretty far away.
Where are we right now?
We should touch about 45 billion.
For this year, for this season, you're saying?
Yes.
You mentioned about tariffs, and that really was my next question. And what is the impact that you are working with in sense of your calculations? Because when you look at India's tariff, which we are looking at 25, perhaps 50 in the next couple of weeks, and every other competitor or peer countries have it anywhere between 90, 20, even China is at 30%. How are you working with these tariffs? With import duty now done away with, what are your other asks from the government?
No, we have requested the Honorable Ministers of Commerce and Textile to support the value chain by extending RODTAP, increasing the rate of RODTAP, ROSCTL, interest subvention. So we have been asking, but there are limitations in funds also. And like I said, there is still too early or too premature to conclude that it's going to be 50 or even more, or 25. We don't know. Till yesterday, till Mr. Putin met President Trump, the feeling was that it is going to go even beyond 50. Now the feeling is that we may come back to 25. So I think let's wait and watch. But our ask from the government I have already listed out. And the situation is really bad. Our customers have already started asking us for reduction in prices, that let's share the impact. So I think August 27 will bring about better visibility on what will happen in the future.
Okay, all right, Manisha. Thanks very much for taking us through that conversation. We need to take a short break with the news that the markets are definitely in fine fettle. So we have the Nifty, which is up around 100 odd points, and the mid-cap index, which is up around 0.6%. Take a break. Up next, we'll focus on key stocks such as Reliance and JSW Infra, which are buzzing. Welcome back. Well, steady for the market. So let's get in Sudarshan. He is joining in. He's going to give us an update in terms of a couple of important brokerage notes which have come through. And he's looking at Reliance and JSW Infra. Sudarshan, over to you.
So Citi has written on Reliance Industries after SEBI's proposal related to large IPOs. And Citi believes that if this proposal fructifies, it would be positive for Reliance Industries. And the reason is SEBI's proposal says that basically for the large IPOs, post-IPO market cap of more than rupees 5 lakh crore, for that minimum public offer size can be reduced to 2.5% from 5%. So at 5%, offer size would have been $6 billion plus. And because of that, it can have the fairly large share and it would have been difficult for market to absorb. But once that is reduced to 2.5%, basically minimum offer reduced to 2.5%, then offer will be amount to $3 billion plus, which Citi believes that it can be easily absorbed by market, and that removes the overhang, and that's the reason Citi has a buy call on the stock with a target of 1690 per share. Another note is Jefferies has come out on JSW Infra. It has a buy call, and here the target price is 375 per share. It has maintained three major key catalysts for the stock. First one is 31% capacity addition via commissioning of under development of ports or terminals, and second, potential project wins with an uptick of private-public partnership project awards by government-owned major ports. Also, capacity increase that company has planned by FY30, that is 400 million tons. Jefferies believes that it is intact and it will have an upside risk. Another sweetener that company believes that that is the logistics for the company. So overall, both Citi is positive on Reliance Industries and you are seeing a big move in the stock, and Jefferies is positive on JSW Infra, and the stock is currently up more than 1%.
Okay, Sudarshan, thank you so much for highlighting both the stocks which are in focus on the back of brokerages as well. But on that note, we're going to slip into a very short break. We'll get you more on the markets, and we will also focus on a whole host of pharma stocks. After the break, stay tuned in. Welcome back to Halftime Report on CNBC-TV18. While Nifty is managing to hold on to gains of more than 100 points in today's trading session, we do have pharma that's in focus as well. Overall, the pharma sector as of now is a bit muted, but there are some of these stocks, Ekta, that are buzzing in trade. What are you watching out for here?
Well, yes, I'm watching a couple. I'll start with Alembic, which is in focus because they've received a US FDA nod for a particular drug, macitentan tablets, or the generic version of Opsumit tablets. Now, the market size is quite large. It's around $1 billion. The drug is used for hypertension. Glenmark is the other one. They are going to be launching the drug micafungin for injection, which is basically going to be used in injections in the US. The distribution is going to begin in September itself. Market size is just about $60.7 million and is used for fungal infections. That stock is in focus as well. And Zydus is in focus. Interestingly, Novo Nordisk has received US FDA approval for Wegovy, which is basically the anti-obesity drug to be used for a condition for liver, which is MASH. Now, MASH is a liver condition which basically means that there's fat accumulated on the liver and is linked to metabolic diseases and obesity. So hence, Wegovy has been approved to treat that particular liver condition in the US. Now, this makes Wegovy the first GLP drug to be cleared to treat MASH, and it impacts around 5% of adults in the US. Why is Zydus in focus? Because they have a particular entity, a new chemical entity called sarglitazar, which is undergoing phase 2B clinical trials for MASH itself. So now, because Wegovy is come into the market and maybe there could be a possibility that other GLP drugs could get approval, that means that Zydus is a particular drug which is under clinical trials right now, could probably see more competition within that space.
Okay, important ones to keep an eye out on going forward as well. But, with that, we're actually going to wind down this edition of Halftime Report on CNBC-TV18, leaving the Nifty again close to the 25,000 mark, up 0.5% in the trading session, and a good recovery that we've seen, or actually good momentum in terms of gaining momentum furthermore for the market in the last 1 hour as well. With that, a goodbye from Ekta, myself, as well as the team who put this show together. Don't go anywhere. Up next, your Business Lunch.
hopes of a Russia-Ukraine truce and India's engagement with Russia and China offer a positive backdrop for gains as local policies seek to boost consumption, auto, energy and telecom gain, but durables and pharma drag.
Sources tell CNBC-TV18 that the Chinese foreign minister has provided India assurances on fertilizers, rare earth magnets and tunnel boring machines. The likely easing of rare earth magnet supplies fires up auto stocks.
Shares of telecom operators Bharti Airtel and Vodafone Idea, as well as of Jio parent Reliance Industries, rally on expectations that higher data usage will help lead to tariff repair, with customers moving to higher GB plans.
SEBI has proposed easing IPO norms for large issuers by lowering the dilution amount to as low as 2.5% for companies with over 5 lakh crore market cap and extending the timeline for compliance with minimum shareholding to up to 10 years.
Incessant rainfall brings Mumbai to a standstill. The IMD has issued a red alert till about 1 p.m. Arterial roads see severe traffic jams due to waterlogging. Multiple flights have also been disrupted, while local train services on the harbour and central lines are suspended. Well, hello and welcome to Business Lunch live from the CNBC-TV18 Motilal Oswal studio. I am Bamakshi Doria and with me is Hormaz Patakia. Well, good afternoon to you, Hormaz. It's pouring, it's gloomy outside, but cannot say the same for our trading scenes because, you know, after the blockbuster Monday that we had, we're again up almost 110 points. Hormaz.
Gloomy for the bears for sure.
Absolutely.
You can say that. But yes, again, at that 25,000 mark is where the index still stands, and that is the key level that still needs to be crossed and sustained. We tried doing that yesterday, failed to do so, making yet another attempt today as well on the day of the Sensex weekly expiry. Of course, can't not talk about some of the top movers that are contributing to this move to the upside for the index. Reliance Industries, the top contributor to the Nifty gains, ably assisted by Bharti Airtel, ably assisted by Tata Motors as well. Tata Motors, in fact, along with Tata Motors, almost all of the auto stocks have fired up in today's session. Auto ancillaries in particular, be it the wiring names, the auto part manufacturers, they are doing fairly well for themselves. And Infosys is the other contributor to the upside, as is Kotak Mahindra Bank, with some bit of offsetting of those gains coming from Larsen & Toubro and from Sun Pharma and from HDFC Bank. Not significant, but yes, but the broader markets though are doing fairly well for themselves as well, Bamakshi.
Well, absolutely. They're actually outperforming what we saw as compared to the benchmark indices. If we take a look at the advanced decline ratio, the gap had been broadening since morning. For now, the advanced decline ratio is at 2:1. Apart from that, you know, from the broader markets, take a look at HLE Glascoat. That stock is locked in the upper circuit of almost 20%. So is IFGL Refractories, up almost 20%. Apart from that, you know, several stocks have managed to hit a 52-week high. This includes FM Industries. That stock is also up almost 6.3%. So lots of stocks that are moving around in trade today. But let's focus in on a major development in the India-China relations. China has assured to address 3 key concerns of India. Parikshit is here with more details. Parikshit?
We might be seeing a major breakthrough in India-China relations, especially when it comes to import of critical components. External Affairs Minister S. Jaishankar met his Chinese counterpart in Delhi on Monday, and sources say China has assured India that concerns around imports of high rare earth magnets, tunnel boring machines and fertilizers are being addressed. Since April this year, China had imposed restrictions on these items, and as a result, imports of such critical components and equipments from China had been stopped. Now, if China lifts these restrictions, then it will be a big relief for industries like the auto sector, but we are yet to see how and when and in what manner will these restrictions be lifted. We are given to understand that all of this will happen in an incremental manner over the next few months. We have been seeing how both the countries have taken a decision on resuming flights as well. During his meeting with Wang Yi, External Affairs Minister Jaishankar sought a candid and constructive approach to bilateral ties and about moving forward after a difficult period in the relationship. This was the first meeting between the Indian and Chinese foreign ministers in India. Wang Yi, on his part, spoke about unilateral bullying and threats to free trade and international order. A Chinese statement said that India and China should strengthen their confidence, meet each other halfway, eliminate interference, expand cooperation, and consolidate momentum for improvement in India-China ties. This was not the first time where India has raised concerns about informal economic restrictions, including those on magnets. It has been raised multiple times over the past few months at the level of Foreign Secretary, NSA, EAM, Defense Minister. China, according to sources, is demanding that India provide a level playing field to Chinese companies, do away with Press Note 3, which mentions that investments from land border countries have to be vetted by the Indian government, and also give more market access to Chinese firms. This is, in a way, setting the ground for the meeting between Prime Minister Modi and President Xi Jinping at Tianjin at the SCO summit on 31st August and 1st of September.
Parikshit, thank you for that important update on the India-China ties. Meanwhile, Chinese Foreign Minister Wang Yi has met National Security Advisor Ajit Doval in Delhi's Hyderabad house. They participated in a fresh round of a special representatives dialogue on the India-China boundary question. Wang struck a reconciliatory note during the meeting, suggesting that a proper settlement of the boundary dispute is in both countries' interests. Later in the day, Wang is expected to meet Prime Minister Narendra Modi.
Well, and the big story of the day is the auto sector. Keep in mind that auto sector is the top sectoral gainer today, rallying for the second straight day. So tells us why the auto pack is higher today. So
another big day for the auto sector, as Parikshit was reporting that Indian Foreign Minister had a meeting with Chinese Foreign Minister, and from the sources we understand that Chinese Foreign Minister has given assurance of looking into the issues that Indian Foreign Minister has raised. And amongst major three issues that Foreign Minister has raised, one issue is about rare earth magnet supply, because if you remember, all the Indian automakers were talking that if rare earth magnet supply shortage persists, they might go for the production cut. But now we understand that China is looking into this issue and curb can be lifted. And now this news is being taken positively by all the major auto companies. And that's the reason you are seeing a big move. Tata Motors, which is a big, huge EV exposure in the form of JLR, is top Nifty gainer. Similar gains are being seen in Sona, BMW and Savardhana Motherson. So why this is huge? Because if you remember, China basically controls almost 70 to 80% of rare earth progressing. That's the reason it's very important that if China lifts the curb, it would be taken huge positively. And because of that, you are seeing a big move in entire auto pack. Even the Nifty Auto Index and Nifty EV Index, both these indices are up more than 1% each.
Indeed. Sudarshan, thank you for that update. Auto stocks, day 2 of some very strong moves. And I just spotted Hyundai on here, 5% higher on the stock today as well. Now at 2,550 is the largest IPO of the country till date at the highest point of the day. But on to the rains then. The heavy rains continue to torment the financial capital of the country, and that has led to heavy waterlogging, transport disruptions and flight delays. The IMD has now issued a red alert for the city with a forecast of heavy to very heavy rainfall at a few places. Sandhya is joining in right now with the ground report.
Torrential rains continue to lash Mumbai and nearby regions. Right now we are in Mumbai Santa Cruz area, and this patch is actually off the Western Express Highway, and you can see how badly waterlogged this area is. You can see that how vehicles, 4-wheelers and 3-wheelers are stuck here in this waterlogged patch, and local administration and local representatives are helping towing vans to tow these vehicles. The situation is extremely worse in Mumbai and nearby areas due to heavy rainfall, especially with a combination of high tide of over 3.5 meters that took place early this morning. Talking about the commute part, as you can see, this is the condition of Western Express Highway. Massive traffic jams, waterlogged patches leading to vehicles getting stuck in these waterlogged patches. Other than this, BMC Commissioner told CNBC-TV18 that over 235 water pumps are active in the city at present. But despite that, the extremely heavy rainfall has led to waterlogging in multiple areas. This entire patch of Western Express Highway is waterlogged, and it has brought the traffic to a halt. And this is just one patch of Western Express Highway, and this particular part of the city, western suburbs, continue to witness heavy rainfall. As a result, there is waterlogging on parts of SP Road, Oberoi Junction, and obviously Andheri Subway, because that is one of the most famous low-lying areas in the western suburb patch. Other than this, there is waterlogging in LBS Road, Hindmata, Parel, Dadar, Sand Circle, Gandhi Market, and even parts of South Mumbai as well. Holiday has been declared for government and semi-government offices in Mumbai, barring those who fall under the category of essential and emergency services. BMC has made an appeal to private organizations as well to give a work from home or a holiday to their employees, depending on the nature of their work. IMD continues to maintain a red alert for Mumbai, Palghar, Thane, Raigad for the entire day. Apart from this, the state government has requested the citizens to stay indoors and do not step outdoors unless it's absolutely necessary.
Absolutely, Santya. Take that point. Do not step out unless absolutely necessary. But, we also spoke to Shubhangi Bhute, who's the head of Western Zone of the IMD, about the weather conditions. Listen in to what she had to say.
As of now, depression has been formed over Bay of Bengal and it is moving northwestwards, and associated cyclonic circulation is also there. Along with that, wind shear is there, which is very much favorable for the extremely heavy rainfall over the Konkan region. For the Mumbai, we generally find this situation along with this offshore trough, which is very active. We can see that winds are quite in our rainfall along with it. This is a typical synoptic situation where Mumbai gets extremely heavy rainfall, which has been realized today morning. Scattered extremely heavy rainfall has been there, and this situation is likely to continue for today from 8:30 of today to tomorrow 8:30. But the intensity of rainfall may decrease after evening.
The big takeaway there, intensity of the rainfall may decrease after later this evening. In fact, Santya also spoke to BMC Commissioner Bhushan Gagrani on the municipal corporation's preparedness in and around the Meethi River. Listen in.
Water is slowly receding now. It has just gone below 39 now, 390. And there is a low tide. So hopefully next couple of hours, it will be below the danger mark. However, we are in full preparedness of shifting whatever number of people required. We have shifted 400, but if required, we'll be able to shift, in fact, entire population which is coming under the danger zone. See, operation of pump is a very dynamic thing. Right. Few minutes back, it was 256 pumps. So on an average, 230 to 260 pumps keep operating at any given point of time.
Well, that was the BMC Commissioner, but a viewer note, as heavy rains and waterlogging continue its torment in the Mumbai region, mainline train services between CST and Thane station are suspended until further notice. Shuttle services are running between Thane, Karjat, Khopoli and Kasara station. At least 8 flights have been diverted to the nearby airports.
Important viewer announcements there with regards to the trains and the flights. We'll bring you all of those updates all through the day right here on CNBC TV18. Take a short break. More updates from the US President's meeting with his Ukrainian counterpart Volodymyr Zelensky on the other side. Stay tuned. On to the big global update then. US President Donald Trump met his Ukrainian counterpart Volodymyr Zelensky and European leaders at the White House last night. Following the meeting, Donald Trump announced that he has begun preparations for a face-to-face meeting between Russian President Vladimir Putin and Zelensky to discuss a possible way to end this 3.5-year-long war. CNBC's Sylvia Amaro joins in with more details on this.
The U.S. President Donald Trump met with Ukrainian leader Volodymyr Zelensky and the European heads of state as well at the White House on Monday for talks on how to end the more than 3-year war in Ukraine. Now, agenda items included security guarantees, military aid, and the possibility of a meeting with the Russian President Vladimir Putin. In a post on Truth Social, Trump said that he spoke with Putin to begin arrangements for the meeting. The U.S. president suggested that the leaders of Russia and Ukraine would meet first, followed by a trilateral summit, which could include him. Now, speaking alongside Trump in the Oval Office, Zelensky indicated his readiness for a trilateral meeting. Listen in.
We need to stop this war, to stop Russia, and we need support American and European partners. We will do our best for this. I think we show that we are strong people, and we supported the idea of the United States, personally of President Trump, to stop this war, to make a diplomatic way of finishing this war. And we are ready for trilateral, as President said. This is a good signal about trilateral. I think this is very good.
Now, security guarantees for a post-war Ukraine were also discussed. Trump said Putin has agreed Russia would accept such measures, which he called a significant step. Now, in terms of provisions, the U.S. president put the onus is primarily on Kyiv's European allies, saying they would take a lot of the burden, but the U.S. would assist them, adding in a post on Truth Social as well that Washington would provide coordination. Now, Trump, however, did not rule out putting U.S. troops on the ground as a guarantee, instead hinting at an upcoming announcement on the topic. Trump expressed optimism that an agreement could be reached around security, which would deter future aggression in Ukraine.
The Alaska summit reinforced my belief that while difficult, peace is within reach, and I believe that in a very significant step, President Putin agreed that Russia would accept security guarantees for Ukraine, and this is one of the key points that we need to consider, and we're going to be considering that at the table also, like who will do what. Essentially, I'm optimistic that collectively we can reach an agreement that would deter any future aggression against Ukraine, and I actually think there won't be. I think that's even overrated, largely overrated, but we're going to find out. And I think that the European nations are going to take a lot of the burden. We're going to help them, and we're going to make it very secure.
Now, another important development as Ukraine looks to gain security guarantees from Washington is that Kyiv has reportedly proposed buying $100 billion of U.S. weapons with financing provided by Europe. This is according to the Financial Times. The proposals would also reportedly see a $50 billion agreement for drone production with Ukrainian companies.
Well, on that note, let's take a very short break. For now, we'll get you more news and updates on the other side, so stay tuned. Welcome back. You're watching Business Lunch on CNBC TV18. And now we've covered everything from Mumbai rains to geopolitics, but on to some news from the world of tech then. SoftBank is taking a $2 billion stake in chipmaker Intel. The move is part of efforts to ramp up support for the troubled US chipmaker. Now it's been struggling with losses and weak demand at its foundry unit, which makes semiconductors for other companies. Now in a statement on Monday, the two firms said SoftBank would pay $23 per share to acquire Intel stock, and this deal will make SoftBank the 6th largest investor in Intel.
And that explains the 5.5% pop that the stock saw just towards the close of extended trading in last night's trading session on Wall Street. Now, in some news coming in back home, the India bloc has announced B. Sudarshan Reddy, a former Supreme Court judge, as its vice presidential nominee. Reddy has served as the Chief Justice of the Guwahati High Court and was part of the Supreme Court from 2007 to 2011.
Well, with that, it's a wrap on this edition of Business Lunch. We're leaving you with a green-looking screen, the Nifty at 24,985. Don't go anywhere. Midcap Radar takes the action forward.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Ekta Batra. Good afternoon, Ekta. Well, we are just shy of the 25,000 mark currently. We did touch it, but we have receded from those levels. Consumption names and banking names, those are actually pushing for the bulls or helping the bulls today, and so is Reliance.
Hi, Sonal. Yes, absolutely. And we have the mid-cap index, which is not doing too badly as well. So up around 0.6% currently for the mid-cap index, the advanced decline ratio quite steady. So yes, maybe we will make a dash for that 25,000 mark, something that we hit intraday yesterday as well. But as of now, we're just about hovering at those levels. The Bank Nifty up around 149 odd points, so aiding in terms of total gains. But this is the show where we get you micro stocks to focus on. So let's start with the top headlines that we're tracking at this hour. Hopes of a Russia-Ukraine truce and India's engagement with Russia and China offer positive backdrop for gains as local policies seek to boost consumption. Auto along with oil and gas gain, but pharma drags and mid-cap surge.
Shares of textile stocks such as Vardhman Textiles, Gokuldas Exports, Welspun Living, Ambika Cotton Mills, they gain in trade after the centre removes 11% import duty on raw cotton till September 30th.
Sources tell CNBC-TV18 the Chinese foreign minister has provided India assurances on fertilizers, rare earth magnets and tunnel boring machines. The likely easing of rare earth magnet supplies fires up auto stocks.
Centre has proposed two-slab GST rate structure for ACs. It would fall to 18% versus 28% earlier, according to that. Cooling appliance major Blue Star tells CNBC-TV18 that they hope government expedites the final date because it will impact sales if there is no clarity. All right, those are the top headlines. Nifty is cooling off a little bit from the highs. So there is a 100-point uptick that we are seeing currently at the 24,975 mark. We do have some of these consumption names which are leading to the gains that we are seeing on the Nifty as well. But there's nothing really to complain about. Mid-caps, as Ekta pointed out, are doing really well. So is the small cap index. So it is really that part of the market which has a lot of activity today.
Yes, absolutely. And so let's get going with no further ado. We do have Hormuz standing by to tell us about all of the mid-cap movers at this hour.
Absolutely no reason to complain. And after the sluggishness that we have seen over the last 6 weeks before it ended last week, and now we are building on to the gains from yesterday. We start off with the gainers then from the broader markets, and these are of course non-newsy ones. G Power up 10. Devyani International has now surged to the highs of the day, 10% higher on that stock as well. Bremen Lifestyle, PNB Housing out of the F&O band today, 4% higher on that stock as well. Take a look at the auto names. Look at Jamna Auto now, 12% higher here. Ola Electric is up 10%. Motherson Sumi Wiring slightly off the highs but still 6% higher. But look at Samvardhana Motherson at the highest point of the day, 5.5% higher on that stock as well. What is also firing up today are a lot of these textile names. We'll have Vardhaman Textiles up 7, Siaram Silk Mills, Nahar Spin, Welspun Living after the temporary duty withdrawal for cotton, raw cotton, and they're seeing these stocks move around 4.5 to 7% higher. Take a look at the volume buzzers then in today's session. Look at Electra Greentech, IFGL Refractories and HLE Glasscoat both locked in a 20% upper circuit, and that too on very strong volumes today. And lastly, of course, there are some names that are bucking the trend in today's session. Can't not talk about those. Well, textile stocks are moving higher. SP Apparel has moved to the lowest point of the day, 5.5% lower here. SML Isuzu seeing some profit booking. India Glycols is at the day's low, as is Transrail Lighting, losses of anywhere between 4 to 5%. Back to you guys.
All right. Thank you so much for joining us with those names, Hormuz. Those are some interesting names to watch out for. But we'll slip into a short break now. When we come back, we'll be chatting with the management of Supreme Industries and talk about the impact of anti-dumping duty on imports of PVC resin. Welcome back. You're still tuned into Midcap Radar. Well, before we go to the management of Supreme Industries, let's address GAIL. Sources are suggesting that PNGRB will be meeting and finalizing the unified tariff. That will happen in the first week of September as well. This is a story break by Sudarshan, our colleague. And they say they will be meeting for this particular decision in the first week of September itself, and the indication is they will approve issues with respect to other pipelines this month as well. Now remember, PNGRB member had indicated to CNBC-TV18 earlier that there could be a 20% increase in tariffs. If that happens, it could increase GAIL's EBITDA by 26%. That's the transmission EBITDA from FY27. Now do remember, GAIL had asked for a 33% increase, but brokerages are of the view that it could be anywhere between 10 to 20%, and our conversation suggested that yes, it could be around 20%. So this has been the big trigger that the street is awaiting for GAIL, because that is something that would improve the financials. Anything less than 10% would be a disappointment. Anything between 10 to 20% is what the street is working out with. And their return on capital employed will also improve by 12% versus 8% currently. So this is the big update we'll be watching out for GAIL. The stock on the back of this has seen a spike from the lows, up around 1.1%.
Okay, all right. So the meeting is going to take place soon enough, and PNGRB has declined to comment with regards to the GAIL pipeline tariff issue at this point in time. But the stock, as you can see, is up around 1% reacting to this bit of news, source-based at this point. The meeting is likely to be at the start of September. But let's move on to other news then. Directorate General of Trade Remedies, or the DGTR, has recommended imposing anti-dumping duty on imports of PVC resin for 5 years. What is the likely impact? MP Taparia, who is the Managing Director at Supreme Industries, joins in now to discuss more on this. Mr. Taparia, thank you very much for taking the time out. So just give us a sense in terms of what the impact would be of this anti-dumping duty on PVC resin.
So the anti-dumping duty has been imposed on the various companies, ranging between $22 to $284. Mid-range they are between $50 to $110. In China, the lowest rate of duty is $122, and the largest import of PVC is coming from China.
Okay. So what would the impact be on prices overall? How would it impact the Indian industry, Mr. Taparia?
We believe overall impact on PVC suspension prices, when the duty is finally imposed by the Ministry of Finance, should be in a range of ₹8 to ₹10 per kilo.
Okay. So how is that going to impact the prices of PVC resin, sir?
The PVC resin price, I told you that it may increase the resin price between ₹8 to ₹10 per kilo.
Okay.
In the current economic situation and current dollar-rupee parity.
How will that impact your business?
Business will not be affected. When the prices of PVC has gone down since July 2024 by around ₹24 per kilo.
So, Yes, Mr. Taparia, you had indicated that prices had gone down. In our last conversation, you also indicated that prices might have bottomed out for PVC piping overall. The other part of the industry is that between Reliance and Adani, there's around 2.5 MTP of capacity coming up for PVC resin. Do you think this will take away the need for imports overall? Do you think that is something that would support the industry even more?
We welcome the plant coming of Reliance and Adani, but they are going to come in last quarter 2026 calendar year or in first half 2027. And the capacity announced by them totally 2.2 million tons. Country is importing today 1.5 million tons are local and 3.5 million tons imported. So again, 3.5 million tons import, the capacity plant is 2.2 million tons. So country is going to remain short even after 27-28 also. We are too much dependent on import, and it is desirable the requirement of import should go down for boosting the domestic production of our converting industry.
Okay. Give us a sense, Mr. Taparia, in terms of what demand is anyway looking like for PVC resin.
So this year, the demand for plastic piping systems will grow between 7 to 8%.
So PVC resin is actually your raw material, right? So since prices will increase by 8 to 10 rupees per kg, will you be passing it on to your consumers? How would the entire supply chain work in that case, Mr. Taparia?
We do not see it will affect the demand from consumer.
So you will go ahead and pass it on to the consumers by 8 to 10 rupees?
We are able to pass on to the consumer.
You will be able to pass it on, and there'll be no impact on demand as well. So you maintain your volume growth guidance that you had given earlier of 15 to 17%, even after this ADD imposition?
We believe the volume material guidance our company is given will be able to maintain.
Okay. How are you looking for the entire FY26, because, there's a lot of uncertainty with regards to what is taking place with regards to tariffs at this point in time. It's a fluid situation, you would have to say, for the next couple of weeks or maybe a couple of months. What is the demand looking like? Are you in place to basically meet your FY26 guidance?
I don't follow you fully. What do you say, please?
What is the entire situation looking like for FY26 for you as a whole, as a business, sir? We are dealing with a lot of uncertainties, say, when it comes to trade tariff, when it comes to, even GST, which would obviously be a positive. Can you give us a sense or paint us a picture in terms of what the business is looking like as a whole for you?
Now, considering the price parity of PVC regime, the uncertainty has been now fully curbed after announcement by Director General Trade Remedies the final finding of imposition of anti-dumping duty. Normally, the anti-dumping duty, once they announce, the finance ministry take action between 20 to 90 days. So now there is certainty this is going to be the duty rate going to come, and this will give full certainty to the market, and there should be no destruction of demand for our final product. We do not see any such problem.
Okay, all right. So that's a big, important clarification coming in from Supreme Industries that PVC resin prices, they will rise by 8 to 10 rupees per kg, but they will be able to pass it on to their consumers. They maintain their volume guidance of 15 to 17%. The stock is spiking at the day's high after this conversation as well. Thank you so much, Mr. Taparia, for joining us as always and patiently answering all those questions. So Supreme Industries, Astral, all these stocks are surging. Chemplast Sanmar is the other one, which is a manufacturer of PVC resin. So that is the other stock that should be on your radar as well. With that, we'll do one thing. We'll slip into a short break. Management of Ventive Hospitality will join us next to discuss their Q1 numbers and more.
Welcome back. Well, for the markets, it's quite stable. So let's get talking about one particular company that came out with numbers. Ventive Hospitality reported its Q1 earnings. The company's revenue has risen around 17%, but the margin and the occupancy fell. To discuss the quarter gone by, we have Atul Chordia, who's the chairman of Ventive Hospitality, now joining in. As you can see, the stock is up around 3.5% at this point. Atul, thank you very much for taking the time out. Well, just give us a sense in terms of how the quarter panned out when it came to your key parameters such as your occupancy as well as your average revenue per room. Given that we did see some amount of disruptions in the geopolitical front in the month of May. So how did that affect business and what is it looking like in FY26 now?
So basically we have had thank you for inviting me we've had a great first quarter. Our total revenue was 520 crore, which was almost 18% growth year on year. The distribution from our quarterly growth was in hospitality. We posted about 179 crore of Indian hospitality and 207 crore from international hospitality portfolio. Our rental is stagnant to 100
Sure. We have the numbers with us, sir. If you could just narrow down and give us a sense in terms of how the quarter panned out for you, because you did have your occupancy which dipped a little bit, and if you could just give us a sense in terms of what the impact was because of the geopolitical tensions that we saw in the month of May, and how much did that impact business this time, and hence what are we expecting, say, in the next 1 to 2 quarters?
Basically, we have had a great growth on F&B side. I agreed, due to geopolitical reason, our occupancy went down because of huge cancellation. But we covered it up on our F&B side. And next 2 quarters are looking extremely good. We will be growing on double-digit growth. There is no doubt about it. And if on the month of May, that would not have been the issue, we would have grown another 7 to 8%.
So double-digit growth in terms of revenue is what you are anticipating in the coming quarter?
Yes.
EBITDA?
Yes, because we are having a good booking traction.
EBITDA, what are you expecting in terms of EBITDA as well as, say, occupancy?
First quarter, we have shown 520 crore EBITDA. We are very sure that it will grow at least 12 to 14% from this.
Okay.
The second quarter and the third quarter, which is usually the season, third and fourth quarter, with all the wedding season, Diwali, Christmas, everything. So those 2 quarters are much better.
So, Mr. Chodia, since you're saying second and third quarter will be much better because of weddings, there is festive season as well. What does it do to your average room rate? It has already moved to 19,498 versus around 17,000 earlier. Are there triggers enough to move it higher? And this time around, your occupancy saw a fall. What was that entirely because of the business you lost in May? What is the number that you're looking out for in FY26?
We are looking for from 67% to 70%. We are very confident we will have that kind of occupancy. And the third and fourth quarter, usually my third quarter is always the wedding quarter and the MICE business. So during those 2 quarters, we have huge growth. Not only our company, maybe all the hospitality companies.
Okay. Your non-resident F&B business, that was quite strong, I understand, this quarter. How much was it as a percentage of, say, your revenue, F&B? And what are you projecting in terms of sales growth going forward in this particular F&B space?
We usually do 45 to 47% F&B to our rooms.
Okay. So how much did it grow in the quarter gone by?
You want me to tell you about absolute numbers? If this quarter we have done 520 crore, the next quarter will be about 600 for sure.
Okay. I'm talking particularly about F&B. What is the growth trajectory that you're expecting there? Are you expecting it to grow above 10%, up to 15%, 20%?
Okay, my second quarter, F&B growth will see maybe similar 10 to 12%, but by third and fourth quarter, the F&B growth is about 22 to 26%.
That's because of the wedding season kicking in.
Weddings and MICE, both business that trigger in together.
Okay. Tell us a little bit about your international business, because we do understand that you have operations in Maldives.
Yeah.
And that has actually grown quite significantly this quarter in terms of the revenue as well as in terms of the EBITDA. What about those operations is working well for the company right now?
So Maldives, we have 3 hotels, 567 keys over there, operational keys. And the first quarter is not so good in Maldives, but because of Easter moving into this first quarter, we have had a very good growth. The second quarter, maybe we will be holding up, or maybe we might go a little bit down also because due to the rainy season, heavy rains. But the third and fourth quarter, Maldives we will be doing almost 76 to 80% occupancy the way we have got the bookings. Maldives bookings are usually 6 months ahead of the time.
Okay. All right, Atul, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the word coming in from Ventive Hospitality. Well, we need to wrap up on the show with the news that the markets are absolutely steady at this point, but the Bank Nifty has given up gains from the top. So maybe an intraday picture will tell you more about the Bank Nifty, just about flattened out with a gain of just about 31 odd points at this point in time. We'll wrap up on Midcap Radar, but stay tuned. We have MF Corner once we're back.
Hello and welcome to MF Corner. I'm Sonal Bhutra, and with me as always is Vinny Motiwala. And there's a lot that's happening in global markets. We are seeing some developments with China. There's so much happening on AI, tech. That's all we are going to discuss today.
Absolutely. That's what we'll be discussing today, especially coming in on China front, where, we've seen that run-up coming in the last 1 year. Funds which are there or invested in China, they've seen a very good move as well. Now, does this move actually warrant for someone to invest in further? That is something that we'll be keeping an eye out on. And that's what we're going to be discussing today. For that, we have Harsh Rungta, CFP at Rungta Securities joining in with us, and also with him we do have Kirtan Shah as well, founder and CEO at Truvanta Wealth. Kirtan as well as Harshvardhan, thank you so much for joining in with us. Let's start with talking about China first. Now, that rally that we've seen in the last year, what does it indicate in terms of the move that we should be watching out for? Does this merit that one should actually look at funds which are investing in China, or should you just look at more international funds? Kirtan, let's start with you.
I think like you rightly started, the entire conversation is because over the last 1 year, China has given some 40-odd% returns. And this is not very normal of China, because if you look at the last 5 years, the same return, in spite of the last 1 year being 40%, the 5-year CAGR is just 3%, right? Now, the problem with China actually is not really the economic development, because if you look at the last 15 years, you will see that probably the GDP has grown 3x, the per capita income in dollar terms has grown 3x, but the stock market return is close to savings bank account return, right? Versus that, if you look at India, India has grown only at 2x on GDP as well as per capita. But we've done a good 12-13% CAGR over the last 15 years. So I think the problem with China really is not the economic growth. It is more to do with the political crisis that China goes through, and because of which the return on capital employed is really bad, and hence investing in China is more of a political crisis than really a stock marketing investment.
Oh, okay. So, Harshvardhan, do you have something to add to that? Is it largely political? What about the GDP growth and the other aspects of economy as well? And if you agree with him or disagree with him, do you think an Indian mutual fund investor consider diversifying into such funds? What would the potential benefits be?
So, hi, Sonal. So, in fact, I concur with Kirtan in terms of the numbers that we're speaking about. Now, if you look at the economy that we're talking about, as Indians, your question was very specifically saying that do we look at investing internationally, particularly China? So my view is that as Indians, we're very fortunate that we are in one of the fastest growing economies in the emerging markets, at least. So if I were to take an exposure into an emerging market, what better place would I have than to invest into India itself? Now, with regards to investing overseas, now, there are primarily 2 or 3 reasons why we would look at parking certain portion of our money into international markets. Now, one, of course, will be the geographical diversification. I mean, we will have a large portion of our investments in India, but there has to be some portion that we will diversify geographically into other countries and in other economies. The other reason that you would invest in internationally would be because there could be certain sectors, certain companies, certain themes which are not listed in the domestic market. In India, for example, we would not have much or any options which invest into space technology, for example. So you would have these kind of options available in other markets overseas and globally. The third reason that you would want to take exposure would be for dollar exposure or hedge against rupee depreciation. Now, this particularly is applicable for people who would foresee some kind of expenditure in the future for their children's education overseas. So they may want to have some investments wherein they hedge against the rupee depreciation. Now, let me take the first and the second element that I said was geographical diversification. So if you look at India as an emerging market, one of the fastest growing emerging markets with the returns commensurating in the returns that you get on your capital invested, then if you're looking to invest somewhere else, why wouldn't you look at a developed market like a US or probably some other developed markets globally? And in terms of innovation, some of the best companies that you will see in the tech space as well would be domiciled in US, for that matter, having global exposure. So I think all in all, there could be better opportunities available for Indian investors.
Absolutely, better opportunities maybe there in the developed market. But, if Kirtan, someone still wants to look at it, right, and still wants to look at China-focused funds, what are the factors that one should actually be careful, aware of before you start investing here?
I think I'll go back to the same example that I gave you. If you look at China currently, it's trailing at 12 to 14 times. And it is way below historical averages from a global peer standpoint. Now, this probably is pricing in that there is some political problem, and which is why the valuations in terms of China is probably cheaper than what the global average is. So if I can give you some examples of why am I, again talking about political problems and crises, you would see a series of short selling ban in China, which is a very common occurrence. You look at 2021, the ed tech business was cracked down because they put some restrictions saying that education companies cannot profit. And there were some stocks which fell 90%. You probably look at the tech sector regulation and you will know that, players like the Alibaba or the Transcend have faced trust fines and restrictions. You also look at companies like Didi, right? They were forced to convert their existing contractual drivers into salaried employees, which again created a big problem for organizations which were running on contractual basis. You look at the gaming restrictions that came about where minors were restricted for the screen time. That impacted the valuations of gaming company big time. So while you are investing in China, like I said, it's really not about how the economy is doing, because the economy is doing very well. The problem is that when you are, as an investor, trying to allocate capital, are you going to make monies on the capital? And that largely depends on how the political scenario plays out and which sector it ends up impacting. So while you are investing in equities, you probably will want to take a bottom-up approach where you're looking at companies which probably you think are going to do well and hence invest in them. But one change from a political standpoint and that entire sector, in spite of doing very well, your capital will not make money because the political situation will not allow you to do that. So I think even if in spite of this, somebody really wants to make investments, I think the only real thing that you want to look at from a China standpoint is whether or not is there political stability, which is not really impacting stock market. I think that's one very important data point that you would want to look at, because economically, right, or performance from a company or a sector standpoint, I don't really think there is problem, because there are a lot of sectors in China which you can really look at investing, specifically from an AI, EV, or even an e-commerce space. But the problem is that tomorrow, if the government comes out with some regulation in that space, that will end up impacting your investment.
All right. Harshvardhan, what's your take on this? What factors should anybody consider before investing in China-focused funds? And say China-focused funds versus other international funds. How should the investors allocate their mutual fund and invest in international market in that case?
So, well, Sonal, the technical aspect has already been discussed about. So now what we're talking about is that if you are looking to invest into a specific country, okay, we're not looking at a geography particularly, we are saying that it is a country that we are investing into. It's very important that you start, following the developments in the political and the economic circuits that we're talking about right now. So if I were an investor looking to put money into China, I should ask myself a couple of questions. Am I going to be able to track the developments in the economy very closely? So in most cases, we are only reacting to the information that has already been in the public domain, whereas the action has already taken place in the economic, in the stock market. For example, all that we get to know that has happened in China is after it has happened. So as an investor sitting in India, do I have the potential to take that call and to monitor the development so that I can take action as and when it happens, or maybe before some development is going to happen? Now, if I don't have that capability, of course, I will need to keep in mind that I would need to choose a fund which is able to do so. Now, hypothetically, I choose a fund which is actively managed, and then I need to go into the companies that portfolio is holding. So if I pick an active fund manager, I pick the portfolio, and I start looking into the companies that they've invested into. I should have the wherewithal to make the difference. I mean, to understand what they're investing into and how are those companies likely to be impacted. If I still want to invest into China and I don't want to get into these finer details, I have a choice to pick the index then. So, which could be the Hang Seng, for example. You could just pick an index and invest into it. And sitting here back in India, you could just track what is happening to the index and you know what's happening to your investments. So, so sum up what you asked for. The point is very simple. if you have the wherewithal and the technical know-how of which companies to invest into, which fund manager is doing what exactly, then you may pick an active fund. If not, then it's better to pick an index for that matter. Further still, I mean, if you, as I started with saying that emerging markets, India it's a place that you already are in. So might as well look into other countries such as the US, which are more, which are more diverse in that in kind of nature. The companies may be domiciled in US, but they would have their business operations across the globe. So in that sense, you would still have a global exposure with companies domiciled in the US.
Okay. Kirtan, just a quick one. Are there options that are available, right? Which mutual funds are available right now for these China-related funds or China-focused funds are there?
So, Vinny, if you leave aside the ETFs that Harsh was talking about, from an active standpoint, there are two popular funds that you can look at if at all China active investing is what you all are looking at. One is Axis Greater China Equity FOF and another is Edelweiss Greater China Equity FOF. So these are funds which actually end up investing in an active fund which is based out of somewhere. But you can do this active investing or if active investing is something that you look at, these are two funds that you can look at for China.
All right, we take that point. This is about investing in Chinese markets via mutual funds. But before now, we have to take a quick break. We'll focus on investing in tech and AI on the other side of the show. Stay tuned for that.
Welcome back to MF Corner on CNBC-TV18. Now we're going to be discussing investing in tech and AI funds. How does that look like for the Indian investor? What are the options available as well? We still have with us Harshvardhan Rungta as well as Kirtan Shah. Harshvardhan, let's start with you this time, right? Now, we've seen that AI, the boom that has come in the last year as well. What is an option that is available right now? Is there an option available for Indian investors, mutual fund investors to invest in AI-related funds or maybe tech-related stories that we want to watch out for?
Well, Vinny, let me give you an analogy with regards to how should you capture the boom in any story, a boom story that we're talking about. So, whenever there's a trend in the consumer behavior or there is an economical shift in certain sectors or segments, we need to be very careful that every boom story does not mean it's a great investment opportunity. Let me highlight this with an example. So while we would notice now that most Indians are spending on holidays, we're traveling more by air and not by train. So train journeys vis-a-vis air travel, we're seeing the number of passengers going up. Now, does this automatically mean that airlines are the business to invest into? Well, it need not necessarily mean so. Why? Because you will see most of the airlines still struggling to make profits. Similarly, if you look at the EV story, now we know that EV vehicles is the future from here. I mean, you're going to have alternative sources, alternative fuels in which we will have to run our vehicles. So EV looks to be the most promising next boom story that we're looking at. But we will have to be very careful in understanding which stakeholders in the entire ecosystem will make money. Is it going to be the EV manufacturers? Is it going to be the charging infrastructure companies? Or is it going to be electricity generation companies? So we don't know who's going to make money into this entire boom story. So while we understand that AI tech is going to be the next future, it's very important to understand who's going to make money in this sector. Does not everything that is going to be the flavor of or economical shift in the future does not mean the participants will make money on it. So having said this, we are at a juncture where yes, tech is going to play a major role, and AI particularly. Now, for an investor, again, coming back, if you're investing into any sector or theme for that matter, you have to be knowledgeable enough to time your entry and exit. So if you're investing into AI boom, for example, or you're investing into tech, you need to be very mindful that you should be able to track and monitor that particular sector so that you can time your entry and exit. So if you just enter into something and that sector comes into some kind of a turbulent time because of some regulatory changes, you need to time yourself to get out of it. So, well, I do agree with you that this is going to be some sector to look out for. But frankly, which company is going to take the lead in this, at least domestically? We're talking about the domestic market in India. Which company is going to be able to take the lead in this, make money out of this, remains a question. At least I am personally not able to track that on a day-to-day basis. So for all such cases, I would suggest for a retail layman investor, a diversified mutual fund works best.
What about you, Kirtan? What do you suggest when it comes to investing in tech and AI? Is it direct tech stocks or diversified equity funds? And if yes, what percentage of the portfolio should be allocated to this particular sector?
I think, Sonal, I completely concur with Harsh on this, that, as a retail investor, you probably might want to leave that decision to the fund manager by investing in a diversified fund. But let's say, for example, if there is a sophisticated investor who can actually time entry and exit in a particular sector, and if we can break India investing and global investing separately, in India, probably what is happening in the tech space, which is largely services today, is we know that AI is changing it so quickly that Indian services companies are not able to cope up, and which is why we see the layoffs and all. And we've already seen that in the price, right? So probably the fallen down tech sector in India for sophisticated investor may be a great opportunity to, kind of gradually start allocating money, because most of these companies are tech rich, and probably if R&D is done well or acquisition is done well, tech will turn out to be, a good sector to look forward for the current price or value it is available at. But this is only for sophisticated investors, and retail, I will concur, is not really the audience who should really look at doing something. Now, if I talk about global investing, I think to answer your question, I would sincerely suggest investors to look at investing in the index and not to invest in particular stocks. And I'll tell you why. If you go back to 2020-21, the entire energy sector was probably 2-3% of the index, which is S&P 500. And at the same time, NVIDIA was 2-3% of S&P 500.
Yeah.
Today, NVIDIA is probably 3 times of the entire energy sector. NVIDIA is at 8% and the energy sector is at 2-3%. In fact, the last 1 year, total return of S&P 500, 20% of that total return was only NVIDIA. Right. So the point that I'm trying to make is that if you try and pick individual stocks and you don't get it correct, you probably might lose out on a great opportunity that you could have made when the overall sector ended up doing well. Now, what is happening is if you look at probably S&P 500 and you look at the last, let's say, 5 years of data, you will see that 30-35% of S&P 500 is actually the Magnificent Seven. But in spite of 30-35%, which is a significant weight to 7 stocks in a particular sector, these stocks have been innovating and growing at a very fast pace, right?
True.
Because of which 51% of the total return that the S&P 500 generated was generated by these 7 stocks alone. So to answer your question, I would suggest that instead of picking stocks, you should actually end up picking indexes that you want to invest in. If you want to play this thing, NASDAQ will be a great opportunity. But for retail investors, they might want to stick to more diversified fund, but sophisticated investors can take this bet depending on what their understanding and risk profile is. But I don't think you should have more than 10-15% allocation on a very high side to a particular sector, which includes your equity diversified funds having exposure to tech, plus your global diversification, which may include probably NASDAQ.
Okay. Can look at diversified funds if you all want to look at. That would be a better option that both Harsh as well as Keerthan have said. Harsh, just a quick one. What is the allocation you would suggest as well? 10-15% as well? Nothing more than that, right?
Yeah, so in terms of global diversification you're talking, so it could be 10-20%. Now, depending, of course, if there is an individual who foresees future expenses in dollar terms, for children's higher education for that matter, could look at allocating a little more purely for the sake that you need a dollar exposure. But in terms of geographical diversification, anything between 10-20% is a fair amount to allocate towards international equities.
Okay, 10-20%. Keep it out in that range only for global diversification. But Harsh as well as Keerthan, thank you so much for joining us. We're absolutely out of our time on this edition of MF Corner. So thanks for giving us those details in terms of tech and AI funds as well as in terms of China fund, whether you should look at investing. With that, it's a goodbye from Sonal, myself as well as the team who put this show together. Don't go anywhere. You have Closing Bell up next.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Absolutely flat, no significant movements whatsoever.
If everything works out well today, we'll have a trilat.
The big question is whether there is more left after yesterday's big move.
PNB Housing Finance, possible stock that comes out of the F&O ban.
The CV industry would probably fall into the 18% category, which is a 10% reduction.
We think that moderate intensity rain will continue throughout the day.
Nifty starting with 20-odd points, 24,900.
We are excited to be listed in the public markets.
BMC has declared a holiday for government and semi-government offices.
The markets are quiet, but not so quiet as well. We have seen a gain of 50 points on the Nifty.
Sources say China has assured India that concerns around imports of high rare earth magnets, tunnel boring machines and fertilizers are being addressed.
We are just shy of that 25,000 mark currently. We did touch it, but we have receded from those levels.
Last hour coming up. The day, as you could see in the recap, has been pretty uneventful, although it's been up for the most parts. We are back at almost at the day's highest point, 100 points, nearly 100 points on the Nifty, 24,970. This is Closing Bell. We are coming to you, as always, from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. Afternoon.
Hi, afternoon. It's a good follow-on rally, right? After what we saw yesterday, we made a dash towards 25,000. We've retraced a bit, but again, if you can see the last 20-30 minutes, we're climbing back higher.
Well, I think that 25,050 mark is going to be important. Yesterday, we went very close to that mark and we resisted it. Today, we went around 25,000 odd. But the bulls will feel they're in the game. You know, till that 24,700 mark is holding out, you'll feel that the bulls have it. And with the rupee, that strength that we're seeing on the rupee, that's quite encouraging. So I don't know whether the street is preempting something with regard to a deal or some kind of good news. But the strength in the money market is something that's extremely positive. Prashant, a few sessions ago, we were talking about the S&P upgrade came, and we didn't see a big reaction. Now you're seeing a good amount of a pullback. So I think this is a positive sign.
Absolutely. It's a big one, actually, 35 odd paise, right? So maybe a bit of a delayed reaction to the upgrade. But we'll see. I mean, if this is, a reaction or is it a preemption of what is to come? We don't know that as of now. And we'll have Lata join us in a bit from now to talk to us about what this really entails. Actually, it's very, very scattered. The move is pretty scattered. It's very, very stock specific. But it's actually 2.5:1 in terms of advances to decline ratio. So that is good. 1,900 stocks are higher and about 1,000 stocks are, 980 odd stocks are lower at this point in time. Lots of auto component names are higher. Some industrial companies are strong. There are textile names which are up. But, I mean, it's not a big, broad sectoral move which is taking place anywhere. And I think that's the kind of market that we are trading with. That's the movers and shakers, Reliance and Tata Motors on one end, I think doing the heavy lifting. In terms of levels, so we are 24,970 right now. Yesterday, you crossed the 20-day and then you also crossed the 50% retracement of the fall. The 61.8% retracement of the fall essentially is at the 25,160 levels. Which is still some distance away. We'll have to see if the market's got strength to get up to that level, because that's the first negation of the downtrend that one would like to see before the market does anything more. Let me just quickly run you through what's coming up here in the next 60 minutes or so. We're at the day's high. The Nifty is hovering near 25,000 levels. Broader markets are outperforming. Shares of automakers are buzzing in trade. We'll, of course, have Sud come up to explain why that is happening. There is a China connection there. There's also BlueStone Jewelry, which is in focus. It's made a weak debut as far as listing is concerned. A 1% discount to this IPO price, except for our chat with the company that we had a little earlier. And of course, a bunch of other areas which we focus on as well. As I said, rupee is one of them. Prima.
Well, let's just quickly take stock of the markets now at 2:30. Auto is your top sectoral gainer. That's up nearly 1.5%. That's the Nifty Auto Index. Its constituents, Tata Motors is your top Nifty gainer. In fact, the top three gainers are in the auto space. Tata Motors followed by Hero MotoCorp and then a Bajaj Auto. And Reliance Industries has been providing strength. Reliance Industries is up close to about 2.5%. And that's been a big mover. But, generally barring a defense sector, which is under pressure, the Nifty Defense Index, most of the sectors are ticking higher, whether it's metals, whether it's FMCG. The Nifty FMCG index is also up close to about 0.7%. IT has also got a bit of a green tick. Banks are underperforming, but in the green. So broadly, while Auto and Reliance Industries is showing you strength and leadership, most of the sectors are higher today. And you've got lots of interesting movers in the broader markets. So Ola Electric has been strong for the last couple of days. Lots of momentum there. Devyani International is another one. Brigade Hotels higher. And then we'll discuss the auto anchs as well with Sudarshan. But let's get in a few closing strategies then.
Well, that's right. Let's get in Mitesh Thakkar back with us on the show. By the way, we have S&P that's come out with another view. That's on Reliance Industries. Rating could be upgraded over the next 12 months. And Reliance Industries is the one that's actually found its form today. I think if you pull up a contribution chart, bulk of this gain that we're seeing of around 90 points will be attributed to Reliance Industries. And, obviously, the commentary coming in from Reliance, from S&P, definitely helping that cause. Actually, 2/3 of today's move is attributed just to one stock, which is Reliance Industries. Big Boy finds its form. I think it's around 1% or 1.5% away from the 20 DMA. So if you can get past that, that'll be a technical trigger as well you'll be looking at with regard to Reliance Industries. Well, Mitesh is back with us. Mitesh, tell us your view on Reliance Industries. That big boy finding its form, it led the way all the way to around 1600. Then it lost its way. But now it seems it's getting its way back. How's it looking on the charts? And what about the Nifty?
Good afternoon. So Reliance was a trading buy call during the day as well. It's now at the day as well. The structure suggests that we might have bottomed out around this 13 to 16 mark and are in the process of giving a reversal. The target which I have in mind are closer to about 1460, 1470 zone to begin with. And then we can look at higher levels. So positively. On the index also similar kind of an outlook. I said today would be a day when I would want to buy in case you get a decline because morning there was a soft opening. And the next set of targets will be around 25 to 50 to about 25 320. I think that's the zone which I'm looking at. The Nifty will head towards the levels. And on the stock side, Chola Finance is a buy for me. Keep a stock below levels of 1500 here, look for targets of 1570. And a Bank of India, that's a buy as well. Keep a stop at 114, look for targets of 120.
Okay, all right. Mitesh, thank you very much for that. Those are individual trades which are being proposed by Mitesh at this point. Now, the big story, and I think this has got widespread implications, not limited to any one sector. A thaw in the China-India relations. We've been reporting on this in terms of the last few weeks now. China is assured to address three key concerns with regards to India. Rare earth magnets is one of them. Parikshit is joining us to tell us more in terms of what's on the agenda and where we can see relief. Parikshit, over to you.
We might be seeing a major breakthrough in India-China relations, especially when it comes to import of critical components. External Affairs Minister S. Jaishankar met his Chinese counterpart in Delhi on Monday, and sources say China has assured India that concerns around imports of high rare earth magnets, tunnel boring machines and fertilizers are being addressed. Since April this year, China had imposed restrictions on these items, and as a result, imports of such critical components and equipments from China had been stopped. Now, if China lifts these restrictions, then it will be a big relief for industries like the auto sector, but we are yet to see how and when and in what manner will these restrictions be lifted. We are given to understand that all of this will happen in an incremental manner over the next few months. We have been seeing how both the countries have taken a decision on resuming flights as well. During his meeting with Wang Yi, External Affairs Minister Jaishankar sought a candid and constructive approach to bilateral ties and about moving forward after a difficult period in the relationship. This was the first meeting between the Indian and Chinese foreign ministers in India. Wang Yi, on his part, spoke about unilateral bullying and threats to free trade and international order. A Chinese statement said that India and China should strengthen their confidence, meet each other halfway, eliminate interference, expand cooperation, and consolidate momentum for improvement in India-China ties. This was not the first time when India has raised concerns about informal economic restrictions, including those on magnets. It has been raised multiple times over the past few months at the level of Foreign Secretary, NSA, EAM, Defense Minister. China, according to sources, is demanding that India provide a level playing field to Chinese companies, do away with Press Note 3, which mentions that investments from land border countries have to be vetted by the Indian government, and also give more market access to Chinese firms. This is, in a way, setting the ground for the meeting between Prime Minister Modi and President Xi Jinping at Tianjin at the SCO summit on 31st August and 1st of September.
Thank you very much for that. And this explains the optimism, the surge that we're seeing in auto and auto ancillaries. Look at the up move. There's a Samvardhan, Motherson wiring. We spoke about Ola Electric, but across the board, big move seen in auto. In fact, Sudarshan is joining in to tell us that if there is some relief on these rare earth magnets, what could be the implications for Indian automakers? Sudarshan.
So it's the second day in the running that you are seeing a big gain in all the auto stocks. Nifty Auto Index, Nifty EV Index, all these both these indices are up more than 1% each. Even all these stocks are higher. Now, why these stocks are higher? So in the morning, we have reported that Indian Foreign Minister had a meeting with Chinese Foreign Minister, and in that some of the issues have been raised, and one of those issues was regarding rare earth magnet supply that China had announced that it will curb supply. And after that, we had heard from all these auto companies that if the supply shortage persists, then these companies have to go ahead and cut the production. But now, after this news, further China is considering to lift the curb on rare earth magnet supply. This will be taken positively, especially for those companies which have huge EV exposure. So amongst major auto companies, Tata Motors has the biggest EV exposure in the form of JLR, which forms nearly 70% of its total sales. And now that's the reason you are seeing a big gain in Tata Motors. It's currently up more than 3%, its top Nifty gainers. And it's also positive for companies which have hybrid exposure. And in that, Maruti will be top beneficiary because amongst Indian companies, it's the one company which has huge exposure in hybrid segment. Currently it has two models, Grand Vitara and Invicto, which comes in the hybrid format also. And that's the reason you are seeing a big move in Maruti as well. Now, amongst auto ancillaries, because they will benefit because they have the clients which have exposure to EV. And because of that, you are seeing a big move in Samvardhana, Motherson, Sona, BMW. Both these companies have clients which have exposure to EV. Now, apart from GST rationalization and this rare earth magnet news flow, one positive factor that can also be talked about is the upcoming festive season. So ahead of festive season, normally we see a big move in companies, basically stocks, which have major exposure in entry-level segment. So amongst two-wheelers, Hero Moto is the top market leader in entry-level segment. And that's the reason over the last few days, you have been seeing a big move in Hero Moto. And amongst four-wheelers, it's a similar move that we have seen in Maruti Suzuki.
Thank you very much for that. Gurmeet Chadha is now joining in, managing partner and CIO at Complete Circle. Gurmeet, your best auto or auto ancillary stock pick at these levels?
I think yesterday was the news of GST of, in two-wheelers and maybe entry segment vehicles, GST getting reduced. So, and today obviously this is rare earth. I think while news can drive stock prices slightly, but I think we probably need to see more durable demand coming in because the numbers have been pretty flattish, except if you remove M&M in passenger vehicle and farm equipment and maybe TVS motors in two-wheelers. But with festive season coming, I think there should be some demand coming in. So we have M&M and TVS and Uno Minda in our portfolio as far as auto is concerned. Tata Motors, from a valuation point of view and from a point of view that the rare earth issue gets resolved. Second, I think the CV uptick can also come as economy picks up. Also, their JLR issues, but once the tariffs issues get resolved, probably that's a better contributor and place to be in. But I think that we have to wait. But tactically, at around 600-700 levels, I think Tata Motors also makes sense only from a valuation point of view. So we are pretty constructive here, and I think it has had a two years pretty flattish as far as the industry is concerned. I think some uptick should come as overall GST cuts come in and more stimulus is provided to the economy.
Okay, all right. Hi, Gurmeet. Good to see you, Win. What about from the auto ancillary pack? What do you like? I think Uno Minda was something that you all were in early. Anything else?
Yeah, so we have Sandhar also managing in the portfolio that, if you see the mix for Sandhar is more towards two-wheelers than four-wheelers. It makes locks, it makes frames, then they are also into castings, etc. And obviously they are now trying to build some bit of an EV portfolio as well. Yesterday did a very small acquisition as well. So, and obviously debt reduction, that's something also we are tracking. At some point of time, maybe KPIT also, there's been a lot of pressure on, it's more a auto-led tech play, but that's something which is their proprietary models, especially on auto driving and others, is quite good. So maybe once the overall demand picks up, maybe at some point of time later, KPIT technology as well.
We want to play out the soundbite of the new listing, BlueStone, which I will do in just a bit, Gurmeet. But Sandhar you've liked Sandhar for a while, right? You own this name.
No, we don't have Samvardhana Prashant in the portfolio. Uno Minda is something we've been holding now for almost 8-9 years.
Okay.
When the market cap was 4,000, 5,000 crores.
I see. Anything new you've added, Gurmeet?
So we are now looking at, Prashant, as I said, two spaces. I think you will see more announcement by the government on semiconductors, chips, etc. So we've added CG Power, although that's more power equipment and systems to begin with. But if you see, there are three clear winners here. One is Tata Electronics, which is in the unlisted space. Then you have CG Power, and then you have a little bit is Keynes, more related to the EMS part of it. And also, Prashant, it needs regular capex and very focused capex. So the technology is also moved from silicon carbide now to gallium nitride, and that needs very special R&D, and so you need to bet on a big group who has the ability to do informed capex, keeping capital allocation in mind. So it's more futuristic there. We've increased some exposure to the new age companies. Once the Ant Group sold its entire stake in Paytm, I think we finally entered 197 Paytm. We've increased exposure in Eternal. So that's the second space we have added. And we are now looking at some agriculture-oriented themes. I think there's a big uptick in rural demand. It's visible from some of the commentaries and some of the dealer checks we have done with auto dealers, with wholesale dealers of fertilizers and crop protection. We have started adding Coromandel International as well.
So in the new age tech companies, you now, I think PB FinTech is something you've liked in the past. You now own Paytm and you own Eternal, right? These would be the three companies?
Yeah, three. And I also think Jio is also new age, Jio Financial. So if you add 4, that would be like 10% of the portfolio.
Oh, got that. In fact, talking about new age, tech companies or tech-enabled companies, you had BlueStone Jewelers. Well, the opening tick was nothing much. In fact, it opened at a marginal discount, down 1.5%. But now the stock price is picking up. I think it's up 5-6%. We spoke to Gaurav Singh Kushwaha, the CMD and CEO of the company, BlueStone Jewelry and Lifestyle, about the growth plans. Listen in to what they had to say.
So far, what we have seen is even for the oldest of the cohorts, stores which are open 4 years, 5 years, 6 years back, there also the SSSG was in excess of 20%. So we have never seen any cohort of stores where our same store sale growth has ever dipped below 20%. So I think, and that is something that we continue to see in our current numbers also. For the last full year, that number was around 9%. On a run rate basis, that number is trending closer to 7%, and it's going to come down from there.
Did you analyze BlueStone IPO? I mean, the growth is very strong. I think the past 2 years, growth is 51%. As he said, even in the new stores, the same store sales growth is over 20%. Very high gross margins, highest in the industry, but it's still loss-making. Given the kind of growth plans that they have and accelerated store openings, you don't know when it's going to turn profitable. What are your thoughts on BlueStone?
I think the growth numbers have been impressive. Some of our clients actually on their own took some exposure even in pre-IPO in this name, considering the mix of digital and the feel and touch model they have. And the growth has been very good. They're opening branches, so they are in the expansion space. But in general, on discretionary spending, if I were to make that as a category, we think there are some clear winners coming. So we have Interglobe, which is the travel part of it. We have a couple of hotel stocks, Indian Hotel and Lemon Tree we bought. We recently bought Taj GVK. That's more like a special situation now. It's the most cheapest hotel stock at about 20 times versus 50, 60 times others. So I think there's an overhang in terms of Taj Group selling its stake. I think that should get settled over a period of time. And then we have now looking at some of the players like Trent. So as GST cuts come in, consumption pick up, and some things move from 18 to 5. I think the broader consumption play will adjust. So we are increasing our weightage to Trent as well. And then you have a quasi play coming through Eternal and some of the new age platforms of e-commerce as well.
Yeah, no. Have you looked at car trade? I was just looking at the price yesterday. What a move, right? Car trade. I think gone up 3x in the last less than a year.
We booked out a little early, Prashant. We did end up, but I think sometimes the stock market should always give you regrets. Sometimes not exiting at the right time, and sometimes exiting too soon. The car trade was one of those.
I mean, I think it was the last of the stocks to start to move, right, from that plethora of companies which listed digital kind of names. I mean, I've just looked at Paytm, which was at the bottom of the screen, another 4-5%, 1,200 plus. Just recently crossed the 4-digit mark and has kept going. So there is a fair bit of action which is underway. So basically, on the semiconductor side, which you said, right, you bought CG for the semiconductor play along with the transformers, etc.
Yeah, so I think both the power equipment and AI play and some of the data center plays will find its way in terms of weightage in the portfolio. So then one is obviously HBL Power, which is now HBL Electric, which is a bit of a battery come pseudo data center play. Then we had it in rectifiers long back, which is more a transformer play, basically into locomotives and 90% revenue coming from railways and some pivot happening. And then we have added CG Power, which is probably one of the proper listed bets on semiconductor chips as and when it plays out, because you have Micron, you have Tata Electronics, and you have CG Power in terms of large plays. The other two are basically unlisted. And I think the way I think you will see, Prashant, more series of reforms and PLIs coming on this side. So energy security, data security, and semiconductor chip security, I think is top priority right now for any government. Not just India.
Okay, Gurmeet, we'll take a quick break here. Thank you very much for joining us, but good conversation and good ideas there. Appreciate it. We'll take a break. We are back and we'll keep this conversation going with Rahul Veera on the other side. He's with Nippon India AIF. Stay tuned, coming up.
Welcome back. It's 24,950 on the Nifty as we speak, 80 points up on the Sensex. It's a gain of close to about 300 points. A couple of stocks that deserve mention. HLE Glasscoat has been a big mover on very large volumes. Volumes in NSE are about 76 lakh shares, much higher than what we typically see. And the stock has been a big mover, 20% up on HLE Glass. Jamna Auto, again an auto ancillary, gaining ground. GE Power, 10.5%. Pull up a Delta Corp. That's seen a big move in the last few minutes or so. Yatra Online too is now back in the green. It was in the red, but Yatra Online has also seen a bit of a spike.
Jaiswal Nico, another one.
Jaiswal Nico is another one. And Samhi Hotels, we were just chatting with Gurmeet and he was talking about how he likes hotels. He added Taj GVK. Samhi Hotels too is another stock which is higher in trade. In fact, it's a good time then to get all the buzzers. Hormus is now joining in and he's putting the spotlight on all the top movers.
You put the spotlight on a couple of them that I wanted to highlight. HLE Glasscoat, of course, was one of them. It's the biggest single-day gain that the stock has seen since May of this year. It had 80 lakh shares that have changed hands today compared to a 20-day average of just 1.5 lakh. And this is possibly going to be the first positive annual year that the stock is going to have after 3 negative years consecutively. Bellrise Industries is one of them. Auto ancillaries, all of them are moving higher. This is also the biggest single-day gain since the stock listed in the month of May. We've already had over 5 crore shares changing hands today compared to a 20-day average of just 1 crore shares. And within 3 months of listing, the stock has already risen 70% from its IPO price. The IPO price was 90 rupees. The stock now at 150. IFGL Refractories, another 20% circuit for the stock today. This is also the biggest single day gain since May of this year. We've already had 8.5 lakh shares that have changed hands. Now look at the 20-day average here. That's 20,000 shares. And take a look at the volumes on this stock. And as a result of this move, the stock has gone above its 50-day moving average and also turned positive on a year-to-date basis. What has also turned positive on a year-to-date basis is Jamna Auto. And this 12.5% move today is the biggest single day gain since December of 21, and it's gained in 5 out of the last 6 sessions. And here too, the volumes are substantially higher today. 6 crore shares changing hands compared to a 20-day average of just 6 lakh shares. And this too, as I mentioned, has turned positive for the year. And lastly, Aarti Pharma Labs, this also has seen a very strong move today, 9% higher on the stock, the biggest single day gain since April. Had 9 lakh shares changing hands compared to a 20-day average of 3 lakhs. And courtesy of this move today, the stock has reclaimed its 100-day moving average on the upside.
All right, interesting list as always, Hormus, and keep spotting stocks, and that's it's all about stocks, individual stocks, not a big sectoral move of any kind at all. Rahul Veera is with us, fund manager, equity investments, Nippon India, AIF. Rahul, good to have you with us here. Thanks very much for your time. That big story, of course, was the some kind of thawing of relations with regards to China, and the big pain point has been rare earth magnets, which hopefully now gets resolved. As a long short fund, as someone who sort of trades in and out, Rahul, any opportunistically any trades here on the back of this news? I mean, it'll show up in various places. We're only talking about one, which is rare earth. Your thoughts, Rahul?
Sure. Hi, good afternoon. Our view is, as of now, consumer discretionary, auto banks will remain the key themes for the next 6 to 12 months. See, for the near term, there could be some Q2. We'll see some kind of a disruption due to the deferment of purchases from the consumers. But Q3, Q4 eventually is going to play out well for the consumer discretionary names. Now, from our perspective, we believe the overall market from mid-cap, small-cap segment will continue to do well from here on. Also, the large caps will see some kind of a muted earnings growth, but in terms of the liquidity given there, FI is coming back. That is a big call that we have taken. We'll see Nifty moving up very sharply going forward in the next 6 to 12 months.
So you see a reversal in the FI sentiment towards India. We'll start seeing inflows?
Absolutely. That is a call, internal discussions, and our view is that FIs will start moving up into India.
And in consumer discretionary, the basket is vast. Which stocks do you like, Rahul?
So we prefer urban consumption names. Some of the names that we prefer are from the platform side of it. The other key themes are some of the higher priced segment where we believe, although the GST cut may or may not directly be beneficial, but the consumption volumes will definitely go up. So we are taking a little bit contra call there. given the kind of a GST theme that is going on. But some of the key themes will continue to be from the platform side.
Okay, all right. Hi, Rahul. Good to see you in. The stock market plays had a bombastic run. Big move is what you saw on the exchanges. Even unlisted NSE had a big run. Then you had brokers, wealth management companies. They did very well. But we had some flashes that were up on the screen that could be curtailing some of this options activity that we're seeing. Given that sort of a backdrop, capital market plays, how are you all positioned? Do you like some of them post the correction? Or do you think they ran too fast ahead of itself?
So we like one of the capital market play which encapsulates across all the subsegments. Basically, AMC plus broker plus investment managers plus wealth management together. We like one of that name which encapsulates all of the across capital market themes together. We like that name. It's one of the topics for us, right? Also, we believe some of the platforms, again, will continue to do well for us. We believe that one of these platform names, right, on the CDSL and KFIN side, we believe these kind of platforms are there over the next 10 years, given the financialization that is happening over the next 10 years in India. We believe one of the key themes will remain this platform plays within the capital market segment.
Right. Sorry, Rahul, with full disclosure, you want to name the name? What are we talking about here? Motilal, is it?
Yeah.
Okay, Motilal also.
One of our large holdings, yeah.
One of the large holdings. But that's the space that you are pretty bullish on, the entire capital market space.
Absolutely. We believe, across financialization is a theme for next 10 years in India now. Whether you want to play directly via a brokerage play, you want to do a platform play, you want to play a AMC, we believe these names will help us over the next 10 years to create wealth for us as well.
So consumer discretionary, capital markets, what else? Incrementally, where are you deploying money right now?
See, within the IT space, as per our last discussion, if you recollect, the mid-cap names, the IT-enabled services, right, the BPO services side, we believe that is also a segment to play, where we're seeing 12 to 15% growth in the BPO segment. We believe these kind of alpha names will help us generate a decent return in the medium term.
So that would be the first source in terms of BPO names?
A few others as well.
Few others, okay. You were also looking at ER&D. I remember our last conversation, ER&D valuations are close to the bottom. Have you made any purchases or you're still evaluating?
We are still under evaluation as of now, but we believe valuations are closer to rock bottom. In the next 6 to 12 months, things should start turning around for them for sure.
Any semiconductors or AI plays? I mean, what's the best way to play this theme in India?
In our view, this is a little bit far-fetched as of now. Let the government play out all the policies. Plus, we have to look out in the geopolitical situation, how things will pan out for us, and then we'll take a call on these names.
Okay, all right. Rahul, a quick word in terms of how you're playing the entire fairest, non-fairest theme, because China is trying to restart their economy, trying to push things up. On the domestic front as well, you have some protection, which will last good 3 years. So there is some visibility out there. How are you all positioned out there?
See, given we don't have any of these names as of now, right? Given the geopolitical situation plus the export-oriented kind of prices are going to make things difficult for a lot of these names, right? Very difficult to evaluate. None of them are in the kind of deep value zone as of now. So we don't have any of these names as of now.
Got that. We'll leave it there, Rahul. Thank you very much for joining us. A quick conversation today, but useful. Appreciate your time here on CNBC TV18. I think we've got 100 points on the market, on the Nifty, 24,977. We'll take another quick commercial break here. But what's happening in D Street dealing rooms? And Nimesh has been working the phones. Emptier than usual or populated? Well populated because of Mumbai rains. I mean, we'll see. Of course, there is a list of stocks which come up along with D Street Chatter as well. So that's coming up in just a bit.
Welcome back. Let's get a handle on now what's happening in the dealing rooms. Nimesh is now joining in on D Street Chatter. Nimesh.
Hi, Rimana. So the momentum from yesterday is just building on, and today for a change is backed by institutional buying as well. Yesterday that was not the case, but it looks like today is backed by FI and domestic buying. And what is more heartening is the mid-cap index. That index is up 1%, and we're seeing a lot of interest in the broader market names today. And that is specifically what I understand that the domestic funds are quite active bidders into the broader market stocks. So that move in the mid and small cap is backed by some institutional buying or institutional interest as well in today's market. The sector which stands out for the second day running is the auto name. The index is up another 1.5%. And a lot of individual stocks within the auto names are buzzing. And even yesterday, the feedback was that the auto move was backed by institutional buying. So the big beneficiary of GST could be that sector, and hence you're seeing a bit of positioning from domestic funds into the auto sector. Technically, for second day running, we are testing the Nifty is trying to test the levels of 24,950. That's a very crucial resistance. If that gets taken out, the feedback is that you might see a further short covering rally in the days to come. But today it looks like the move, especially in the broader market, is backed by some bit of institutional interest and buying as well from domestic funds.
In fact, the mid-cap index is now up 1%. As you said, when we started the show at 2:30, it was about a 0.6, 0.7% gain. It's now moved to the high point. What about stocks, Nimesh? What do you have on your radar?
A lot of individual stocks within the broader baskets are buzzing in trade today. So the first name is Devyani International. Big move on that stock and on large volumes as well. I understand there is very strong buying from larger HNIs, and also the city is anticipating a big corporate development in Devyani very soon. So that's the first name. The second stock is Ola Electric. Again, a big move on that stock and on very, very large volumes. I guess today will be a very large delivery volume day for Ola Electric. Of course, it benefits from the entire auto basket doing good. But specific to Ola, I understand also the selling pressure from a leading FI fund seems to be largely over with today's volume. So that explains a big move in Ola there. The third name is Avenue Supermart. Again, within the consumption basket, it has relatively outperformed in the last few days. There has been a bit of buying interest back. And also in Avenue Supermart, there is an anticipation of a corporate development there. So that's the third name. And the last one is Cipla. Within the pharma stocks or the pharma sector, Cipla has relatively outperformed in the last few weeks. One, because of some domestic funds buying into it. And also there is an anticipation that maybe the company is going to announce a tie-up with a large MNC company very soon for one of the blockbuster drugs. So that's the buzz as far as Cipla is concerned.
Nimesh, by the way, dealing rooms well populated given rains?
I haven't got so much of feedback on whether there is a participation or not, but generally there is volumes for sure.
Yeah, there's volumes. But interesting list of stocks as always, and we will keep an eye on some of these names. There is Devyani, Ola, Avenue Supermarts and Cipla as well. Let's talk about what's happening on the F&O side of things. Nigel has walked across to the F&O desk. Nigel, take it away.
Well, it's actually a good trading session because, we were a little bit weakish in the initial hours of trade. But then after that, you are seeing a good bounce. And as we speak, we're going to be ending closer to the high point of the day. And there's clearly a bit of short covering that's taken place. The Nifty is up close to under 100 points. The open interest is mildly lower. Even if you look at the Nifty Bank, out there, actually, the shorts had piled up more. So we have to see an outsized move. It could actually come on the Nifty Bank, which has underperformed in the last few trading sessions. Today as well as doing a relative underperformance, but there are signs that now those shorts are gradually covering positions over there. Moving to the options data, that's looking encouraging as well. 24,900 put. Massive open interest built up out there, close to around 80 lakh shares. The premium has crashed by more than 50%. You pull up the 25,000 put. Now, this edition has actually started in the last 2 hours or so because the open interest built up out there was only around 25 to 30 lakh shares. Now we are seeing a big surge in terms of open interest. So those bulls, they're getting a little bit more confident. They believe that maybe the near term, we could defend the lower levels. And if you're looking at the options data, it's suggesting a broad range. And we're heading towards the upper end of the range because the 25,000 call as well. Remember, you've got it right over here. The Nifty is up close to around 90 points. But if you bought this call, you haven't made money, because the writing aggression is more this particular strike. So just take a look at that. The premium actually is a little bit lower on that name, which gives us a broad range. Downside, 24,700. Well, that's the level that you're looking at in terms of the downside. On the upside, the 25,100. Well, that's the important mark that you're looking at. The range that we are working with in today's trading session, that comes up for you on the screen. Let's get that up. The Nifty Bank as well, that's doing pretty well in today's trading session. But, that one as well, if you look at it, the 20-day MA remains elusive. One stock that I want to focus on is PG Electroplast. Keep an eye out on that stock. It's possibly the one that comes out of the F&O ban. So I think we should get that one up for you on the screen. massive open interest build up on Paytm as well. Back to you guys.
Thank you very much for that. More and more auto stocks are moving up. Bellrise Industries, one of the recent listings, IPO price was 90. Stock is now at 157. Big 12-13% gain on that. Hyundai Motors is up nearly 5%. Everready, the battery maker, Everready is gained nearly 7%. Ather we spoke about, Ola we spoke about. So some of these auto ancillary continue to rise. Force Motors, another forceful move coming in. Stock is up nearly 3.5%. Mitesh is now with us with a few BTST calls. Mitesh, the momentum is building up in individual stocks. Look at the mid-cap index.
Yeah. Very stance and we maintain that even on the BTST percent, I have both buying stocks. HUL is the first one on the list, near the base right there. So BTST here, the stop at 25.87 and a target of 26.30 is what I'm looking at. The other one is IIFL. So BTST with the stop at about 470 for target, 469.5 for target of 478.
I mean, went across 500, then fell to about 450, coming back up with that 5% pop today. That is IIFL there. Thanks very much, Mitesh, for that. 94 still holding on the Nifty, 24,970. You know, we started with, of course, what was happening on the rupee, and it's hit a 3-week high of 86.96, about 35.40 paise today. So what's happening? What's going on? Latha is with us in the studios to take us through exactly that. Latha, over to you.
Well, it is the best performing currency today, actually. A gain of about 0.4, nearly 0.5%. And on a day when actually the dollar was not all that weak, the dollar actually started on the front foot. The surprise for the rupee has been after weeks of negative news, serious FPI outflows. Yesterday we saw an FPI inflow, and that's kind of fired people's imagination. The chatter in the market is that FPIs are, selling off dollars, buying the rupee even today, and therefore those with long dollar positions are unwinding. The Reserve Bank has no picture, by the way. It's entirely a market-driven rally that we are seeing in the rupee. And then, of course, there is some positive chatter as well that tariff issue will be resolved, if not on August 27th itself, probably in a month or so. The easier trade with China is also creating some kind of positivity in the market. It looks like the worst is over for the rupee kind of chatter. The bond market is exactly the opposite. The worst is very much hitting that market. It's, to be fair, the bond market was broken even prior to the rating upgrade. There were simply no buyers. When the rating upgrade came, it came in the dying hours of Thursday. So bonds rallied very sharply, but they were the only ones that rallied. The rupee never showed any recovery. And what we are seeing on Monday and Tuesday is using the GST cuts as an excuse. Bond markets have seriously sold off. The rally was uncalled for, and therefore the sell-off, should be expected. Actually, the bond market is broken for some time now, at least for the past month or so. There are no buyers. Banks are sitting on losses on their hold-to-maturity book. Insurance companies, which had demand last year, were doing forward purchases, are really not seeing that much business. And FPIs, which were buyers and expected to be buyers, have turned sellers now. In fact, to be fair, foreign funds everywhere are actually selling off bonds. There is a bond aversion. Irrespective of, even in the US, you're not finding too many buyers. This is a broken market. Now, what will turn the sentiment is difficult to say. The Reserve Bank is nowhere near doing an OMO or anything. It's a market that is just waiting for good news, seriously broken at this point.
Okay, thank you very much for that. Latha, let's get on the show. Jay Bala from cashthechaos.com. Just last week, he was telling us that Nifty's corrective phase may be coming to an end. Before we get to Jay Bala, let's also get you some excerpts from our conversation with Rajiv Batra of JP Morgan, who weighed in on the foreign portfolio investors as a factor in the market and the need for double-digit earnings growth from Indian companies.
Foreign investors are growth tourists. They invest in the destinations that offers them premium growth. Till India was offering them, India was all in favor. Now, even if I will say that, absolute sense, India valuations are expensive, but in a relative terms, looking at average valuations of India to emerging markets or other EM peer, we are well below the average ranks of that premium also. Still, people will not visit because the complaint will be that PEG ratio of country is still not around 2 or below 2 kind of a mark. So only one variable which is important is growth. And hence you can see in flows. Flows, if you take the passive guys out, because in 13 billion, close to 8 billion has come from the passive side in India, net inflow. Active guys have seen close to $21 billion kind of an outflow. So growth is a key ingredient for active foreign fund managers to make a comeback. It will start with your high frequency macro growth data points, which are your monthlies and weeklies, and then followed up with the earnings data print. We have a pretty good high single digit earning growth for MSCI India for first quarter FY26, but that doesn't still bring India's PEG ratio to close to 2. So once we come around the territory of 2, that is around 12 to 13% earning growth kind of a criteria, it may satisfy my foreign investors' need.
Okay, now let's get in Jay Bala from cashthekiosk.com. He is with us. Jay, last week you were telling us that perhaps the corrective phase is now behind us. Markets could get higher. And the first marker you were looking at was 24,950. And we're exactly there, around that level, a couple of points up. Where do we go from here? Do you still see momentum in the markets?
Yeah, I think the market is likely to play catch-up for the underperformance of the last several weeks. It's underperformed the Asian peers. So I'm expecting a much more bullish move to come through for the markets. It'll surprise a lot of people on the upside. I don't think the market is likely to drop below 24,700, 24,650. So that will be the short-term support for the market. I'm maintaining the medium-term view of about 29,000 for the Nifty from a 6 to 12 months perspective. The fact that yesterday we had about 150 stocks on the BSE clocking 52-week highs is showing the market's breadth is widening, and the gap up in auto stocks. I've been bullish on auto stocks for several weeks now, and that's telling us this is start of a very powerful move. And Reliance is perking up today. That's a very positive price action. So a lot of things are adding up for the bullish case.
All right. Hi, Jay. Good to see you in, and you're sounding bullish yet again. So that's good. You've maintained that actually for the last few times we've interacted after, talking about that 19,000, 20,000 or thereabouts. So Jay is the bull. That's good. Let's talk about the currency space, Jay. A quick comment over there. Dollar index, if you're tracking any level. And the Indian rupee, actually, that's pulled back a goodish bit. It was giving that sign that it wants to go to around 90, but it's pulled back. I think it's breached that 97 mark. So comment out there.
Yeah, let's take the rupee first. And the rupee is coming to a very important support. The recent high of 88, 89 might be, there's a possibility that it could be a long-term bottom. But, there's still a few weeks of evaluation is required. But the greater point is that it may not be that sensitive to be long-term bearish on the Indian rupee, but we could have a fleeting high past 88. So that probably one last high, but from a long-term perspective, I might want to get more bullish on the Indian rupee. So when it comes to the dollar index, the short term is quite choppy. As long as it can hold about 97, I think a short-term bounce to about 103 is pending for the dollar index. And post that, I anticipate the dollar index to test the long-term support about 94.5.
Okay, all right. Jay, stay with us. We're going to come back and talk about some individual names, some stocks, etc. as well. But there's 11 minutes to go for market closing, and it's remarkably the 100 points still very much there on the Nifty. Stay with us. Back with Jay with more.
Welcome back. Markets continue to hold on to solid gains as we speak. The Nifty is still up 100 points. We're going to end closer to around the 25,000 odd mark. But the bigger story today is the broader markets, because the breadth of the market has way more number of stocks advancing than declining. Jay Bala is still with us. Jay, I wanted your view on tech, because you look at it, the valuation front, one would say that premium in comparison to the Nifty valuations, that's got diminished to around 15%. In the past, we've seen it at around 30-35% as well. And the discount in comparison to the Nasdaq, that's widened to around 20%. We have seen it peak out at around 30%. That was, from where we did see a bounce. What is your take on the tech? It's not unlikely to grow so well. The globe is in a bit of a tizzy, but where is it headed?
Yeah, the tech sector isn't looking all that great, but it's coming to an important support closer to 34,200. And TCS is the main culprit for the drag. And I anticipate a final lower low that could bring in a relief rally, at least for the Nifty IT index. It could be something bigger, but I would treat it as a relief rally. A lower low somewhere about 29.90, and then a reversal is likely for TCS. If that were to happen, I think the Nifty IT index will stop falling. And once the Nifty IT index stops falling, it improves the overall market sentiment and the market's power. And if there were to be a relief rally, I think that will help give additional impetus to the market. So the tech, I'm not too positive, particularly frontline tech. But if you have to be in frontline tech, Infosys, Tech Mahindra, and HCL Tech are far better than TCS. But generally, I would avoid frontline IT, and whatever that comes through in the next few weeks is likely to be a counter-trend bounce.
Okay, all right. Let's talk about individual stocks. I believe both the picks are from auto and auto ancillary space. Tell us more.
That's right, Nigel. I've been bullish on the auto space, and the overall view on the auto index is that I'm anticipating fresh record highs closer to 28,500 to 30,600 for the Nifty auto index. So my two picks for the week is again from the auto space. First is Samvardhana Motherson Sumi. Stop loss of 88 and possible objective about 120. And Bajaj Auto, frontline name, I mentioned this a few weeks ago too. It's coming very close to a neckline of a inverse head and shoulder breakout. And within the Elliott wave pattern, this is possibly the beginning of wave 3, which is most often the powerful move for the stock. So once the stock crosses 8,900, we're likely to see an explosive move for Bajaj Auto, possibly to close at 10,500 and possibly to fresh record highs that Rajiv Bajaj was talking about several months back. So it's a very interesting juncture.
But I think he was talking about 20,000.
Yeah, fresh record highs. Let's be conservative. We can always trade with the trend. We can just trail the move and we can keep conservative objectives.
What about autos? Big, powerful breakout today. Where is it headed, and any stock calls in the auto sector?
Yeah, the two stocks are from the auto space, and as I said earlier, my objective for the Nifty auto index is 28,500 to 30,600. I believe that's a conservative objective. If auto index is like auto stocks like Bajaj is going to perform like Rajiv Bajaj is expecting 20,000. It can take out even 30,600 and proceed much higher.
Yeah. Two holding companies, this Bajaj Holdings, which is down about 5%. I'm not sure there's any news flow. And the other one is Chola Holdings. Chola Holdings is also down about 5% or so. So these two names will come up on your screens. And there is a bit of a cut which is appearing on both these holding companies at this point in time. Otherwise, there's not very much on the downside. A bulk of what is going on, at least in the broader market space, is stuff which is higher and strongly so at this point. Devyani is something which is sharply up. And I think Nimesh had, Sapphire on his list on D Street Chatter. So we'll see if there is any sort of related development there. Ola has been, of course, looking very, very strong from the word go. The Motherson twins are doing very well, and I think Jay had a call on one of the names there. Delta is sharply higher today on the back of volumes. There is Shelly Engineering, which will come up again, in the broader market space, which is looking pretty strong at this stage. Just a quick word, Jay. Autos, you think there is extension here in terms of gains? Auto stocks?
Yeah, I think this is start of a
Bajaj you mentioned, but broadly four-wheelers?
Yeah, I think two-wheelers are likely to do better than four-wheelers because they probably need to play catch-up. And I've been bullish on Mahindra and Mahindra since July, and it's gone to record highs. So possibly, and TVS Motors, the only one which has been doing very well within the two-wheeler space. So probably Bajaj and Hero are likely to play catch-up. And the gap is very clearly says yesterday's gap for the Nifty Auto Index says this is third wave of a particular degree. So a lot of higher highs are likely to come through.
Okay, all right. Jay, stay with us. We're going to just wrap up things here on this on closing bell as the bell comes up, the closing bell comes up. The Nifty 100 plus points, Nifty Bank a little, lesser, a 0.25% higher. Mid and small caps, of course, did the best with about 1% gains each on both indices. Market breadth looked pretty strong. Autos and auto ancillaries perhaps is the only area which did well as a sector. So Tata Motors, Bajaj, etc. from the OEM space, but the Motherson pack and so many other sort of, Bellrise, new listed company, Jamna Auto, actually lots of these smaller auto anch names actually did very well through the course of the day over the last couple of hours or so. Actually, the start was a little slow if you look at what the Nifty did, and then it really perked up quite a bit, and then never really looked back. Actually, if anything, for the first 30-40 minutes, the market looked like it perhaps is going to be a little sideways to lower, and then really started to move higher. So 24,989 is the close on the Nifty, about 112 points in the green.
Reliance Industries, that was the star today after after the company Reliance Jio tweaked its prepaid tariffs at the entry level. Reliance Industries ending with a gain of about 3%. Bharti Airtel up 1%. Eternal was up nearly 2%. Adani Ports spiked up close to about 3%. So Adani Ports had a big move towards the end. A couple of IT names, Tech Mahindra higher. Consumption names, Tata Consumer, Nestle, HUL also up in trade. On the way down, softness seen in Dr. Reddy's, Bajaj Finserv weak, Cipla, Hindalco, M&M were some of the drags. Well, that brings us to a close in this edition of Closing Bell. Thank you very much for watching. Don't go anywhere. On the other side is Markets Forward. Market ends with modest gains amidst mixed global cues. Broader market outperforms. Nifty fails to hold on to 25,000. India weak skid below the 4% on a good trade. Auto, FMCG, energy charge ahead, while select pharma stocks saw some pressure. Sources tell CNBC-TV18 the Chinese foreign minister has provided India assurances on fertilizers, rare earth magnets and tunnel boring machines. The likely easing of rare earth magnet supplies fires up auto stocks. Shares of telecom operators Bharti Airtel and Vodafone Idea, as well as Jio parent Reliance Industries, rally on expectations that higher data usage will help lead to tariff repair, with customers moving to higher data plans. Hello and welcome to Markets Forward, a special edition and your go-to show where we aim to get you all key data points to gear up for the next trading session. I'm Vinny Motiwala. With me is my colleague Vamakshi as well. Vamakshi, one more day where we have seen Nifty actually touch 25,000, then again came back. Yesterday also we had seen a good day coming in. And today, interestingly, how we saw the day starting was a bit muted. Slight gains, but then we picked up pace and we picked up momentum, closing almost near 25,000, but yes, missing that mark still in today's trading session.
Well, absolutely, Vinny. Despite the kind of downpour that we've seen, the grey skies, it's a vibrant green-looking screen. The bulls marched on in today's trading session. In fact, when we look at, some of the indices that actually did quite well, the Nifty Auto, it managed to post a second consecutive day of an up move, especially, stocks like Hyundai, Ola Electric, all of them spiked up in trade. The FMCG index also did quite well, was up for the second consecutive day, with stocks like Colgate as well as Nestle perking up in trade. Textile stocks, well, they also continued to do well, Vinny.
Absolutely, and do not forget the broader end of the market that continued to outperform. Advance decline ratio clearly in the favor of advances versus declines that we saw coming in through the day as well. So interesting to watch out for in terms of overall the trading session as well. A good day that came in by the end of the day. But let's look at what we have for you all on the show today. An interesting lineup. We'll start with the top movers and shakers of the day with Hormas Fatakia. And well, then we'll talk about the Nifty Auto Index, which witnessed an uptick on the back of anticipated lift in rare earth magnet curbs, while Bharti Airtel and Vodafone Idea also witnessed a surge on back of revision in Jio's entry-level recharge plan. So that kept all these telecom stocks in focus. Last but not the least, we're going to delve into the key market events to watch out for in tomorrow's trading session.
Well, absolutely an action-packed 20 minutes up for our viewers. But on to our first segment of the day. Hormas joins us now from the big wall with the top movers and shakers of the day. Hormas, over to you.
Another day of gains for the auto companies, be it the auto names or be it the auto ancillaries. All of them had a very good day today for the second day running, be it the likes of Tata Motors, be it the likes of Hero MotoCorp. Jamna Auto had its best day in 4 years. Motherson Wiring, Bellrise Industries seeing a 12% advance as well. Bellrise is now up over 70% from its IPO price of 90 rupees. The other segment that did well today, textile names after the battering that it had taken recently, Vardhaman Textiles, Raymond Lifestyle up 10%, Ambika Cotton doing well, Gokaldas too seeing good gains in today's session. The other pocket that was doing well today though, amidst this entire rain season here in Mumbai, is the QSR names. Look at Devyani International, you get Westlife Food World, Sapphire Industries, Barbecue Nation, all of them seeing gains of anywhere between 3 to 7% in today's session. PSU Banks was another pocket that did well today. There was the Indian Overseas Bank, or every single constituent of the PSU Bank Index ending higher gains of anywhere between 1.5% to 3%. And lastly, it was no point in trying to pick out losers on a day like this. So he took the stocks at 52-week highs today. HLE Glasscoat at 20% upper circuit today at a 52-week high. Paytm as an upper circuit, as Paytm as a 52-week high as well. And Force Motors too, was almost 5.5% uptick, another 52-week high for this stock as well.
Okay, Hormas, thank you so much for that. And seems like those QSR names are whinging because everyone is sitting and ordering food at home as well. So that's what we'll be keeping an eye out on going forward. But today, surely QSR saw a very, very good move in the trading session. But let's bring on board our guests for today. We have Jayapala, CMT at cashthechaos.com, as well as Sudeep Bandyopadhyay, Group Chairman at IndiTrade. Sudeep as well as Jay, thanks so much for joining us as always. Sudeep,
QSR names, let's just talk about that, right? Today we have seen that do well. Any specific moves that we should watch out for from these companies? Not much of a performance that we've seen coming in the past 6 months at least from these companies.
Well, Vinny, you're right. Last 6 months have been a bit subdued, but I think look at the season we are heading into. We are heading into festive season. There will be a lot of cricket as well going forward. So I think these are the things which do ensure that these consumption names really start doing well. So I'm reasonably hopeful about these names for the forthcoming festive season, which effectively means we will see them perform much better in Q3 and Q4. So by end of this September, I think the festival season will be in full swing, but the impact of that will be felt in Q3 and Q4. So whether it's a Devyani International, whether it's Westlife, I think all of these will definitely have better quarters. Normally they do in the Q3 and Q4.
Absolutely. Thank you so much for that, Sudeep. Hi, Jay. This is Vamakshi also joining in. So, Jay, my question is to you. So, we were very close to the 25,000 mark at close today. Where do you see the markets headed from here on? Because in the past, we've seen the 25,000 mark pose as a big challenge for at least the Nifty.
Yeah, hi, Vamakshi. The 25,000 level is just a round number. It doesn't have much significance from a technical perspective. 24,960 was an important resistance. The market has taken out that. So the trend is still higher. And I've been saying that Nifty Auto Index is likely to lead the market higher. And if that has started, it's very likely to spread wider. And from a 6 months to 12 months perspective, I'm maintaining my objective of 29,000 for the Nifty. So this is start of a bullish move. Expect wider participation and the market rally to widen even further.
Okay, expect market participation to widen even further going forward. That will be interesting to watch out for. But you did touch upon that auto index as well, right? Today, Nifty Auto Index among the top sectoral gainers. Yesterday, also it was buzzing in trade and it was up, almost 4%. Now, after the second consecutive day of gain, today, what was the reason? There was China's foreign minister that has assured India of addressing the rare earth magnet import issue. What does this mean? What are the details that are coming in? Sudarshan is joining in with us for that. Sudarshan.
So auto has been the pack for the second straight day with Nifty Auto Index rising more than 1%. Similar move was seen with Nifty EV Index, and all the auto stocks have moved higher as well. So after yesterday's, on the hope of GST rate cut that we saw big move in auto stocks, today there was a news regarding, and it's from sources, that India's foreign minister had a meeting with China's foreign minister in which from the Indian side some of the issues were raised, on which sources indicate that China has assured India of looking at those issues, and one among those issues was regarding rare earth magnet supply. If you remember, over the last few months, all the auto companies have been talking about the shortage that they have been seeing in rare earth magnet, and they had told that if the supply issue persists, they will have no option left but to cut the production. But now market is expecting that after the assurance from Chinese side, the curbs on rare earth magnet supply can be lifted. Now on the back of that, we have seen a big move. Top Nifty gainer was Tata Motors because it has a huge exposure in EV in the form of JLR. It will also benefit the companies which have hybrid exposure, and amongst all the Indian companies, Maruti is one company which has hybrid products in the form of Invicto and Grand Vitara, and also it will benefit auto ancillary names because they have the clients which have EV exposure, like Samanda Motherson was up more than 5%. Similar move was in Sona BLW. Now, apart from GST rejig and this rare earth magnet news flows, another news flow that can help auto companies, especially entry-level companies like Hero Moto, which is a market leader entry-level segment in two-wheeler. If you have seen over the last few days, Hero Moto has been moving higher, and similar move was seen in Maruti as well, because normally ahead of festive season, we see a big uptick in the demand, especially for the entry-level cars and bikes.
Well, thank you so much, Sudarshan, for joining in with your take on why the auto sector was zooming in trade today. But let's also get a take from Sudeep. Sudeep, do you have a view on any of these auto names like Hyundai Motor? It is sitting at an all-time high, as well as Maruti Suzuki, because it has also hit a fresh 52-week high.
A couple of things, Vamakshi. One is, I think, the finance minister of China has heard what we want, and he has, promised to look into it. But they have also raised some corresponding demands of providing market access to their corporates and looking at that press note, which ensures that every Chinese investment has to cannot be through automatic route, and it has to go through a special approval process. So let's see how things pan out eventually. So I will, while this is excellent news, I won't take it as done and dusted. So we'll have to see where it ends. As far as specifically Maruti and Hyundai is concerned, I think this, of course, rare earth thing is a benefit, but more important is this GST announcement which came on 15th August from the Prime Minister, and GST rationalization will definitely help Maruti and Hyundai, because the entry-level cars becoming cheaper will help them in the festive season when the consumption gets a boost. And the cars being a bit cheaper will definitely encourage. And that's the reason why we have been seeing that since yesterday, both Maruti and Hyundai has been moving up. If I have to pick one amongst the two, I think I'll go with Maruti. I think they have the product range and variety, as well as the balance sheet strength, which I think I do like. Yes, it'll not be my top pick, but considering this GST benefit and also the rare earth easing out, hopefully, I will go with Maruti.
Okay, you will go with Maruti coming in, given these benefits and Philips that have come in the recent times as well. But Jay, on the technical front, what would you be looking at in the auto sector? And overall, how are you seeing the auto index, right? You started by saying also that auto index has just started participating. You expect a wider participation. But in auto index, what are you looking at?
Yeah, I've been pointing out that the auto index is likely to lead the market higher, and that's already happened. And yesterday's gap up on the Nifty auto index, that's unlikely to be filled for several weeks to possibly a few months. And I'm anticipating the Nifty auto index to touch about 28,500 to 3600, and that's a conservative price objective. It could do much higher. I'm bullish on Bajaj Auto. It's possibly heading to something like 10,500. And I'm also bullish on Samvardhana Motherson Sumi. I'm anticipating a short-term move there. Bajaj Auto, although could be a medium-term move, it could. I'm keeping a very conservative objective of 10,500. Rajiv Bajaj has an objective somewhere close to 16,000 or 20,000. Don't recall exactly. It's easily possible that Bajaj Auto could go and retest the all-time highs registered in July of 2024.
All right, so keeping an eye out on Bajaj Auto as well as Motherson, but let's also move on and focus in on Reliance Jio, because it has revised its entry-level recharge plan. Its new entry-level plan for prepaid users now starts at 299 rupees. My colleague Reema Tendulkar joins us with the details. Reema, take us through what has actually transpired.
Thanks so much for that. So Jio has tweaked its prepaid pricing, especially at the entry level. Now earlier, the baseline or the entry level tariff was you get 1 GB of data per day for 22 days. If you take a 22-day pack, you pay 209. If you take a 28-day pack, a 4-week pack, you have to pay 249. The change is that these entry level plans are still available in a store. You go to a point of sale, a POS store, physically you will get it. But online, these plans are no longer available. Online, if you want to recharge a prepaid card, then the cheapest plan is now a 299 plan. But the change is, earlier for 249, you were getting 1 GB of data. Now for 299, you're getting 1.5 GB of data. So effectively, for the online medium only, for online recharges, the 1 GB per data plan by Reliance Jio no longer exists. Now this is a positive, because indirectly this is a tariff increase. According to certain estimates by brokerages, this can benefit Jio's ARPU anywhere between about 4 to 7%, which is why you are seeing the stock price do well today.
Reema, stay on with us. There's a case now is there a case actually now for Bharti Airtel and Vodafone to actually revise their base monthly plans? Is that also something to be watching out for?
So, as I was explaining, now for Reliance Jio, online, if you want to recharge, you no longer have a 1 GB data option available. But for Bharti and Vodafone Idea, you still do. They still offer a 1 GB data plan per day, which is priced at 299 rupees. But if they decide to scrap it and they move to 1.5 GB of data, that means then the price goes up to 349. And here we're asking the question that after Jio has moved on tariffs, will its peers, its competitors also move on the tariff front? And the argument that people are saying is that possibly yes, because the industry has been calling for tariff repair, they've been talking about ARPUs inching up, and plus data is now become such a necessity. It is a requirement. Our data consumption has been going up day after day. So therefore now it's no longer an option to downtrade, to say that I don't want to pay more, I'm willing to do with less data for the same price. And therefore analysts are pointing out there is a possibility, or there is a case for its peers also perhaps to discontinue the 1 GB data plan, that's Bharti and Vodafone Idea, and maybe move to 1.5 GB of data per plan. If that happens, again, like in the case of Reliance Jio, you will see an ARPU boost even for Bharti Airtel and Vodafone Idea if they decide to follow suit.
Well, thanks so much for that, Reema. Sudeep, do you have a view on Bharti Airtel as well as Vodafone? Vodafone, of course, disclosed its numbers very recently. We also had commentary coming in from the management in the conference call. So your view on Vodafone Idea, Bharti Airtel, what would be your top pick?
Well, Bharti Airtel definitely is my top pick amongst the telecom companies. I'm not considering Reliance here. Reliance anyway has been in my top pick list for the last 6-8 months. As far as Vodafone Idea is concerned, I think, I'm not convinced yet. Look, they have the problem on the financing and the capital, and that's understandable, and that's a big, big challenge. I can understand. But they are on the operational side also, they have not been performing up to the mark. They've been losing customers, month on month, quarter on quarter, and that doesn't augur well for the business in the long term. So as far as Voda Idea is concerned, I think they have to stem the rot in the operational level first, before we can even talk about what's going to happen, whether they're able to raise capital or not. That's secondary to my mind. Primary, after the rights issue happened, after everything, we were hoping that at least the customer attrition will stop, but that hasn't stopped yet. I think that's most important, and I'm not seeing that yet.
Okay, that's the view coming in there on some of these telecom names. But let's move on and talk about textile players today. They were buzzing in trade as well. Whether you look at a Vardhan Textile, Welspun Living, all these stocks today. Now, what came in actually as a news flow that we saw is that the government is scrapping duty on imports of raw cotton till 30th of September, starting 19th of August till 30th of September. So all 40 days that you will get this duty will not be there. This is the custom duties that we're talking about. Additionally, there's going to be an AIDC, which is the cess. That is also not going to be applicable for this 40-day period. Now, obviously, this custom duty on imports currently was standing at around 11%. And this move is coming in to mitigate the pressure that was coming in because of tariffs, right? And there's a possibility of that 50% tariff that could come in from the US, which is causing a bit of a concern and worry for these textile players. We've seen them fall as well when that 25% plus penalty was announced for India, and textile players took a big hit during that time. Now, this is going to give an exemption or a benefit to textile chains, whether you look at yarn players, fabric players, garment makers as well. So all this comes in as a positive sign, and that is why these stocks were buzzing in trade today. But Jay, your view coming in on these textile players, anything that you would watch out for?
Most of them aren't that great, but I like Ambika Cotton. It's got a neat short-term price structure, and it's coming off from an important support. So there is some potential, at least for the short term, in Ambika Cotton. The next is probably Welspun Living, but it's not a confident pick. I like Ambika Cotton from current levels, possibly further higher highs to come through.
All right, so you're bullish on Ambika Cottons, but we spoke from everywhere about from autos to textiles. But now let's go across to Gaurav, who is here with a whole set of stocks which gained in trade today. Vedanta was up ahead of its upcoming board meet, and Inox Wind jumped after it offloaded stake in Inox Renewable Solutions. Gaurav, over to you.
Well, yes, both Vedanta and Inox Wind were in focus. So first, let's talk about Vedanta. Two news flows here because of which the stock is in focus. First is that board meeting is going to happen on 21st of August, where board will consider second interim dividend. Now, remember, first interim dividend was already announced worth 7 rupees, and in FY25, company has given dividends worth more than 40 rupees. So all eyes on that. Second is that company's NCLT hearing is also going to happen on the demerger schedule. So there is going to be demerger scheme after which there will be 5 listed companies from Vedanta. Other than that, Inox Wind is also in focus, and the reason being that company has sold its stake in one of the EPC subsidiaries called Inox Renewable Solutions. Now this stake sale happened at a cost of around 175 crores and the company was valued at around 7,400 crores. Remember, now the company's stake has brought down to 88.8%, and in FY25, if you look at some of the numbers, revenue contributed almost 6% from this subsidiary. So definitely both these stocks were in focus on the back of the news flows.
Okay, we'll keep an eye out on the names going forward as well. But today, both of the stocks were in focus. Thanks so much for that, Gaurav. And thank you so much, Jay, as well as Deep, also for joining in on the show and giving us your view in terms of individual stocks as well as the market. But on that note, we're going to slip into a very short break. We'll get you the top corporate voices along with key market events to watch out for on the other side.
Welcome back to Market Forward. Now let's go across to key market voices we received during the day. First up is JK Cement. The management says 4,800 crore rupees expansion plan will be funded 65% by debt and 35% from internal accruals. The management expects peak debt level to be in the range of 5,500 crore rupees. Adds after Rajasthan expansion, it will look at South Cluster for additional 5 to 7 million tons of capacity. Further, they also expect around 20 million tons of sales in FY26.
Next up, we also had the management of Blue Star, and they said that they welcome the move that is proposed in terms of GST rationalization. It believes that GST rationalization is set to aid AC demand, provided there is a clarity on the rate and the date of implementation of the new rate. Otherwise, believes AC sales will come to standstill, as despite a weak summer, sales that the AC industry could witness a growth of 10 to 15% for FY26.
Well, next up is BlueStone. The company marked a tepid D-Street debut after listing at 1% discount against the issue price. The management says FY26 will be significantly better compared to last year. It guides for 40% growth and aims to add 75 to 80 stores this year. They further expect sharp turnaround in profitability in the coming quarter.
Okay, and before we wrap up this edition of Markets Forward on CNBC-TV18, let's get to the key events to watch out for in tomorrow's trading session. For that, we have Gaurav with us. Gaurav, over to you.
Well, yes, when we look at key events on the global fronts, there are no major key events, but we will be watching out on the Fed meetings minutes, because with this we will get some kind of details from this meeting. Other than that, we will also be watching out on some events from Indian market specifically. First is that Finance Minister is going to meet all the CEOs of the PSBs on August 20th. So that is definitely something which we will be watching out for, because they will be reviewing the Q1 performance. Other than that, Nirmala Sitharaman will also be attending the group of ministers meeting, and with this they will be addressing two issues specifically on the GST, on cess and insurance on August of 20th and GST rationalization on August of 21st. So both the events are going to be a key thing to watch out for. Core 8 index. Now, we will get some data on this index as well. Remember, this index is important when it comes to a lagging indicator, and we will get the data for the month of July. Vedanta is also going to be in focus, specifically if we talk about stocks, because NCLT hearing is going to happen on demerger. Remember, after that, there will be 5 listed entities from Vedanta Group. And lastly, let's also focus on some events which are going to happen from Russia, because External Affairs Minister Mr. Jaishankar is on a 3-day visit to Russia, and on August 20th specifically, he will be addressing India and Russia Business Forum meetings in Moscow. So definitely all eyes on this meeting, because specifically given some kind of bitterness which is coming up from the US market because of the relation of India with Russian markets.
Well, thank you so much for that, Gaurav. With that, it's a wrap on this edition of Market Forward. From Vinny, me and everyone who put the show together, thank you so much for tuning in. But don't go anywhere. We'll be back with more news and updates on the other side. Good evening. Thanks very much for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The market registers its 4th straight day of gains. Autos, metals, oil and gas fueled the rally. Broader markets outperformed the frontline indices. China has lifted restrictions on exports of rare earth magnets, fertilizers and tunnel boring machines to India. Chinese Foreign Minister Wang Yi assures Minister Jaishankar that India's concerns on import restrictions are being addressed. That's an exclusive. President Trump urges Ukraine's Zelensky and Russia's Putin to meet face-to-face in a trilateral summit to end the war, hints at security guarantees for Ukraine backed by European leaders, but stops short of making any concrete commitments towards a peace deal. Intel gets a $2 billion lifeline from SoftBank. The Japanese investor is expected to pick up 2% equity in the troubled American chip maker, as per Bloomberg. As per Bloomberg, Trump administration is also considering picking up a 10% stake in Intel. Tamil Nadu and Kerala government questions the maintainability of presidential reference on the issue of the Supreme Court mandating a timeline for clearing bills. Call it a camouflaged attempt by the centre to overturn the apex court's judgment. Heavy rains for the 4th day bring Mumbai to a standstill. Waterlogged roads lead to traffic snarls. Local train services impacted. Schools, colleges and government offices remain shut. Authorities urge citizens to avoid unnecessary travel.
Let's go straight to the day's market action. The Lal Street registering its fourth day of gains. The market closing in the green again after broader markets outperformed. Auto, FMCG and textile stocks charged ahead while some pharma stocks saw some pressure. Nifty up 100 points, that's 0.5% gain, 370 points higher. On the Sensex, the Nifty Bank 130 points high and 555 points high, almost a percent uptick there for the mid-cap index. Prashant is standing by, building on the gains, Prashant.
A more measured start, and it looked like the market perhaps would consolidate after yesterday's sharp move, but then things picked up I mean, we ended pretty strong, especially actually in the broader market space. Mid and small cap indices about 1% higher. Nifty Bank was up about 0.25%, and the Nifty itself ending with about 1/3% or 100 odd points coming through on the benchmark Nifty. So all told, I mean, pretty good follow-up day. I'll start with what was up, and by the way, market breadth was pretty strong. Almost 2 and 2.5 to 1 in terms of all stocks which were trading. And as you will see, I'll get to the broader market, mid and small cap space. Really scattered move, but lots of volume-led gains. Not sector-wise sort of, up moves like what we had yesterday on the back of, hopeful GST relief. Now, on the Nifty, Tata Motors, Hero, Bajaj were higher. You had Adani Ports, which was up. There was Reliance, which was higher. And there was Eternal, which actually looked pretty strong through the course of the day. On the downside, Dr. Reddy's, Cipla and Hindalco were the three names which were down, but nothing major, between 0.75% to about 1% lower. The broader market is where the excitement is. Ola was up 9%, the number one volume-led gain, about 44 rupees there. Bellrise, which is a recently, fairly recent listing, strong volume-led gains. Jamna Auto, actually a lot of the auto ancillary names looked up. Jamna was one of them. You had Hyundai, which was higher sharply on volumes. Devyani, which is a quick service company, which looked good. Vardhaman Textiles was up from the word go this morning. Motherson Sumi Wire, both stocks higher. Delta Corp perked up ended about 7-8% in the green. Raymond was up. Aether, again, a recent listing. Aarti Pharma, Everready, there was something like a Shelley Engineering, which also looked higher. As I said, the real action in the broader market space, and except maybe auto ancillaries, which is as a pocket which did well, very little to sort of bunch things together. Bharat Dynamics was the loser in the broader market, big volumes here. Bajaj Holdings was down about 5% by close. Actually, these are the two big volume-led losers. Newland was down about 4%. IFB had a big move yesterday, was down 3.5%. Intellect Design and a bunch of other names down between 3 and 4%. But I mean, squarely, the day belongs to bulls, with broader markets, mid and small caps doing bulk of the heavy lifting. Back to you.
Well, that's the market action for you, Prashant. Many thanks for joining us. But let's go straight to the big story this evening. As we've been reporting, China's Foreign Minister Wang Yi meets Prime Minister Modi today ahead of his visit to Tianjin for the Shanghai Cooperation Organization Summit, which is going to be held later this month. But earlier in the day, he met the National Security Advisor Ajit Doval for a special representatives dialogue on the border issue in New Delhi. The Chinese minister remarked that stability has been restored at the border, adding that the setbacks that India and China faced in the past are not in the interests of either country. The sentiment was echoed by NSA Doval, who said, and I quote, peace and tranquility has prevailed over the past 9 months. The Chinese leader also met External Affairs Minister S. Jaishankar to discuss bilateral ties and trade relations. This marked the second such meeting between the two sides since 2020. Now, sources tell us that China has lifted restrictions on the exports of rare earth magnets, fertilizers and tunnel boring machines. Parikshit is standing by with more. Parikshit, we've been reporting on efforts being made there for both sides to re-engage, at least economically, on these crucial issues, these three crucial matters. Industry has been very, very disappointed with these restrictions. Is there relief now in sight?
Well, that's what sources are claiming. We've been told that the conversation between External Affairs Minister Subramaniam Jaishankar and Foreign Minister Wang Yi of China was extremely fruitful. And this is really taking place after a series of conversation between India and China at the level of foreign secretaries, at the level of Defense Minister, External Affairs Minister, to resolve the rare earth magnet issue. Now, we've been given to know by highly placed sources that restrictions on the export of rare earth magnets, that is high rare earth magnets from China, tunnel boring machines, specialty fertilizers, those restrictions have been lifted. we are expecting clearances and consignments to come very soon. In fact, clearances are being made as we speak, and shipments of these key components will be dispatched to India in the coming few weeks and months. More timelines, more conditions will be clear to exporters, to the industry in the coming days. But we can see an incremental improvement in business-to-business ties between the two countries. It is also essential to note what Wang Yi, the Chinese foreign minister, conveyed to India. He said there should not be interference in each other's affairs. There needs to be stability, confidence in relations, mutual respect, and we both need to grow together and work for each other's prosperity. So strong words coming in from both sides. All of this is building up to the visit of Prime Minister Narendra Modi to Tianjin on the 31st of August and the 1st of September, where he will be meeting Xi Jinping. And a lot of these things will be clear. We've been seeing decisions on resuming flights, tourist visas being started by the Indian side. So we expect an improvement in ties that will be announced during the visit of the Prime Minister. But lifting of restrictions on these key items, especially high rare earth magnets, is a big one.
All right, Parikshit, many thanks for joining us. So breakthrough there, and that should provide some relief specifically to sectors like the auto industry. The big global story, President Trump hosting Ukraine's President Zelensky and 7 other European leaders at the White House last evening. There were meetings between Trump and Zelensky as well, and that involved the EU leaders. Trump's meeting with Zelensky was much more warmer and conciliatory this time than their previous showdown a few months ago. President Trump hinted at security guarantees for Ukraine backed by European leaders, but stopped short of making any concrete commitments towards a peace deal. Meanwhile, Zelensky repeatedly thanked the US president. Trump said on social media he has begun arranging a meeting between Putin and Zelensky. He said he will work on a trilateral meeting after the bilateral meeting takes place between Zelensky and Putin. The Ukrainian president at a news conference said he's ready for any format of a meeting with the Russian president. Zelensky, who was criticized for his attire during his last visit to the Oval Office, was praised by Trump this time around for wearing a suit. Listen in.
President Zelensky, you look fabulous in that suit.
I said the same thing.
Yeah, you look good.
I said the same thing.
Yeah, looks good on you.
I said the one that attacked you last time. See, now I remember that.
Yeah, I apologize to you. You look wonderful. No, my first question for you, President Zelensky.
In the same suit. You see, I changed. You are not.
Is there a date for you to meet with President?
The date?
Yes.
No, we don't have any date. We don't have any date. We just confirmed after this productive meeting with President and then with all our colleagues, with the partners, we confirmed that we are ready for a trilateral meeting. And if Russia proposed to President of the United States bilateral, and then we will see the result of bilateral, and then it can be the trilateral. So I said always, so Ukraine will never stop on the way to peace, and we are ready for any kind of formats, but on the level of leaders. There'll be a lot of help. When it comes to security, there's going to be a lot of help. It's going to be good. They are first line of defense because they're there. They're Europe. But we're going to help them out also. We'll be involved. But we can work a deal where we're working on a peace deal while they're fighting. They have to fight. I wish they could stop. I'd like them to stop. But strategically, that could be a disadvantage for one side or the other. But all of these deals I made without even the mention of the words ceasefire.
You have an American president, European presidents, and a Ukrainian president all wanting peace. For my part, I have the greatest doubts about the reality of a desire for peace on the part of the Russian president, because as long as he thinks he can win through war, he will do so.
We had 2 material outcomes. The first, on the question of security guarantees, was the agreement that the coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the US on those guarantees, coordinating. The other material outcome was the agreement that will now be a bilateral agreement between President Putin and President Zelensky.
All the points of discussion of what is going to go into any kind of peace deal that will end the Russian assault on Ukraine. And so we heard that there's the potential for the U.S. to join a peacekeeping force with Europeans to ensure future security. This is something that we've heard time and again. Both Ukraine's President Zelensky and European allies have said there needs to be security guarantees to ensure that Russia's not just going to come back and launch another attack after ending some sort of peace deal here. And President Zelensky was asked, what are you actually asking for? Is it American troops, intelligence, equipment? What is it? He said everything. Very short and sweet. And President Trump did say that Putin had agreed to allow some form of security guarantees. European allies are praising the push for peace, and particularly the idea of stepping in to allow those security guarantees. But they're also pressing still for an immediate ceasefire, which is something that President Trump has backed off of after his Alaska summit with Putin, now arguing that negotiations toward a broad peace deal can continue while the fighting rages on. And again, of course, the other main sticking point is whether there's going to be any carving up of Ukrainian territory. President Zelensky has said multiple times that he does not want to cede any territory to the occupiers. He showed a battlefield map and continued to make that case. But the next step from here is that President Trump posted that he called Russian President Putin and has begun arrangements for a long-sought meeting between Putin and Zelensky. If that does indeed come to pass, that could be a major step forward in what has been this awful onslaught for 3.5 years.
Well, that is the latest on that big meeting that took place. But a quick check of some of the other stories that we're tracking. Sources say the Union Cabinet has approved a bill to regulate online gaming and penalize betting. The bill is likely to be introduced in Parliament tomorrow. SoftBank Group is set to invest $2 billion in U.S. chipmaker Intel. SoftBank will buy nearly 87 million shares at the price of $23 a share. The transaction is expected to give SoftBank about 2% stake in Intel. This will make it the chipmaker's sixth largest shareholder, so an important global development there. And speaking of Intel, the Trump administration is set to be in talks to acquire 10% stake in the company via the CHIPS Act. This as per a Bloomberg report. The U.S. government could also consider converting some or all of Intel's grants from the 2022 Act into equity in the company. The semiconductor giant has been awarded about $11 billion in the CHIPS Act grants. This also includes $8 billion to support its domestic investment plans and $3 billion to boost its semiconductor manufacturing for national security. What a ride it's been there from Intel, from going after the CEO to now perhaps even picking up equity in the company itself. That is the Trump administration's likely move there. Now, shares of jewelry brand BlueStone listing at a 3% discount to its issue price. However, the stock perked up in trade, closing with gains of 6%. The public issue was subscribed 2.72 times. BlueStone intends to use the proceeds from the fresh issue to fund its working capital requirements. Brokerage firm Nomura says investors may not be fully factoring in the risk of fresh U.S. tariffs on Indian exports. Speaking to CNBC-TV18, the head of global macro research, Robert Subramaniam, said that there will be a negative response if the secondary duties go into effect on the 27th of August, as this is not fully anticipated just yet. A break coming up. Heavy rains batter Mumbai for the fourth straight day, bringing the city to a standstill. Waterlogged roads lead to snarls, and local train services are impacted. That and more when we return. Mumbai continues to grapple with heavy rains and waterlogging for the third straight day. The Met Department has issued a red alert across Mumbai, Palghar, Thane and Raigad. Officials say that at least 6 people have died. Hundreds have been displaced over the last couple of days. The BMC has declared a public holiday for all schools and colleges. Multiple flights have been cancelled. The city's rail network has come to a halt. The Maharashtra government has deployed rescue teams across the state, and affected regions continue to stay on high alert. Chief Minister Devendra Fadnavis has been reviewing the flood situation with the Disaster Management Department. He said the next 48 hours will be crucial for Mumbai and other adjoining districts. BMC Commissioner R. Bhushan Gagrani told CNBC-TV18 the Mithi River, which was close to its danger mark earlier, will recede in the next couple of hours. He also added that hundreds of people have been evacuated from areas close to the Mithi River. Listen in.
Water is slowly receding now. It has just gone below 39 now, 390. And there is a low tide. So hopefully next couple of hours, it will be below the danger mark. However, we are in full preparedness of shifting whatever number of people required. We have shifted 400, but if required, we'll be able to shift, in fact, entire population which is coming under the danger zone.
Well, that is the latest there from Mumbai. Tamil Nadu and Kerala governments have questioned the maintainability of presidential reference on the issue of the Supreme Court mandating a timeline for clearing bills. The state governments have called it a camouflage attempt by the centre to overturn the apex court's judgment. Ashmit joins us now with more. Ashmit, where does this now leave the role and the significance of the governor's action or inaction?
Well, it was in April 2025 that the Supreme Court passed a landmark judgment prescribing a deadline for the very first time, a deadline for the governor, a deadline for the president to clear bills that are being passed by the state assemblies. This order was passed after multiple states, the likes of Kerala, Tamil Nadu, Punjab, Delhi, had raised questions about the respective governors stymieing the entire legislative process by just sitting on these bills. However, landmark as it was, it invited a strong pushback from the centre saying that the Supreme Court has no business dictating terms to the governor as well as to the president's office, which is what led to President Draupadi Murmu making a presidential reference, which is essentially raising a question before the Supreme Court. The sum and substance of those questions was, does the Supreme Court have the powers to prescribe deadlines for the president's office? Now, the states of Kerala and Tamil Nadu are dead set against this. What they're saying is that the president merely acts on the aid and advice of the government, and therefore this is nothing but the government that is using the window of the presidential reference to overturn the Supreme Court judgment. They said that this is essentially a way to bypass the Supreme Court judgment, a way to overturn it, a way to substitute the Supreme Court judgment. This is simply impermissible. In fact, Abhishek Manu Singhvi, appearing for the state of Tamil Nadu, went on to say that whatever language one may use to camouflage this is nothing but a ruse, an attempt by the centre to overturn an existing Supreme Court judgment, that this will severely impact institutional integrity, something that cannot be permitted. The centre, however, remaining firm that this is broadly a question of law being raised by the president, and there's no reason why the Supreme Court can't consider it.
Ashmit, many thanks. Now, the opposition bloc has decided to field former Supreme Court Judge B. Sudarshan Reddy as the candidate for the vice presidential elections on the 9th of September. Congress President Mallikarjun Kharge made the announcement in a meeting. Reddy served as the Chief Justice of the Guwahati High Court before being elevated to the Supreme Court in 2007. International news: Israeli forces have killed at least 26 Palestinians since dawn in Gaza. This includes 8 people who were killed after their tents were blown by the IDF. Hamas has informed mediators that it has approved a proposal for a ceasefire deal. Israeli forces have killed over 62,000 Palestinians in Gaza since the war began in 2023. OpenAI has launched a new subscription plan for Indian users called ChatGPT Go. It's a low-cost subscription plan that will feature enhanced message limits, image generation and chat memory. The new plan will cost 399 rupees a month. The company said the rollout will be gradual and the option will appear for users on the app and the website in the coming days. Prime Minister Modi met Shubhanshu Shukla, the pilot of the Axiom 4 space mission to the International Space Station, at his official residence. Shukla briefed the Prime Minister about his landmark mission, sharing his experiences of being in space. He gifted the Prime Minister his Axiom 4 mission patch and shared photos of the Earth taken from the International Space Station. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. India's gems and jewelry sector is seeking government's intervention as the United States readies to impose a 50% tariff from the 27th of August. The US accounts for nearly 30% or $10 billion of India's gem and jewelry exports, even as competition rises from Turkey, Thailand and Vietnam. Meanwhile, the industry is preparing for festival demand, with gold imports in 2025 expected at around 600 to 700 tons. The markets are looking at higher sales this time around, especially as the Diwali is earlier, and then it would be followed by the wedding season as well. To discuss all of these issues further, we are now joined by Ankur Daga. He's co-founder at Angara. Ankur, hi, thank you so much for joining in. First of all, India is a new market for you, and the festival season is just about begun, and the wedding season is going to follow soon through. How are you looking at the Indian numbers right now, especially given the fact that when you look at the last 1 month, the gold, silver, platinum, palladium, all of those prices actually have come off its recent highs. How are you looking at the current markets? What are the calculations that you have for the next 3 months in sense of Indian demand?
We're quite excited about the India market. So we launched in April. We're growing at 50% month on month, obviously off a pretty small base. But I think we'll be very pleasantly surprised by the market there. Also, next year, India will be the largest jewelry market in the world. So we're quite excited about the growth there as well as the size of the market overall.
50% of a growth on a month-on-month basis, Ankur, that's quite a number there. Are you looking at that sustaining? And when you say India is going to be the biggest market, you do seem, which category are you really looking at?
So in terms of the growth sustaining at these numbers, probably not. 50% month on month is pretty incredible. It's also a small base. I do see it as market will touch 1,000 crores in revenue by 2030. So that's kind of the target. And I think we'll be comfortably reaching that target. In terms of the market overall, the US and India are roughly 85 billion each in terms of market size, the two largest in the world. India is growing at 10 to 15% a year. The US is growing at roughly 4%. So by next year, we imagine it to be the largest market in the world and growing from there on out.
Ankur, when it comes to the Indian markets, of course, gold continues to be a very big chunk there, but your focus also is in diamonds and gemstones mostly. How are you looking at those categories doing for you?
They're relatively smaller categories. So just to give you an idea, 88% of what's sold in India is pure gold jewelry. Then you have 10% that's diamond jewelry and less than 2% that's color. That 10% and 2% are poised to grow very quickly in the future. And we're really focused around the gemstone area, which we think will have tremendous growth going forward. And very similar in trajectory to the US market roughly 2 decades ago.
Ankur, are you at all concerned or perturbed by the kind of tariff moves that we have seen globally, especially when it comes to Indian exports to US? I'm assuming that you're not into that category, but how are you looking at various countries dealing with US tariffs right now? You are in various countries as well. How are you working that around?
Yeah, so I think the latest round of tariffs, if it hits 50%, it will be a profound impact on the industry. So to give you an idea, 90+% of the world's diamonds that are cut and polished are polished out of India. 50% tariffs are just not feasible. It's an industry that really thrives on very high volume, very high inventory turns, but low margin. So a lot of that margin, a lot of that tariff will be absorbed by the US consumer, which will, I think, be challenging going forward, especially as we enter the peak season.
And that is something that will impact not just the Indian markets, but world markets across when it comes to diamonds. So when you look at that 50%, even 25% for that matter, because this is not a very big margin commodity to begin with, the diamonds itself, would you say not just India, but it's various manufacturers and jewelry makers around the world talking about that, discussing this?
Yeah, ironically, so India right now has the highest tariffs in the world, or amongst the highest, and when it hits 50%, it will certainly be the highest. So to give you an idea, Thailand has a 19% tariff, the UAE has a 10% tariff, a lot of the European countries, including Italy, have a 15% tariff. So India is already now at a disadvantage, and historically, loose diamonds, for example, have had a 0 tariff going into the US. So this is a pretty fundamental change. And also, I think from an Indian manufacturing standpoint, it largely becomes uncompetitive just because it ends up being more expensive because of the tariffs.
Oh, well, absolutely. How are you then looking at the international markets? Because the belief really is that much of the exports that had to happen for the Christmas or the holidays have happened in June and July, because most of the markets did feel, or manufacturers did see it coming in the month of August. Would you say this season is done with, or is this season is something that India perhaps is writing off?
So, for example, for us, we manufacture primarily out of Thailand for the U.S. market, so we're not as affected by what's happening in India specifically. But I think for the industry overall, when the tariffs first kicked in April, there was a 5x increase in exports to the U.S. to beat the tariffs, and even in July, we saw a surge of imports from India to beat the round of tariffs that was likely to come in August. I think the industry starts getting towards a standstill after August 27th, if it hits 50% tariffs. I think a lot of that demand for import comes, goes to Italy and and other countries around the world at the expense of India's export sector.
Oh, well, absolutely. As you said, much of your manufacturing happens out of Thailand. Would you say that's one of the, perhaps the better in sense of competition? UAE is lower, Italy much lower as well. And then, of course, you have Thailand, Indonesia doing some bit as well. Where do you see the most competitive of markets emerging right now?
Yeah, I think Thailand and the UAE will stand to gain from this. Ironically, even China is lower than India's 50% proposed tariff, so India will be the highest in the world there.
How are you looking at various categories when it comes to gold within Indian markets as well, since you are going to be playing this now? There is jewelry now being created from 24 carats to even 9 carats on the lower side.
We're quite excited about the move towards BIS certifying 9 carat as well. I think it opens up the aperture for a lot of consumption on the diamond and color side. With gold prices doubling over the last couple of years, I think, the traditional 18 and 22 carat was becoming very unaffordable. And all of a sudden, with the opening up of 9 carat, we'll see a lot more gold jewelry consumed as a result, and also studded jewelry consumed as a result.
As you said, Ankur, when it comes to studded jewelry, that still is a smaller part. Pure gold jewelry, as you rightly said, is 88% perhaps. When you look at the other categories, whether it is studded, diamonds and gemstones, what is the kind of growth that you're anticipating for India within that?
I think certainly we'll see gemstones appreciate or consumption rise at double-digit growth. I think we will see that for diamonds as well. And incidentally, we'll see it for silver jewelry as well as gold becomes more and more expensive.
The silver jewelry exports from India for the month of July were not so great. But when you talk about the Indian markets per se, well, yes, the silver jewelry seems to be looking at a double-digit growth in the markets here as well. Are you looking at, this is not very traditionally done, but silver also being studded, silver also with diamonds and gemstones, etc. Do you see that kind of a fusion also coming in for the Indian market?
Oh, absolutely. And we're seeing it in the US already. We're even seeing mixed metals. So you have silver and gold together in one piece in the US to try to bring price points down. I think you'll see a variety of different approaches towards silver going forward.
Ankur, how have been the prices really when it comes to diamonds? Because there was some stability that we saw in the first half of this year. Are we looking at some gains after those 2 years where we saw demand decline and the prices being quite choppy as well?
So to give some context, diamond prices over the last 3 years are down anywhere from 25 to 40%, depending on the size and quality. I think that's largely stabilizing now as there's reduced supply coming into the market and demand is relatively stable now. So we're seeing a flattening of the curve on the pricing side for diamonds, certainly.
And the lab-grown story continues to go quite strong even now, because when you look at the exports, when you look at the kind of consumption and adoption that we see in the international markets, continues to be very, very strong. How are you looking at 2025 playing out for lab-growns?
I think lab-grown is going through a massive shift right now. In the US, for example, it was only 2% of the engagement ring market in 2018. This last quarter was above 55%. So the majority of engagement rings sold in the US now are lab-grown, and that's poised to continue, especially as we see more tariffs that will only accelerate the growth for lab, we believe.
But do you think it stopped disrupting the naturals right now? Because the last couple of years, the industry thought that was yet another reason, apart from slowdown and demand, that lab-grown was making a dent into the sales when it came to natural diamonds.
I think lab-grown will certainly pick up share from natural, and that is likely to continue. I think what has caused the price to stop dropping is really reduced supply rather than increased demand for diamonds. And I think that will continue to be the case in the near term.
Ankur, also, how are you looking at gemstones when it comes to Indian markets? I mean, you've told us that double-digit growth is what you're anticipating here as well. But what geographies and what price tickets are you really looking at?
Our average ticket in India is roughly 65,000 rupees. In the US is $1,500 as a comparison. So it's a relatively high average ticket. And I think we're going to maintain somewhere in the 50 to 65,000 rupee range going forward for gemstone jewelry primarily.
When it comes to the Indian markets, I mean, you had, the last time I spoke to you as well, you said by 30,000 crores is what you're looking at in sense of revenues. Where do you see the maximum of that coming in from?
I think we'll see a lot of two types of goods. I think we'll see a lot of natural gemstones, and we will also see a lot of lab-grown diamonds. At least that's what we're seeing. We're seeing right now in terms of where the growth primarily is.
How are you categorizing then that? Where do you see a max profit or revenue coming from?
Lab-grown diamonds and colored gemstone jewelry, I think, are the two major push areas. That's where we're seeing the predominant growth.
India is a long season, really, Ankur. So it starts with the festival seasons, continues until Diwali like that, and then the wedding season picks up, and the festival season continues until the month of March and April, and slipping a bit into the month of May as well. So when you talk about the next 2 or 3 quarters in that sense, what is the kind of demand that you're anticipating? Because the first half of 2025 wasn't really great. In value-wise, kind of flat, volume absolutely a decline there. How are the next 3 months looking to you, or 3 quarters looking to you?
I think we're expected to see a lot of growth over the next quarter or so. I think what was surprising for us is even with the high gold prices, consumption was relatively strong. Assuming that prices don't appreciate further for gold tremendously, I think we'll see a very solid season going forward.
A final question, and a lot of people with the high gold prices seem to be going the investment way rather than the jewelry way. Do you see that in any case impacting the jewelry sales?
Yeah, absolutely. I think, jewelry is, as an asset class, is one of those rare unicorns where you get to, you get to enjoy wearing it while it's appreciating. Gold, obviously, over the last 10 years has, in the US dollar terms, has gone up at 14% per annum, which has beat the Sensex and the S&P. And so that certainly is why people are migrating towards gold and away from other asset classes.
Clearly that, and we've seen not just the retail and the jewelry buyers, but central banks as well as institutions and high net worth individuals also go to gold in some sense as a portfolio diversification. But Ankur, as always, thank you so much for joining in and making sense of what the Indian markets could be looking at, the tariff impact, and of course the international competition as well that India perhaps could be facing, not just in case of jewelry, but diamonds too. Well, on that note, it's time for a short break, but don't go anywhere. We shift our focus to edible oils with Adani Wilmar's Anshu Malik on the other side. Welcome. You're watching Commodity Champions. Let's shift focus on to the edible oils now. And is this sector ready for the festival season? Well, joining us to discuss that is Anshu Malik, MD and CEO at Adani Wilmar. Mr. Malik, hi, thank you so much for joining in. Well, the festival season is here, and this is the time that most essential commodities like sugar, edible oil are something that the street starts to watch out for in sense of availability and affordability. How are you looking at this season in context of both of these?
Edible oil this year, we have sufficient stocks and port-wise, the inventories are good. The local crop availability is also good, and supply chain will be good unless 2-3 factors one need to see is one is how the monsoon comes up and does it disrupt transport and logistics movement, particularly Northeast and other places we did have earlier problems, but presently, it's okay. So one has to watch that. So supply chain wise, we feel that it would remain comfortable.
Mr. Malik, what also is your sense on imports? Because we depend 60% in sense of import when it comes to requirement by the way of international prices that have been rising. The rupee also has seen a very sharp depreciation in the past quarter. Would that have an impact on the essential commodities, including edible oils?
You're right, Manisha, 60% of the oil or little more we are importing today. The consumption in India is roughly around 3%. And domestic production is increasing only at 2%. That means we will have to depend on imports, one. Second, edible oil is no longer the fundamentals drive the rates. It is the geopolitical issues, it is certain government announcements, certain other dynamic things happening around the world that impacts the prices, and very difficult to actually work out on the fundamentals and work on it. That is one. Two, the rupee has depreciated. As a result, the cost of import oil has gone up. One has to see how the rupee behaves. Hopefully, if it remains at these levels, it's okay. Otherwise, we will have to pay more for imported edible oil.
Mr. Malik, how has India's overall edible oil demand growth been in the last, let's say, 10 years? And how will it be, let's say, in the next few years? As you said, 2% of a consumption growth is what you're looking at. But when we look at the larger, longer picture, how do the numbers stack?
See, edible oil was earlier growing at around 7-8% 2 years back. Then it dropped. And last year, it grew by only 1.5%. That is what Nielsen was saying on the packed oil. We are also seeing the same, and we see stress in the urban middle class and urban people. We have seen there is a squeeze in consumption. Rural has also not supported the way we all had expected. It's only last 4 months, after November, December 24, we have started seeing rural giving us some kind of positive response. Last quarter was okay, but I find July to be very good. And July consumption story indicates that if the monsoon is good, there is a lot of positivity in the rural consumers because they see good crop coming ahead.
There's this whole conversation really about India pushing for self-sufficiency. Where do we stand right now when it comes to that? And in those numbers, how would you look at the next 5 years, let's say? Because oil palm mission is one, and apart from that, there's not so much that is happening, whether it comes to seed or increasing yields for that matter.
See, government is trying to boost domestic production. We feel that the easier bet is mustard oil. That is the rapeseed production or mustard seed production, because it has 40% oil content. So higher the mustard seed, we get a better oil. That is one. Two, somehow we find that there is a constant increase in demand of mustard oil. Even if the prices are higher today by almost 40 rupees a kilo over soybean oil, we still see higher consumption of mustard oil. That is possibly after COVID, we have seen that filtered oil or unrefined oil, there is some amount of better traction. So government, if they push this mustard seed, and we as an association and as an organization also, we are also doing our best to see if we can help in improving production of rapeseed, particularly because that is easier to process and sell.
Mr. Malik, in a recent conversation, I remember you mentioned that you were training influencers to get a better education out when it comes to edible oils, because there's a lot of misconception when it comes to seed oil on whether they are good or not. There's also a push to consume lesser oil from the PM himself. How are you tackling this as a company?
See, over the last couple of years, when social media has evolved as a interaction way people interact, influencers have come out as one of the strong contenders to influence buying decisions. Now, whether it is in white goods or personal care, even in foods. Now, there are a lot of influencers who do the study and they come out with proper report for the consumers. But there are some influencers who get influenced by some other, and then they start talking something which need not be scientifically correct. Now, we as an organization felt that if we have to, bring out influencers in the true manner, there are a lot of homemakers who would like to come out of this and become influencers, but they are not getting that opportunity. As an organization, we felt that why not tap this talent that is residing in the Indian homemakers. So we did a contest as a Fortune Influencers Masterclass. That is, we started a campaign wherein we asked homemakers to just apply in our portal if you are interested to be an influencer and earn out of it and make it a professional career. And believe me, 50,000 such ladies up to age 63 years also applied and they came. We then put a team of jury who came from the MasterChef contenders. They did the scrutiny and then we got 3,000. After that, they were told to put some product and showcase their style. And 3,000 came out like that. Then we scrutinized and we reduced it to 250. And this 250 were the people with whom we started working. For the entire 3,000, we had a class wherein styling, recipe creation, content writing, small tips on videography, photography, light and all that was given. That was part one, module one, which we did. But after 250, we did the advanced module wherein we taught them content writing, videography skills, advanced videography skills, how to present, how to bring out their some nuances that they have, their positive part which they can throw out. So each contestant has some of the things that they did, and it was a wonderful exercise. And let me tell you, these mentors were no else than Manisha. This is Meghna Kamdar. Has more than 3 million followers, and Meghna has actually come up like this only as a small influencer. She started, and then today she is force to reckon and name to reckon. Vinayak Grover was another one, and then we have Nimisha Rao. These are the three mentors we put them who would take online classes and teach these ladies and homemakers. Then this from 250 we selected 100 odd. And from 100, finally 25, we called them to Ahmedabad and we started interacting with them. We gave them support, monetary support. We educated them on the products. Then we did help them with some camera, some mic, crockeries and all that, so that they can become self-entrepreneurs. So from passion to profit was what we always said, that if you have a passion, we will make you earn money, and that thing. Now, these influencers, let me tell you, Manisha, will know how to understand a product, how to, what knowledge they can get, and how to impart knowledge to the viewers. this type of training, I think, is what we felt we can add value to the society. 63 years old lady came from Madhya Pradesh, and she was very, very passionate. And she said that I lost my son, but I wanted to use this, and because the son had a hotel, restaurant in Madhya Pradesh somewhere. So she said, I want to continue in the food business and take my son's name forward. So that is how people have emotional connect on it.
Oh, well, absolutely. That you've tackled very, very well. You've made your own influencers army, which talks about your products and, of course, more education about edible oils. But your point is well taken where you say that because we import 60% of our edible oil requirements, so we are dependent on imports, geopolitics, tariffs, policies, duties, and, of course, the depreciating rupee as well. So slightly higher prices as it comes to edible oils during this festival season is what perhaps the consumers will have to be ready for. But with that, it's all the time that we have on this edition of Commodity Champions. Thank you for watching.
Hello, welcome to News Center. I'm Parikshit Luthra. India and China are all set for a reset in their bilateral ties, which has soared in the last 5 years after clashes in Galwan. The bid to revive ties comes amid US President Trump's tariff offensive. Prime Minister Modi is all set to visit China later this month for the SCO summit. This would be his first visit to the country in 7 years. China's Foreign Minister Wang Yi is in India on a 3-day visit. He met External Affairs Minister Subramaniam Jaishankar to discuss bilateral ties and trade relations yesterday. He also met National Security Advisor Ajit Doval for a dialogue on the border issue. The Chinese minister remarked that stability has been restored at the border. He added that the setbacks that India and China faced in the past are not in the interest of both countries. The sentiment was echoed by NSA Doval as well, who said, and I quote, "Peace and tranquility has prevailed over the past 9 months. Sources also tell CNBC-TV18 that China has lifted restrictions on exports of rare earth magnets, fertilizers and tunnel boring machines to India. The Chinese foreign minister has assured India that its concerns on import restrictions are being addressed. Sources have also indicated that clearances are being given to India and shipments are likely to be dispatched soon. I'm now joined by former diplomats Anil Trigunath, also KC Singh, Anjali Prasad, former Indian ambassador to the WTO, and also with us is strategic affairs expert Brahma Chelani. Let me go across to you, Ambassador KC Singh. Ambassador KC Singh, how do you see the developments taking place between India and China right now? Do you feel that we're now on the road towards restoring a close economic relationship?
Yes, but I think the context is important. I think to believe that the Chinese don't realize we are on a rebound from America would be a mistake. So the Chinese know that we are coming back, and it's coming just a day after an extremely horrible interview given by Peter Navarro to the Financial Times. This is the White House advisor on trade, who's literally holding India responsible for the fueling of the Ukraine war by India giving money to Russia for buying oil. So it's going from bad to worse, the way it's going. Even yesterday, when Trump was meeting Zelensky and the European leaders, India, Pakistan slipped out of his mouth. So it's just not leaving him. So the Chinese know it. Chinese are not stupid. And remember, I don't think we've ever publicly realized it or analyzed it. Why did Galwan happen in 2020? It happened months after the 2019 Houston conference, where President Trump and Prime Minister Modi were holding hands and appeared like allies in the American political system. The Chinese tend to react. Same thing happened in 62, because Nehru had reached a peak in 60 of global acceptance, global role. They then try cutting India down to size. Now, to imagine that we can go back to hugs and kisses and it's going to be normal, but we also have no option. So this was the way to go. We are going down this route, but Chinese know what we are doing, and we should know what Chinese are doing. And therefore, it's a transactional relationship. And if we think they are going to forget about Taiwan, that's why they brought it in. And we have to correct them that we've not changed our position on Taiwan. And there's Dalai Lama, and there is the border. None of that is going to get solved. The Chinese will push you, and they will hand you out things because they know you are in rebound at the moment.
Okay. Brahma Chelani, how much of the restoration in ties right now is a result of India-US ties taking a rough turn? And how much of this is because of the understanding that was reached between Prime Minister Modi, Xi Jinping at the Kazan summit in Russia on the sidelines of the BRICS meeting?
The US-India relationship began fraying much before Trump took office in January this year. It began fraying under Joe Biden's presidency. So that fraying relationship was clearly one factor in India seeking to mend fences with China. And that's the reason why the Kazan summit meeting between Modi and Xi Jinping occurred. The problem is this, that China hasn't changed its fundamental attitude towards India. It still seeks to contain India strategically, economically, and militarily. It has not vacated the areas it occupied by stealth in April 2020. But we have given up our position. Our stance was status quo ante. Status quo ante has now been forgotten. And in a way, what is unfolding really shows why India repeats history. Under successive governments, it's been happening. Because in fact, since 1947, one factor has remained constant in Indian policy: a defensive, reactive, and ad hoc approach to strategic developments impinging on India's core interests. So if you take China's rolling annexation strategy against India, for a number of years now, under successive Indian governments, China has been incrementally changing the territorial status quo in the Himalayan region. And India has been incrementally legitimizing the Chinese land grabs, not in actual words, but by, again, seeking to befriend China. So what happens is that we saw that under Vajpayee's leadership, then it happened under Manmohan Singh's leadership, and under Modi's leadership. In fact, Modi is coming full circle because his courtship of Xi Jinping from 2014 to 2019 led to the Ladakh land grabs. And now he's on courtship 2. And we know the result of this courtship 2 would be that in a few months from now, you'll be discussing why did China stab India? Why were we taken by surprise? Something will happen within months that will again show that we are repeating history.
That's an important point. You're saying you cannot have an ad hoc approach to strategic relations, especially for an adversary like China. Let me go across to Ambassador Trigunath. Ambassador Trigunath, we know what we want from our relationship with China. We want those informal economic sanctions to be removed. We want less unpredictability in the relationship. But what does China want from India? If we want stable economic ties, which is our priority, what is it that we will have to address in terms of China's concern?
Well, Parikshit, as the previous speakers have said, and I would agree that as far as China is concerned, it is going to remain a major challenge for you in every geography, not only in the bilateral domain. So that is the bottom line. But that means that we'll have to work out together as to how to deal with this big power next to us. Our dependencies are very much there. How to reduce the shocks. As you rightly mentioned, that now they have agreed to lift, restrictions, export restrictions on the magnets, rare earths magnets, and the boring, the tunnel boring things and all. So those are very important things for India as well. Likewise, our trade with them is significant, even though this is greatly in their favor, but it is making your own industry drive until such time that you become self-reliant yourself. So we'll have to see, and China also looks at India as a major market. And that's why when we are talking about these border trade markets or some kind of a border trade, we are opening some of those borders. Now, that is something that is going to give us and the Chinese some kind of a CBM that, yes, we can move on. But the biggest problems remain unresolved as of now. And one of them is, of course, he discussed with NSA, and of course, both sides have mentioned that there should be a mutual respect. But so at the moment, I would say that whatever verbosity has been used in the statements coming out from both sides tends to give you that they both are at the moment committed to carry on some kind of a normal relationship. We can't be friends because still we have the center issues addressed. But it is very important to continue to talk to China, try to extract as much as we can to our advantage. And if we can keep them off from deteriorating any further, that could be useful for us. And China is also looking exactly the same way, because India is not a walkover.
Right. That's an important point. Anjali Prasad, if I can come to you, ma'am, do you feel that it's important for us to consider revisiting economic relations with China? Currently, there are restrictions on Chinese investments. should we consider doing away with Press Note 3, which says investments from China, land bordering countries, cannot come in automatically, they have to be vetted. In any case, we are clearing Chinese JVs on a case-by-case basis in non-strategic, non-sensitive sectors. Do you think we should open up, give them a level playing field? Is this important for India's own national security and industrial interest?
Okay, thank you for having me on your show. First of all, I would like to say that we have a very difficult relationship with China all around, not only politically, not only geopolitically, even in the multilateral forum. So as Ambassador Trigunayat just said, that in every geography, we have a problem with China. We are going to, face them. And we are seeing that happen even in the multilateral forum. Now, when you talk of Press Note 3 of 2020, why should we, if I ask a counter question, why should we do away with that press note? We should not. It is not in our interest to allow or open investments to all kinds of Chinese firms. And we already know their propensity, their way of working. So it will not be in our interest to open up entirely. This approach of a case-by-case basis, I think, should remain till we sort out our non-trade and non-economic issues, which I think are more important than economic relations at the moment. They affect our national security and our national pride much more directly than economic issues. On the economic front, of course, they are the bigger trading partner. They are swamping our market with their goods. We are unable to make standards or implement them. So we have all kinds of products flooding our markets. Even our big industrialists, I'm sorry to say, have become traders. And they import consumer goods of all kinds, mainly white goods from China, put their labels and sell them in the market, although somewhere inside it is written made in China. So when we say that we are taking anti-dumping action and safeguard action, and we are strengthening our manufacturing, I don't think any of this is happening vis-a-vis China. We may be taking a few anti-dumping actions or a few safeguard actions here and there, but that does not matter in the bigger scheme of things.
All right. So that's an important point, ma'am. I'm going to... You don't feel that Press Note 3 should be reviewed. Important sentiment there, important view. We're going to take a short break. We request all our guests to stay with us and hang on. Up next, we will be discussing the all-important summit that was held in the White House and whether we are close to ending the Russia-Ukraine war and the implications for India, which is at the receiving end of US tariffs. Welcome back. The other big story we are tracking today. US President Donald Trump hosted Ukrainian President Zelensky and 7 other European leaders at the White House last evening. There were meetings between Trump and Zelensky, as well as a gathering that also involved the European leaders. Trump's meeting with Zelensky was much more warmer and conciliatory than their previous showdown a few months ago. US President Trump hinted at security guarantees for Ukraine backed by European leaders, but stopped short of making any concrete commitments towards a peace deal. Meanwhile, the Ukrainian leader repeatedly thanked the US president. President Trump said on social media that he has begun arranging a meeting between Putin and Zelensky. He said he will work on a trilateral meeting after that bilateral takes place. The Ukrainian president at a news conference said he is ready for any format of a meeting with the Russian president. And we still have with us former diplomat Anil Trigunath, former diplomat KC Singh, former Indian ambassador to WTO Anjali Prasad, and strategic affairs expert Brahma Chalani. Brahma Chalani, if I can come with you, what's the biggest takeaway from this White House meeting between Donald Trump, European leaders, and Zelensky? Next, Trump is hoping for a trilateral between him, Zelensky, and Putin. Are we now on the road to peace?
First, in a world where the US, China, and Russia are the 3 leading powers, the Alaska summit underscored Trump's bid to redraw this great power triangle. Trump now recognizes that America's own missteps have helped drive Russia closer to China, fueling a de facto alliance that poses the gravest threat to America's global preeminence since the Cold War. So in that sense, the Alaska pivot represents good news for India, because India has been concerned right since 2022 that American policy is forcing Moscow to move closer to China, and a Sino-Russian partnership or an alliance would be very inimical to India's vital interests. So finally, we are seeing some movement in Washington, and we are seeing, though, that Trump's effort to undo that policy approach is already running into stiff resistance from the establishment, which means the US deep state. But if he succeeds in actually improving US-Russia ties, which will require an end to the Ukraine war, which is the reason why he is investing political capital in ending this conflict, because America is deeply involved in this war, and this war is not going in favor of the West. This is a war which the US and its allies could eventually lose. So Trump is seeking to cut America's losses so that the US can refocus its resources and attention to the Indo-Pacific, where the real contest confronts the US, which is with China. China is the only power in the world that can supplant the US as the world's foremost power. And the Trump foreign policy approach clearly is to shift from the current focus on Europe and the Middle East to the Indo-Pacific, so that the US can tackle the real challenge there.
Right. So Trump looking for an exit from the Ukraine war. Ambassador KC Singh, if I were to come to you now, some of the European leaders were very clear that we need a ceasefire before the next meeting. Do you think that is critical before embarking on any plan for peace?
I think it was mainly the German chancellor who raised it. And then President Trump kind of brushed it aside. They were like schoolboys. People have put a picture of that because he took them to the Oval Office, seated them in front of him. It wasn't good for the image of the European leaders. And as far as we in India is concerned, it would be good to see Europe united in putting up some resistance to America. Because in a multipolar world, if the Europeans already done a trade deal with America, and that kind of reduces the options that India has. And that's why you're turning to China. As yet, there's a huge gap between what President Putin wants and what Zelensky can concede. Because Putin wants the entire Donbass area. Will he settle for the status quo? We don't know. Will he sit down I don't see him sitting down and talking to Zelensky unless Zelensky surrenders. So maybe at best the two delegations can meet. The Europeans are trying their best to make sure that Trump doesn't go off at a tangent. They don't completely lose his support. So they were playing along to the extent they could. But finally, they are the ones who are really concerned. Why do you think the president of Finland was there? Because he said, look, we've had a problem. We have an 800-mile frontier with Russia. Because everybody with a frontier with Russia is worried that if Russia gets a win, and what is said is that if he gets the entire Donbass, then it becomes much easier for him to penetrate the rest of Ukraine. And that's what Europeans are worried about. The French president quite clearly was not happy with what was happening there. So there is disunity, and that's what President Putin wants. He wants disunity in NATO. He wants the European countries to be debating with each other and not with him. So it remains to be seen how it shapes up hereafter. The next few weeks will be important. And with Trump, you don't know what happens in the next week. He tends to change. He doesn't act strategically or think strategically. It's all tactical and day to day. So depending on that. But of course, I agree that it's important if Ukraine is out of focus, because then the 25% extra tariffs that Americans are talking about for India buying Russian oil, then that subject will be off. Then we'll be just discussing a trade deal and just 25% which has been imposed and not the punitive tariffs. But that may not happen for 6 months or 3 to 6 months.
Let me now go across to Anjali Prasad with that question. Ms. Prasad, the way we are seeing things right now, Trump is not getting a deal with Russia on ending the war anytime soon. India is the leverage there, unfortunately, which he considers as leverage right now. We don't know how much of an impact it is having on Putin. But do you feel that, considering that US negotiators did not want to come to India for the 6th round of talks, which was supposed to be held on 25th of this month, that has been cancelled, would that indicate to you that the US is not wanting to pursue trade talks with India at this juncture? And that 50% tariff is now going to be a reality?
Well, I have felt all along that the US is not sure what it wants to do, frankly. My reading is that they will not go ahead with this 50% tariff because they will have internal opposition to this. Their own economy will be affected if they go ahead with this. Although they've kept pharmaceuticals out of this, but the other sectors are also up in arms to some extent with his kind of trade anarchy that he's created. So I am still of the view that he may not go ahead with this 50%. He may, although they have cancelled this round of talks, they may still try and get a deal, as they call it, although I wouldn't call it a deal, because we are not the demanders here, and the products that they are interested in are very sensitive for us. So I don't think that Mr. Trump will go ahead with this 50%, frankly.
Right. All right. That's an important point. Let's hope so as well, ma'am. Final question to Ambassador Trigunath. Ambassador Trigunath, looking at what's happening in the White House, looking at Donald Trump's priorities, he's trying to get Russia to stop fighting. He wants to get an exit out of the Russia-Ukraine war. All the Europeans are there trying to put pressure on Trump, trying to put pressure on Putin as well. Do you feel that India will really have to navigate these geopolitical waters very carefully? Are we looking at certain hard reset also in our traditional geopolitical strategies? You know, Brahma Chalani spoke about the need of doing away with ad hocism. Do you think we now need to take a hard look at the way we are approaching our relationships?
Well, I think that we have to be a realist. We must realize in the old dictum that there are no permanent enemies or friends. and there are only permanent interests. As long as we can protect our interests, that should be the way to go. And that was precisely the Indian government is trying to do at the moment. I'm talking to you from Moscow right now. I must tell you that here, we are only looking at the Russia-Ukraine war as the primary mover of this discussion between Trump and Putin. Frankly, it was essentially the Russia-US relationship that has been the main mover of this particular thing, and not necessarily the primary thing is the Russia-Ukraine war. President Trump obviously wants to show it because he has been committing to it, that some kind of deal can be found at whatever cost. It could be a frozen conflict for all that matters. But at the same time, I don't think that he has already laid out that Crimea will not be given NATO, they will not become a NATO member, Donbass might stay with Russia. So if all that happens, and I believe that ipso facto, it looks like that the Europeans are also agreeable to that. So they are all hinging on what kind of security guarantees are to be provided to the Ukrainians. As far as India is concerned, I personally somehow tend to believe that irrespective of the outcome of these talks, whatever happens, whether there's a deal or not, these 25% that he has put against us, additional penalty because of buying Russian oil, has nothing really to do with the Russian oil. It is more to do with his personal, grudge that he has against India for not being credited with this, the India-Pakistan, the ceasefire deal. So that's precisely what, as far as India is concerned, that's what's being driven.
Okay, so hopefully there will be some creative diplomacy and back-channel talks that may resolve things. We'll have to end there, but thank you very much to Ambassador K.C. Singh, Brahma Chalani, Anjali Prasad, Anil Trigunayat for taking our time for CNBC TV18 on these important issues. With that, it's a wrap on this broadcast. Thank you for watching. Goodbye.
Welcome to Standard Chartered presents CNBC TV18 Leadership Collective, where we bring together the minds rewriting what leadership looks like in a changing India. Thank you for joining us this evening. We open the evening with a keynote from someone who has witnessed India's transformation across finance, education, policy, and private capital. Please welcome TV Mohandas Pai, Chairman 314 Capital, co-founder and Chairman Iron Capital.
The big challenge for India today is to grow the economy from 4 trillion to 10 trillion.
Can we do it? The answer is an yes, and let me tell you why. 1991, our GDP in rupees was around 5,32,000 crores. It's grown to 331 lakh crores today in 31st of March 2025. That is 12.2% a year for 34 years in rupee terms. In dollar terms, it grew from $275 billion to $3.94 trillion. That's 8.1% a year in dollar terms, CAGR for 34 years. And from here, to grow to $10 trillion, we need to grow the GDP from around 331 lakh crores to around 9 lakh crores, possibly by 34-35. That's about 11% CAGR in rupee terms. Of course, the big zinger is the rupee-dollar rate. The rupee-dollar rate, if you assume at 85 and assume it stabilizes at 90, we should be able to do that. Out of 14%, 7% could be the nominal rate, 4% could be the inflation, with the rupee possibly depreciating to 90 and stabilizing to 90. I remember when I joined Infosys in 1994, the rupee was 27 to a dollar, went to 33, now it's come to 85, 86. So even though our GDP has grown, it doesn't reflect in dollar terms primarily because the rupee depreciation of 3.5-4% a year for the last 34 years. But in rupee terms, it's very clear. And the rupee terms is reflected in the PPP GDP. We are $17.5, $17.6 trillion in PPP. Across all areas of industry, traditional industry, we are number 2 or 3 after China, and we are going to be number 2 after 3 of China, because China today is about $20 trillion nominal and about $36 trillion in PPP. So can we be a China? No. There's room for only one China in the world, which is 30% of the world's manufacturing capacity, the largest exporter, possibly the largest importer, the largest holder of foreign currency reserves. But we can grow the economy in our own way, because we have to grow at 11% and we have to make sure it reflects. So I want to end by saying, we are on a great wicket. We are going to build this country to 10 trillion with the 85-90% probability by 2035. We are investing adequately. We are midst of the digital revolution. We have young entrepreneurs coming up. Country is becoming efficient, and entrepreneurship is going up, and corporate profitability is at an all-time high, and that's going to continue. We have a great future. Go for it, and we'll all do well. Thank you very much.
At a time when speed, trust, and integration define the future of finance, our next conversation brings us to a space where institutional depth meets the startup drive to build fast and at scale. To take off from where we are today in Bengaluru, the startup ecosystem, the startup ambition, bank financing has not been part of the picture, part of the story so far. Do you see a greater link now between banks as well as the startup ecosystem?
So banks have been closely associated with the startup ecosystem for a very long time. If I can say, in the first phase, providing them the banking rails, providing some of the tech startups, the banking rails was the first phase that we saw. During that phase, we also learned about how this ecosystem is growing and what the startups require. Each one had a slightly different requirement. So for example, a very fast growing tech startup would require a B2B platform, or would require someone who can do the reconciliation for them. So that's where I think the bank stepped in, and the bank could do a good job of that. In the next phase, there was a mismatch between collections and payments, and that's where probably working capital, etc. came in. As I think these startups have matured, there's also been acquisition finance, there's also been long-term finance, and selectively some of this has also taken off. So setting this context, if I look at our own journey in the bank and take an example, like I told you before we had a chat that, I love giving examples. So if you look at how a fintech player was eventually scaling up and the requirements that they had. So it was a requirement for very fast payments to happen, setting out the payment rails. In one of the cases, they required a sponsor to be part of the Bharat Bill Pay system, and that's where the bank could add value. In every phase, I think there is a role that banks can play with this ecosystem.
You laid out very well the phases that we've seen so far. But as we step into the next phase, as we look at scale, as we look at the possibility of many of these entrepreneurs also looking at global markets, what specifically do you believe the role that a bank like yours can play to fuel that ambition, fuel that fire?
So as the ecosystem grows and as the startups achieve a certain scale, they want to acquire other companies. So you need an advisor to help them firstly identify that target, then to also make sure that the financing is done in the right way. As they scale up, and the ambition is to go to the capital markets, as you've seen so many of our colleagues here doing that. You need pre-IPO finance. You need to bring in probably private investors into the mix. You need some kind of bridge finance at times. A lot of startups have gone and accessed international markets. So they want to grow their business overseas, and they also want to get funding from offshore. I think that's where the super connector banks that have offshore operations have a network in place. Those are the ones that can act as super connectors and make sure that these startups understand the new ecosystem that they are going into, which could have regulations, it could have market nuances, and all of that can then be brought in a sensible way to the core of the business.
In your conversations that you're having with startup founders today, what do you believe are the key challenges that they continue to contend with, that they continue to cope with?
So the good part is startups are now coming from tier 2, tier 3 cities as well. So this is a more inclusive entrepreneurship story that we are seeing. During these phases where they are able to test their hypothesis and grow. So I talked about $5.7 billion of funding coming in.
Yeah.
2 billion of that has come in the growth phase. 3 billion has come in the late phase. It's the startup phase, the actual when rubber hits the ground. In that seed funding phase, we've seen a number of transactions of smaller value, and that's where I think a little more work can be done. And that's where when helping startups find their feet and moving through the various phases.
Let me end by asking you, what do you take away as inspiration? If you could start up today, what would you want to do?
So a startup is very hard work. It starts with an idea, and you need to believe that idea is a real world requirement. You need to test the hypothesis, then you need to put money behind it, probably your own. So it's very tough for a startup entrepreneur to actually convince a whole lot of people that this is the need of the hour, and this is a better need of the hour than the idea next door, because everyone here has a startup in their head. But what really inspires me is the manner in which, the diligence with which I think a lot of these ideas have actually grown into real world solutions, solving issues that are large and adding value to mature businesses in economies like ours at scale.
PD Singh, what an absolute pleasure. Thank you very, very much for joining us here at the Bengaluru edition of the Leadership Collective. Appreciate your time and look forward to having more conversations with you. Moving on to our next conversation, India's digital public infrastructure is one of its strongest global narratives today, but it's what happens between platforms and people that sets a benchmark. Dr. Shalini, you've been part of the state's journey for over decades now. Tell us, what were some of the early bets that Karnataka made on infrastructure, on policy, and on people that laid the foundation of the innovation hub that we see today?
It's been about 36 years that I have been in Karnataka. And the very culture of the administration of Karnataka, I think, is the core factor for encouraging entrepreneurship in general, and startups and IT and deep tech and global tech and all kinds of technology-driven enterprises in particular. So the officers, right from the time I have been introduced to this cadre, are very, very particular about citizen-centric governance, the accountability, the transparency, and all that is being fueled by the e-governance initiatives of our state. So we are always pioneers in connecting to the people and to the stakeholders. And that projects have been becoming national projects and sometimes even international replicas. So I'm really proud to be part of the team.
When you look back, tell us what has been the toughest part of putting systems in place that serve people and not just policy. How have you been able to do that?
Mindset change was the biggest challenge.
That's the most, yes.
Was the biggest challenge, but also was the the most important and the most benefiting. The biggest challenge for us was that how do you make our government employees from top to bottom sensitized about the fact that delay is deadly.
Yes, delay is deadly.
So, as you know, the caption goes that we deliver in time, and we are proud of that fact that we deliver in time. And so, as they say, justice delayed is justice denied. So, if service is delayed, it is service denied.
Absolutely.
And what's the point in our being called the administrative service if you're not administering it in time? So there was a sudden change of mindset in the sense that, yes, we have to bring in a positive image of government as a whole.
Before I wrap up our conversation, you've worked deeply across skilling, entrepreneurship, and women innovation especially. What changes on ground make you feel hopeful, and where do you think we need to push boundaries harder, especially to ensure that the next wave of innovation comes from each district and demographic?
Ultimately, the grassroots. So our grassroots will be the primary education, right? And I'm so happy to say that Karnataka has always been number one in contributing innovative ideas from the schools of Karnataka. Many of them are government schools, and it is in the annual competition that the Department of Science and Technology holds. 40,000, more than 40,000 innovative ideas are coming from our children from the government schools, rural areas, and so on.
Absolutely. And on that futuristic, optimistic note, I would like to wrap up our conversation. Many thanks, ma'am, for joining us today this evening. It was an absolute pleasure speaking with you. Ladies and gentlemen, up next is a conversation that rewrites the rule of what scale can look like. I would request Shireen to kindly come back on stage and take this conversation forward. Nitin, you're always a little bit circumspect on what the case for India is, what the hypothesis for India is. So let me start by asking you, as you look at where we are today relative to what's happening in the world, what is the bull case for India?
In essence, our GDP is growing at the pace. And it's showing up in different places. And whereas, of course, the tariffs, etc., are concerned for now. But I guess it's after 3 months we'll just look back behind this, So.
Yeah, I would imagine that the tariffs are not going to have a long-lasting impact. As you look at the opportunities that Zerodha, for instance, is looking at this point in time, break that up for me. What do you foresee as the actual consumption that's likely to take place? How many people do you believe are going to be opening more demat accounts, getting onto Zerodha? I mean, what are you building in as estimates for yourself?
We claim that there are 20 crore demat account holders, but I'd say there are 4 to 5 crore unique Indians with any kind of a stock holding or a mutual fund holding. And we believe that number can be 10 crores over the next 5 years. And that's going to be like a significant growth for the markets. In terms of the stocks itself, there's enough and more supply coming in. I mean, like Swiggy.
Yes, like Swiggy.
So.
But not Zerodha.
I mean, for now, no. But yeah.
That's a change. For now, no. For now, no. Yeah. Otherwise, it's always been no and never going public.
Yeah. We've invested like 1,400 crores. Over the last 1-2 years and last 3-4 years, and the idea is that we are bullish and we are as bullish as it can be, So
funny, let me come to you now. I mean, your story is very different from the Zerodha story, the Swiggy story. 11 years, as I pointed out. As you see India grow, and with the many bets that Swiggy is taking between Instamart and, of course, food delivery and the live space, live economy business as well, what do you believe this could look like over the next few years?
Yeah, I think we are fundamentally big, massive believers in the Indian macro story. I'm sure there are going to be ebbs and flows. There are going to be good years and bad years and tariffs and whatnot. But we do believe in the longer term, it is the story to bet on. We had a chance a few years ago, or I don't know if a chance, but we thought a few years ago if we should actually diversify into international markets, probably the best decision we made, focusing on India, etc. And see, people say we are, 10 years behind China, 15 years behind China, 20 years behind China. But I mean, it doesn't matter. If you're going to willing to play the long term, we do think that there is enough amount of compounding that will play out. Even a 7% compounding over 15 years is going to be massive in many ways, right? While today we kind of actually cater to maybe, 20 million people, 25 million people on a monthly basis, our long-term ambition has been saying, can we imagine a day where 100 million people transact with us?
When do you believe you're going to go from 20 to 25 to 100 million?
Yeah, see, there's a famous quote, right? You always overestimate the short term and underestimate the long term. So I'm very skeptical of coming and saying, is it in 5 years, 10 years? I don't think it's in the next 5 years. I think it's still probably 10 years away. But then a 15% compounding over 5 years is like more than doubling the business. Our ambition is just to be the operating system that powers people's lives and makes it a lot more seamless.
Nitin, Kamath and Pani, thank you so much for joining us here. We now close the evening with a discussion about the quiet backends of big ambition, the infrastructure of trust, reach, and repeatability. We have an exceptional set of builders and bankers with us. So let's dive in how you guys are building, scaling, and of course, staying reliable in a world where change is the only constant. Abhay, let me start with you first.
We didn't have a choice. I remember going to so many VCs at that time and everybody said, ki yaar, and it was almost like, जैसे आप शॉल की दुकान पे जाते हो कि यार चाइना में क्या है दिखाओ, तभी मैच होगा तो मैच द फॉलोइंग करेंगे, अमेरिका में है कुछ तो मैच द फॉलोइंग करेंगे. Nobody understood the India problem, right? And nobody
there was no playbook, yeah.
है ही नहीं, कुछ भी नहीं है, right? So that was the issue, right? And we figured, very early on that consistency and standardization will allow us to win. And it's in the 19-20 ka farak that, the difference between a good and a great company will get, delivered. And just to solve for that 19-20 ka farak, we had to raise, copious amounts of capital upfront to invest in capex, infrastructure, so on and so forth. And we did the Samaj Seva and, diluted ourselves fully, but capital in the hindsight allowed us to do a lot of stuff that had to be done upfront before doing many things, and that was imperative.
Raghuram, load share. What is the lesson that, you've learned in that geography, doing business in that geography, that has taught you about reach and resilience?
The reason we started in Northeast is not for any other reason. It's a cold-blooded decision to start where our clients have the biggest problems, right? So we said we have relevance where we go and solve the client's biggest problems. And in my experience, I was at Myntra at that time, and I used to find that Northeast logistics was fully broken. I said, if I have to get relevance with customers, I have to go and fix this problem. So that was the reason with which we went in. And the learning has been that, what Northeast taught us is actually a lot of self-confidence, right? I think it gave us belief that no matter what the geography, no matter what the problem, I think the confidence got built up that we can actually solve it with the right tools and build it in a way that is kind of relevant and will stay relevant, right? So that way, I think it's been a good lesson. Northeast is still the important geography for us.
Yes.
But now we've diversified beyond, and we are now solving like really metro city problems.
Yes.
So yeah, that's been the learning for us.
That's an interesting take that you just gave us. Movin, coming to you, your journey has been interesting. It started with a tweet that got you your first customer, and now you're building Skydo into what you call a cross-border bank. Tell us, how did this leap of imagination first happen?
One of the main reasons why we chose this was that my co-founder had actually been running a business, his family business, and he experienced this himself. While on the other side, I had worked at a payments company and experienced how to build the nuts and bolts of payments and how to work with the regulation and how to work with customer needs on payments in India. So I think we kind of brought all these three together and realized that this is a problem we could solve. Not many had tried solving it, but we just had this belief in the long-term solvability of this problem and also the long-term size and importance of the problem. And then we started going out to some of our friends and some entrepreneurs who were actually running export businesses and started asking them how their business runs and just started learning from them. I think we spent about 6 months during this period before we resigned from our jobs and called it a startup.
Sanjay, let me come to you now. I understand that you've been working with startups and the new age banking segment for many, many years now. Tell us, in your experience, how it's been working with this segment. What are the kind of shifts that you've seen in the ecosystem?
In Standard Chartered's interactions with startups, has, if I were to characterize that, probably 2 words stand out: exciting and enriching. And let me explain that. So exciting from a perspective of just the amount of innovation being done by this segment. It's driving change. So that's the exciting part, which is all visible to all of us. But the enriching part is equally important from a banker's perspective. And what happens is, as they drive innovation, they're pushing us to push the boundaries to drive innovation ourselves, to meet their needs. So again, examples, payment infrastructure, for example, the number of transactions that we're able to process, given a lot of them have small tickets, high volume business, we have to do more TPSs, right? So that, or payment as a service, PaaS as we call it, right? Bespoke solutions, or infrastructure, or supply chain financing, vendor financing, or even more structured financing. So all in all, we learn as they grow, and we grow as they learn. So, yeah.
On that note, it's time for me to wrap up our discussion. Thank you so much, panelists, for your insights, and it was an absolute pleasure speaking with all of you. Thank you so much.
Thank you.
Good evening. Thanks very much for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The market registers its fourth straight day of gains. Autos, metals, oil and gas fueled the rally. Broader markets outperformed the frontline indices. China has lifted restrictions on exports of rare earth magnets, fertilizers and tunnel boring machines to India. Chinese Foreign Minister Wang Yi assures Minister Jaishankar that India's concerns on import restrictions are being addressed. That's an exclusive. President Trump urges Ukraine's Zelensky and Russia's Putin to meet face-to-face in a trilateral summit to end the war, hints at security guarantees for Ukraine backed by European leaders, but stops short of making any concrete commitments towards a peace deal. Intel gets a $2 billion lifeline from SoftBank. The Japanese investor is expected to pick up 2% equity in the troubled American chip maker, as per Bloomberg. As per Bloomberg, Trump administration is also considering picking up a 10% stake in Intel. Tamil Nadu and Kerala government questions the maintainability of presidential reference on the issue of the Supreme Court mandating a timeline for clearing bills. Call it a camouflaged attempt by the centre to overturn the apex court's judgment. Heavy rains for the fourth day bring Mumbai to a standstill. Waterlogged roads lead to traffic snarls. Local train services impacted. Schools, colleges and government offices remain shut. Authorities urge citizens to avoid unnecessary travel. Let's go straight to the day's market action. The Lal Street registering its fourth day of gains. The market closing in the green again after broader markets outperformed. Auto, FMCG and textile stocks charged ahead, while some pharma stocks saw some pressure. Nifty up 100 points. That's 0.5% gain. 370 points higher on the Sensex. The Nifty Bank 130 points high and 555 points high. Almost a percent uptick there for the mid-cap index. Prashant is standing by, building on the gains. Prashant.
A more measured start, and it looked like the market perhaps would consolidate after yesterday's sharp move. But then things picked up I mean, we ended pretty strong, especially actually in the broader market space. Mid and small cap indices about 1% higher. Nifty Bank was up about 0.25%, and the Nifty itself ending with about 1/3% or 100 odd points coming through on the benchmark Nifty. So all told, I mean, pretty good follow-up day. I'll start with what was up, and by the way, market breadth was pretty strong. Almost 2 and 2.5 to 1 in terms of all stocks which were trading. And as you will see, I'll get to the broader market, mid and small cap space. Really scattered move, but lots of volume-led gains. Not sector-wise sort of, up moves like what we had yesterday on the back of, hopeful GST relief. Now, on the Nifty, Tata Motors, Hero, Bajaj were higher. You had Adani Ports, which was up. There was Reliance, which was higher. And there was Eternal, which actually looked pretty strong through the course of the day. On the downside, Dr. Reddy's, Cipla and Hindalco were the three names which were down, but nothing major, between 0.75% to about 1% lower. The broader market is where the excitement is. Ola was up 9%, the number one volume-led gain, about 44 rupees there. Bellrise, which is a recently, fairly recent listing, strong volume-led gains. Jamna Auto, actually a lot of the auto ancillary names looked up. Jamna was one of them. You had Hyundai, which was higher sharply on volumes. Devyani, which is a quick service company, which looked good. Vardhaman Textiles was up from the word go this morning. Motherson Sumi Wire, both stocks higher. Delta Corp perked up ended about 7-8% in the green. Raymond was up. Aether, again, a recent listing. Aarti Pharma, Everready, there was something like a Shelley Engineering, which also looked higher. As I said, the real action in the broader market space, and except maybe auto ancillaries, which is as a pocket which did well, very little to sort of bunch things together. Bharat Dynamics was the loser in the broader market, big volumes here. Bajaj Holdings was down about 5% by close. Actually, these are the two big volume-led losers. Newland was down about 4%. IFB had a big move yesterday, was down 3.5%. Intellect Design and a bunch of other names down between 3 and 4%. But I mean, squarely the day belongs to bulls, with broader markets, mid and small caps doing bulk of the heavy lifting. Back to you.
Well, that's the market action for you, Prashant. Many thanks for joining us. But let's go straight to the big story this evening. As we've been reporting, China's Foreign Minister Wang Yi meets Prime Minister Modi today ahead of his visit to Tianjin for the Shanghai Cooperation Organization Summit, which is going to be held later this month. But earlier in the day, he met the National Security Advisor Ajit Doval for a special representatives dialogue on the border issue in New Delhi. The Chinese minister remarked that stability has been restored at the border, adding that the setbacks that India and China faced in the past are not in the interests of either country. The sentiment was echoed by NSA Doval, who said, and I quote, peace and tranquility has prevailed over the past 9 months. The Chinese leader also met External Affairs Minister S. Jaishankar to discuss bilateral ties and trade relations. This marked the second such meeting between the two sides since 2020. Now, sources tell us that China has lifted restrictions on the exports of rare earth magnets, fertilizers and tunnel boring machines. Parikshit is standing by with more. Parikshit, we've been reporting on efforts being made there for both sides to re-engage, at least economically, on these crucial issues, these three crucial matters. Industry has been very, very disappointed with these restrictions. Is there relief now in sight?
Well, that's what sources are claiming. We've been told that the conversation between External Affairs Minister Subramaniam Jaishankar and Foreign Minister Wang Yi of China was extremely fruitful. And this is really taking place after a series of conversation between India and China at the level of foreign secretaries, at the level of Defense Minister, External Affairs Minister, to resolve the rare earth magnet issue. Now, we've been given to know by highly placed sources that restrictions on the export of rare earth magnets, that is high rare earth magnets from China, tunnel boring machines, specialty fertilizers, those restrictions have been lifted. We are expecting clearances and consignments to come very soon. In fact, clearances are being made as we speak, and shipments of these key components will be dispatched to India in the coming few weeks and months. More timelines, more conditions will be clear to exporters, to the industry in the coming days, but we can see an incremental improvement in business-to-business ties between the two countries. It is also essential to note what Wang Yi, the Chinese foreign minister, conveyed to India. He said there should not be interference in each other's affairs. There needs to be stability, confidence in relations, mutual respect, and we both need to grow together and work for each other's prosperity. So strong words coming in from both sides. All of this is building up to the visit of Prime Minister Narendra Modi to Tianjin on the 31st of August and the 1st of September, where he will be meeting Xi Jinping. And a lot of these things will be clear. We've been seeing decisions on resuming flights, tourist visas being started by the Indian side. So we expect an improvement in ties that will be announced during the visit to the Prime Minister. But lifting of restrictions on these key items, especially high rare earth magnets, is a big one.
All right, Parikshit, many thanks for joining us. So breakthrough there, and that should provide some relief specifically to sectors like the auto industry. The big global story: President Trump hosting Ukraine's President Zelensky and 7 other European leaders at the White House last evening. There were meetings between Trump and Zelensky as well, and that involved the EU leaders. Trump's meeting with Zelensky was much more warmer and conciliatory this time than their previous showdown a few months ago. President Trump hinted at security guarantees for Ukraine backed by European leaders, but stopped short of making any concrete commitments towards a peace deal. Meanwhile, Zelensky repeatedly thanked the US president. Trump said on social media he has begun arranging a meeting between Putin and Zelensky. He said he will work on a trilateral meeting after the bilateral meeting takes place between Zelensky and Putin. The Ukrainian president at a news conference said he's ready for any format of a meeting with the Russian president. Zelensky, who was criticized for his attire during his last visit to the Oval Office, was praised by Trump this time around for wearing a suit. Listen in.
President Zelensky, you look fabulous in that suit.
I said the same thing.
Yeah, you look good.
I said the same thing.
Yeah, looks good on you.
I said the one that attacked you last time. See, now I remember that.
Yeah, I apologize to you. You look wonderful. No, my first question for you, President Zelensky.
In the same suit. You see, I changed. You are not.
Is there a date for you to meet with President?
The date?
Yes.
No, we don't have any date. We don't have any date. We just conformed after this productive meeting with President and then with all our colleagues, with the partners, we confirmed that we are ready for trilateral meeting. And if Russia proposed to President of the United States bilateral, and then we will see the result of bilateral, and then it can be the trilateral. So I said always, so Ukraine will never stop on the way to peace, and we are ready for any kind of format, but on the level of leaders.
There'll be a lot of help. When it comes to security, there's going to be a lot of help. It's going to be good. They are first line of defense because they're there. They're Europe. But we're going to help them out also. We'll be involved. But we can work a deal where we're working on a peace deal while they're fighting. They have to fight. I wish they could stop. I'd like them to stop. But strategically, that could be a disadvantage for one side or the other. But all of these deals I made without even the mention of the words ceasefire.
You have an American president, European presidents, and a Ukrainian president all wanting peace. For my part, I have the greatest doubts about the reality of a desire for peace on the part of the Russian president, because as long as he thinks he can win through war, he will do so.
We had two material outcomes. The first, on the question of security guarantees, was the agreement that the coalition of willing countries, that's 30 countries already working together on security guarantees, will now work with the US on those guarantees, coordinating. The other material outcome was the agreement that will now be a bilateral agreement between President Putin and President Zelensky.
All the points of discussion of what is going to go into any kind of peace deal that will end the Russian assault on Ukraine. And so we heard that there's the potential for the U.S. to join a peacekeeping force with Europeans to ensure future security. This is something that we've heard time and again. Both Ukraine's President Zelensky and European allies have said there needs to be security guarantees to ensure that Russia's not just going to come back and launch another attack after ending some sort of peace deal here. And President Zelensky was asked, what are you actually asking for? Is it American troops, intelligence, equipment? What is it? He said everything. Very short and sweet. And President Trump did say that Putin had agreed to allow some form of security guarantees. European allies are praising the push for peace, and particularly the idea of stepping in to allow those security guarantees. But they're also pressing still for an immediate ceasefire, which is something that President Trump has backed off of after his Alaska summit with Putin, now arguing that negotiations toward a broad peace deal can continue while the fighting rages on. And again, of course, the other main sticking point is whether there's going to be any carving up of Ukrainian territory. President Zelensky has said multiple times that he does not want to cede any territory to the occupiers. He showed a battlefield map and continued to make that case. But the next step from here is that President Trump posted that he called Russian President Putin and has begun arrangements for a long-sought meeting between Putin and Zelensky. If that does indeed come to pass, that could be a major step forward in what has been this awful onslaught for 3.5 years.
Well, that is the latest on that big meeting that took place. But a quick check of some of the other stories that we're tracking. Sources say the Union Cabinet has approved a bill to regulate online gaming and penalize betting. The bill is likely to be introduced in Parliament tomorrow. SoftBank Group is set to invest $2 billion in U.S. chipmaker Intel. SoftBank will buy nearly 87 million shares at the price of $23 a share. The transaction is expected to give SoftBank about 2% stake in Intel. This will make it the chipmaker's sixth largest shareholder, so an important global development there. And speaking of Intel, the Trump administration is set to be in talks to acquire 10% stake in the company via the CHIPS Act. This as per a Bloomberg report. The U.S. government could also consider converting some or all of Intel's grants from the 2022 Act into equity in the company. The semiconductor giant has been awarded about $11 billion in the CHIPS Act grants. This also includes $8 billion to support its domestic investment plans and $3 billion to boost its semiconductor manufacturing for national security. What a ride it's been there from Intel, from going after the CEO to now perhaps even picking up equity in the company itself. That is the Trump administration's likely move there. Now, shares of jewelry brand BlueStone listing at a 3% discount to its issue price. However, the stock perked up in trade, closing with gains of 6%. The public issue was subscribed 2.72 times. BlueStone intends to use the proceeds from the fresh issue to fund its working capital requirements. Brokerage firm Nomura says investors may not be fully factoring in the risk of fresh U.S. tariffs on Indian exports. Speaking to CNBC-TV18, the head of global macro research, Robert Subramaniam, said that there will be a negative response if the secondary duties go into effect on the 27th of August, as this is not fully anticipated just yet. A break coming up. Heavy rains batter Mumbai for the fourth straight day, bringing the city to a standstill. Waterlogged roads lead to snarls, and local train services are impacted. That and more when we return. Mumbai continues to grapple with heavy rains and waterlogging for the third straight day. The Met Department has issued a red alert across Mumbai, Palghar, Thane and Raigad. Officials say that at least 6 people have died. Hundreds have been displaced over the last couple of days. The BMC has declared a public holiday for all schools and colleges. Multiple flights have been cancelled. The city's rail network has come to a halt. The Maharashtra government has deployed rescue teams across the state, and affected regions continue to stay on high alert. Chief Minister Devendra Fadnavis has been reviewing the flood situation with the Disaster Management Department. He said the next 48 hours will be crucial for Mumbai and other adjoining districts. BMC Commissioner R. Bhushan Gagrani told CNBC-TV18 the Mithi River, which was close to its danger mark earlier, will recede in the next couple of hours. He also added that hundreds of people have been evacuated from areas close to the Mithi River. Listen in.
Water is slowly receding now. It has just gone below 39 now, 390. And there is a low tide. So hopefully next couple of hours, it will be below the danger mark. However, we are in full preparedness of shifting whatever number of people required. We have shifted 400, but if required, we'll be able to shift, in fact, entire population which is coming under the danger zone.
Well, that is the latest there from Mumbai. Tamil Nadu and Kerala governments have questioned the maintainability of presidential reference on the issue of the Supreme Court mandating a timeline for clearing bills. The state governments have called it a camouflage attempt by the centre to overturn the apex court's judgment. Ashmit joins us now with more. Ashmit, where does this now leave the role and the significance of the governor's action or inaction?
Well, it was in April 2025 that the Supreme Court passed a landmark judgment prescribing a deadline for the very first time, a deadline for the governor, a deadline for the president to clear bills that are being passed by the state assemblies. This order was passed after multiple states, the likes of Kerala, Tamil Nadu, Punjab, Delhi, had raised questions about their respective governors stymieing the entire legislative process by just sitting on these bills. However, landmark as it was, it invited a strong pushback from the centre saying that the Supreme Court has no business dictating terms to the governor as well as to the president's office, which is what led to President Draupadi Murmu making a presidential reference, which is essentially raising a question before the Supreme Court. The sum and substance of those questions was, does the Supreme Court have the powers to prescribe deadlines for the president's office? Now, the states of Kerala and Tamil Nadu are dead set against this. What they're saying is that the president merely acts on the aid and advice of the government, and therefore this is nothing but the government that is using the window of the presidential reference to overturn the Supreme Court judgment. They said that this is essentially a way to bypass the Supreme Court judgment, a way to overturn it, a way to substitute the Supreme Court judgment. This is simply impermissible. In fact, Abhishek Manu Singhvi, appearing for the state of Tamil Nadu, went on to say that whatever language one may use to camouflage this is nothing but a ruse, an attempt by the centre to overturn an existing Supreme Court judgment, that this will severely impact institutional integrity, something that cannot be permitted. The centre, however, remaining firm that this is broadly a question of law being raised by the president, and there's no reason why the Supreme Court can't consider it.
Ashmit, many thanks. Now, the opposition bloc has decided to field former Supreme Court Judge B. Sudarshan Reddy as the candidate for the vice presidential elections on the 9th of September. Congress President Mallikarjun Kharge made the announcement in a meeting. Reddy served as the Chief Justice of the Guwahati High Court before being elevated to the Supreme Court in 2007. International news: Israeli forces have killed at least 26 Palestinians since dawn in Gaza. This includes 8 people who were killed after their tents were blown by the IDF. Hamas has informed mediators that it has approved a proposal for a ceasefire deal. Israeli forces have killed over 62,000 Palestinians in Gaza since the war began in 2023. OpenAI has launched a new subscription plan for Indian users called ChatGPT Go. It's a low-cost subscription plan that will feature enhanced message limits, image generation and chat memory. The new plan will cost $399 rupees a month. The company said the rollout will be gradual and the option will appear for users on the app and the website in the coming days. Prime Minister Modi met Shubhanshu Shukla, the pilot of the Axiom 4 space mission to the International Space Station, at his official residence. Shukla briefed the Prime Minister about his landmark mission, sharing his experiences of being in space. He gifted the Prime Minister his Axiom 4 mission patch and shared photos of the Earth taken from the International Space Station. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment.
and welcome to Startup Street. I'm Ritu Singh, and joining me from the Mumbai studio are Arundhati Ramanan and Shruti Mishra. Here are the top headlines from the startup space. The Union Cabinet approves a bill to regulate online gaming. Sources say the bill could propose a complete ban on online betting. Adds that the bill is likely to be introduced in Parliament tomorrow.
D2C baby products brand R for Rabbit bags $27 million in a Series B round. The round was co-led by Filter Capital and 314 Capital, with early investor Exponential Capital exiting. Startup to use the funds to accelerate growth and drive product innovation.
Brand BlueStone lists at a 3% discount to its issue price, with the stock ends 6% higher in trade. The company will use these proceeds to fund its working capital requirements.
Polestar Analytics bags $12.5 million in growth capital from a consortium of US-based family office and institutional investors. The funds will be used to further deepen the firm's AI capabilities and reinforce the development of its proprietary One platform.
The House of Biryan adds 32 crore rupees to its cart in a growth round. Cricket icon MS Dhoni backs the firm, along with Best Vantage Investments and other angel investors. The firm, which operates 22 kitchens, is EBITDA positive in its core markets.
On What's Brewing today, Bengaluru-based Refold AI has emerged from stealth with $6.5 million in seed funding led by ENIAC Ventures and Tidal Ventures. The startup is tackling one of enterprise software's biggest pain points, API integrations, a problem that costs companies an estimated $350 billion a year in consultants and manual fixes. Refold replaces that patchwork with autonomous AI agents that learn, build, and maintain system connections on their own. Already working with over 30 paying enterprise customers and processing more than 30 million API calls a month, Refold is positioning itself as the invisible logic layer powering the next generation of enterprise software. Joining me now to discuss this further is Jugal Anchalia, the co-founder and CEO of Refold AI. Jugal, thank you so much for taking time out and being here with us on Startup Street. You know, this company emerged from your previous venture, JustDoc, which was sold to NetMeds in 2018, right? So talk to us about how you decided to start Refold.
First of all, thank you so much, Arundhati, for having me here. It's a pleasure to be here. So after, selling JustDoc to NetMeds, NetMeds further got acquired by Reliance. We kind of saw a lot of enterprise systems, that were being used, especially around ERPs. And we, sort of saw a lot of consultants being pulled in for manual operations around these integrations. That gave us an insight that enterprise integrations is fairly, it runs on old systems. And when we saw the potential of AI automating and generating integration code, we kind of put two and two together. And, that's how we started Refold AI.
Sure. And, you're sort of replacing expensive consultants and integrators with AI agents, right? So how exactly do these autonomous agents work in practice?
So, basically, integration has been dominated by system integrators and consultants who kind of are trained historically over the years on these complex systems like SAP and Oracle. So what we have done is we have taken the SAP operating manual and, trained these agents on top of that. So agents can write custom integration code, they can automatically test it, and finally humans can just oversee and then deploy it into actual production use.
Sure. And, you've raised the $6.5 million coming out of stealth. What's sort of the immediate roadmap for Refold AI with this fresh capital?
Yeah, this helps us in two ways. Almost half of it is, in accelerating our go-to-market motion and expanding globally. We have customers already across the world, and we see it as a potential where we can take it, to different markets. And almost half of the funds would also be used to drive our R&D and, AI research further, so that we can add more connectors inside the platform.
Sure. And, Refold already has 30 paying enterprise customers. It's been about two months since you started and about 1,500 active users, right? So what do you think is driving this early traction?
So we are seeing a lot of demand from the market. Integration fundamentally are a very core problem around enterprises. A lot of enterprises are adopting AI But AI needs data or data connectivity to basically run those models. Every enterprise that we're talking to has a fundamental need where current existing integrations are broken, slow, or they are human dependent. So basically that's kind of driving the need, and AI has amplified, our go-to-market here.
Sure. And the enterprise integration market is already crowded with sort of lots of legacy players, right? How does Refold sort of differentiate itself from players like, MuleSoft or Boom?
Yeah, so there are a lot of legacy systems that were created to automate integrations, but they are still manual, and they are not they don't leverage AI in the way we envisage. So you can think about it in this way that two systems need to talk to each other, and there is a lot of customization that goes on. Like two enterprises don't look the same. They have, even though they use the similar systems, they have a very different settings. So the legacy systems were tuned to kind of like unify those experiences, but we are embracing the customized nature of these enterprises, and AI is helping us write that custom code, or basically just like tackle those issues as we go on.
Sure. And, you talk about sort of flipping incentives by eliminating the complexity instead of billing for it, right? Can you sort of explain how your business model sort of works, and where do you hope to, sort of end this year?
Yeah, basically, traditionally, the industry has been designed in a way where, these integration workflows are sort of built by human consultants or system integrators that bill it by the hour. And, they kind of like, the longer the projects run, the more money they make. That's the traditional structure of these integrations. But AI kind of like has empowered us to shift more towards an outcome-based model. So, we have an incentive to deliver the projects faster, and the faster it gets delivered, the more integration workloads can be taken by the AI agents, and the faster we grow. So it's basically the flipping of incentives in that sense.
Sure. And looking ahead, how do you see Refold's role in the AI native enterprise stack? Could it truly become that invisible logic player powering business workflows? What's, the sort of 1 year to 2 year growth roadmap for you?
Yeah, we have already grown almost like 6x in last year, and we are on a trajectory to grow further this year, with similar numbers. We feel we are becoming that glue between two systems that talk to each other. And in the age of AI, this is becoming very, very fundamental. Systems need to talk to each other. Enterprise software companies are building capabilities around AI, but the data connectivity is still running on the age-old APIs, which break oftentimes. So there is a huge opportunity in front of us, and we are really excited about that.
So a huge opportunity in front of you. All right, Jugal, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on your journey going forward.
Yeah, thank you so much.
Well, in what else is brewing today, B2B quick commerce platform Fair Deal Market has raised $3 million in a pre-Series A funding round that was led by Incubate Fund Asia and Waterbridge Ventures. Co-founded in 2022 by two brothers hailing from Jaipur, the company says it is approaching $10 million in ARR and plans to build a platform of highly loyal 1 lakh retailers in the next 3 years. The fresh funds will help it deepen its technology moat, expand in new zones, and onboard more D2C and regional hero brands. For more on the funding and the company's growth roadmap, joining me now is its co-founder and CEO, Prateek Bansal. Prateek, welcome to Startup Street. Thanks very much for being here. Tell us very briefly about Fair Deal and the size of the opportunity in this B2B quick commerce market and the market gap really that you're solving for.
Sure. Firstly, thank you so much for having me here. Quickly, what we are trying to solve at Fair Deal. So in India, there are almost 40 to 50 lakh retailers, which actually goes to wholesale market every day to procure their inventory. With Fair Deal now, they don't have to actually go to wholesale market. They can open the Fair Deal app and get their goods delivered instantly at their doorstep. So this is what we are solving for Indian retailers.
Yeah. Okay, and now that you've got this $3 million check, where will the bulk of this money grow? And when you're talking about expansion beyond Delhi NCR, where would that be?
Sure. So for at least next 2 years, we would stick to Delhi NCR. Post that, we will look at markets like Bombay and Bangalore, which are again very densely populated market. For us, it is very important to enter into a market which is very densely populated.
Well, and the rest of the money, how will you be deploying the funding apart from the expansion plans that you've detailed?
Sure. So we are also exploring some new categories. Currently, we only operate in food and beverages as a category. We are looking to expand few more categories, which would be non-food. So some of the money which we have raised will go towards category expansion, and yes, rest of the money would be used to develop the infra for reaching to 1 lakh retailers in next 3 years.
All right. Okay, got that. I read that you say that data is going to be your moat. I mean, that will defend you against competitors. What exactly do you mean by that in terms of what you're doing differently?
Sure. So for us, data is everything, right? Whenever we enter into a market, firstly, we understand with the help of data what actually sells there, what is the pack size, which are the brands which are actually selling there. And that help us to plan the GTM for that market. And post-launch, right, we again see that data, that what is selling. And then we continue to go deep on the assortment which is selling, right? So data is our core. That remains on the center for fair deal. And let me tell you, within past 1 year, we have grown almost 10x in a very capital efficient manner. And that is only possible because we use a lot of data, right, which we were generating while doing that transaction with these retailers. So yes, data remains the core for fair deal.
Well, a 10x growth in the first year is impressive, but then again, it's coming on a small base. You're already at 10 million ARR today, and you're targeting now 150 million in the next 3 years. What exactly is going to get you there? Of course, you're going to be using data, like you said, but what is the sort of roadmap you have for growth over the next few years, if you could give us a glimpse?
Sure. So as I said, for next 2 years, we will stick to NCR as a region. In NCR, we see we will be able to reach almost to 60 to 80,000 unique retailers. Again, we are more focused to build a loyal relationship with our users, rather acquiring more and more users. So loyalty remains our top focus. So once we reach that 60,000 to 80,000 unique retailers in NCR, we would then start with our new markets, which is Bombay and Bangalore. So with these 4 core markets, right, which are top market for any Indian consumption economy, right? So we are targeting these 3 markets to reach to 150 million ARR.
Okay, got that, Prateek. There is this target you've set of onboarding 100,000 loyal retailers within 3 years. What sort of incentives or tools are you offering to ensure that there is stickiness? And, how do you identify these hero D2C regional brands? Just tell us a bit about that as well.
Sure. So firstly, how do we make loyal retailers, right? That is very important to understand. So we provide quick delivery. So our moat is they get instant delivery, let's say within 1 hour. So they don't have to actually bother about their working capital, which makes the retailer loyal to fair deal, right? And how do we target these hero D2C brands? So firstly, we check what is selling, which brands are selling on the other platforms, could be even Amazon or Blinkit of the world. And then we try to check whether these brands are eligible to sell on our platform or are able to sell at our retailers. So we try to marry some data, right? And again, data remains the core while selecting any brand. And once we understand that, we launch that brand and try to make it a hero brand.
Got that, Prateek. Thank you very much for sharing all of that, and we wish you the best, with your growth plans ahead. Thanks very much for your time today.
Thank you for having me. Thank you.
Moving on, India's manufacturing sector is at a strategic inflection point and is poised for significant growth. Sample this, manufacturing value added is projected to touch $1.3 trillion by FY30 from the current $471 billion. The growth is fueled by strong policy support as well as the fact that India benefits from a large and rapidly expanding engineering workforce. Speaking to CNBC-TV18's Parikshit Luthra, Prashant Prakash of Axel Partners talks about advanced manufacturing and the top bets in the space. Take a look.
Advanced manufacturing is not just assembling and just putting together components that are just imported from across the world. Advanced manufacturing is rooted in IP. It is engineering first, and it typically requires multiple modes when it comes to design, when it comes to being able to do fabless chips and multiple other components that makes it non-trivial, and that's what is highly valued today, both in India and the rest of the world. In advanced manufacturing, what are the interesting spaces for Axel and in general globally now? I would say aerospace and defense would be at the top. I think this whole idea of defense warfare totally changing. We have seen it in Operation Sindoor. We've seen it in the Ukraine. So I think they are fast moving towards UAV, drones, counter drones, all kinds of electronics being applied and precision manufacturing being applied in defense and aerospace. So that's a huge area. The second big space is in specialty chemicals, where we have more advanced APIs and the need to replace and a lot of global imports. So that's the second area. The third would be, in general, electrical and electronics design. There is a huge import bill for us in importing chips. And it's one thing to build fabs in India, but we also need to be able to have the type of design capabilities to build and replace some of those semiconductors from our country. And finally, the EV supply chain. We are a huge automobile exporter. We have to quickly transition towards having a significant component of that supply chain also being electrical EV first. So I think there's a huge opportunity there. So these are some areas, and we are starting to see startups. The supply of startups in these areas is definitely gone up 10x in the last 12 to 18 months.
All right, moving on to the big story that we're tracking today in the startup space. It is a big blow to online gaming companies. We understand from sources that the government is looking at regulating online gaming by barring people from offering money to play online games. Ashmit, has been picking up details on this and joins in now. Ashmit, tell us, what exactly is the government proposing and how will this impact the sector?
Well, this could be curtains as far as the online real money game space is concerned. That's what sources are telling us. The bill, we understand, which is likely to be tabled tomorrow before the parliament, is likely to provide for sweeping restrictions as far as online real money gaming is concerned. There was initially an anticipation that perhaps it targets only betting and not real money gaming. But what sources tell us is that the language of the bill is such that it's likely to provide for sweeping restrictions. So that effectively means that any person, it's likely to have prohibition, a bar on any person or entity providing real money gaming services. It's likely to provide a bar on any person from advertising or promoting such products and services. It's likely to, in fact, also bar any bank or financial institution from providing transactions to allow flow from money from the user to such entities, to such platforms. There are also likely to be penal consequences, which will be likely be a part of this bill. Penal consequences to the tune of 3 years in jail, penalties as high as 1 crore rupees in case of non-compliance, in case of violation of the provisions of such bill. And that's not all. The bill is also likely to provide conditions that any company which is found to be violating such provisions, the officials of those companies can also be proceeded against. These, of course, what sources confirming. We're yet to see the bill that is actually likely to be tabled before the parliament and how the parliament chooses to respond.
All right, Ashmit, many thanks for taking us through those details. On that note, it is time for us to head into a short break. Coming up on the other side, Indian online gaming platform Games 24/7 has launched the third edition of Tech Expedite, a 90-day program to support early-stage AI startups. We put the company's co-founder and CEO on the hot seat to find out more. Stay tuned.
Welcome back to Startup Street. India's startup ecosystem is the third largest in the world with over 1.76 lakh registered startups. Fueling this momentum, Games 24/7 has launched the third edition of its flagship accelerator program, Tech Expedite. The 90-day program will back early-stage startups across AI for skills, gaming and sports, and inclusive technology, offering mentorship, masterclasses and strategic investments for the top 3 startups. Joining us now to talk about Tech Expedite 3.0 and the opportunities ahead for Indian entrepreneurs is Bhavin Pandya, the co-founder and co-CEO of Games 24/7. Bhavin, welcome back to Startup Street. Like I mentioned, you've announced the third edition of Tech Expedite. What's the vision behind this accelerator and how has it evolved since the first edition in 2023?
First of all, thank you for having me on the show. And I'm really pleased that we are announcing Tech Expedite 3.0. It's, of course, going to be bigger and better than the first 2 versions. The first one was focused mainly on gaming. Since then, we've added inclusive tech. AI obviously is really key to what we're doing, and obviously our focus is on continues to be on gaming because that's where we're experts. So we're going to do this time. We have three different cohorts that we're focusing on. The first one being AI for skill development. The other one being gaming and sports, obviously, and the third one being inclusive tech. So those are some of the things that we're working on.
Sure. So like you mentioned, the focus is on AI for skills, gaming and sports and inclusive technology. Bhavin, tell us why these 3 themes and what kind of innovations are you hoping to see from startups?
So these 3 themes, like I said, mainly because AI, I think, is here and now and is going to stay and is going to revolutionize our lives in more ways than one. And so it's the right thing to do is to be current, is to sort of ride this wave. Gaming, because that's where our expertise is, and gaming is growing very, very handsomely, continuously, especially in India. And last but not the least, I think there's a lot to be said and done about the use of technology in helping people who don't have all the capabilities that most people have.
You know, Bhavin, for startups listening in, what sets Tech Expedite apart from other accelerators? Can you break down the kind of mentorship, masterclasses and hands-on support that participants will receive?
Sure. The biggest thing that we noticed was that funding was available in India. There were enough and more companies or entities that were willing to fund people. But what was not available was real mentorship. Okay, these are the kinds of problems. How do you tackle them? How do you solve this technology issue? How do you solve this go-to-market issue? And I think that's where Tech Expedite really stands out, where we've been there, done that, and that's what we're sharing directly with fellow entrepreneurs who want to also establish themselves here. Not to mention that we're also making connections and giving them the inroads to get funds and receive funding. We ourselves are, like you said, for the top three entrepreneurs this year, going to put in a check and also are in advanced talks with, have already given a term sheet from our last expedite edition to ample.ai, which is doing some fantastic work using AI.
You know, you mentioned that you're already committing a strategic investment for the top 3 startups. What will the size of investment be? And what kind of business or impact metrics will you be looking at when deciding who makes the cut?
So let me talk about the second part first, right? Which is that the impact, which is in our minds, right? There are a lot of problems that we can solve today. Especially, I think there are entrepreneurs coming up in tier 2 and tier 3 cities. They're coming up with some very bright ideas to solve problems for India. And so from that perspective, our biggest lookout will be for the impact that this will cause, that this idea will cause, that the product will cause. And if the impact is large, then everything else we're going to support fully. As per the amount of investment, that will vary from the need the startup has, what they're really looking for, and how we can contribute to them getting the largest shot at success.
Okay. You know, you mentioned the tier 1, tier 2, tier 3 cities, and you're also taking Tech Expedite on the road with city chapters in Delhi, Mumbai, Bengaluru, Hyderabad, and Amravati. How important is regional outreach in spotting the next wave of founders, Bhavin?
Extremely important, Shruti. And the reason for that is, until now, all of our focus has been on the, like you said, the Bengalurus, the Hyderabad's, the Mumbai's, and the Delhis of the world, right? But I think it's time to look beyond that, because as I was just saying, there are very cool problems that only tier 2, tier 3, tier 4 cities in India are facing, that the tier 1 is not even aware of, right? And this is where some of these entrepreneurs are using these skills, their skills in AI and tech, to solve some of those problems that are niche to them. And that obviously, as we know, that tier 2, tier 3, tier 4 is a large part of our country, our population. Yes. And so there's a huge impact that can be made there.
All right, Bhavin, quickly looking ahead to pitch day in February 2026, what are you hoping to see from this year's cohort?
We're hoping to see a lot of startups that use AI in very meaningful ways, right? I mean, right now, a lot of us are using AI. We're using ChatGPT. We're using some of these things to help us answer immediate questions, right? But can you really build AI or a system using AI that'll solve a cool problem, that'll build a moat, right? That so tomorrow no one else can replicate, or fewer people can replicate, because you're really solving it in a very niche, in a fantastic way.
Well, on that note, it's time for me to wrap up our conversation. Bhavin, many thanks for joining us on Startup Street today, and wish you the very best with Tech Expedite.
Thank you so much, Shruti.
With that, it's a wrap on this edition of Startup Street. More news and updates coming up on CNBC-TV18. Stay tuned.
Welcome back to this very special Indianomics. We've been discussing the combined impact of an S&P rating upgrade, a likely GST rate cut for a whole host of items, and possibility of a segment of Indian consumer products reeling under 50% US tariffs. All the combined impact we are discussing with Neeraj Gambhir of Axis Bank, Sonal Verma of Nomura, Kanika Pastrich of Union Bank, and Sameer Narang of ICICI Bank. Before the break, we were talking about whether a fiscal package can come for the exporters now that the government has already given away some of the money, or is going to give away some of the money by way of GST cuts. So that question to you, Sameer, do you think now even hoping for a package for the exporters is difficult? Or, will the government go ahead? After all, who is respecting fiscal boundaries these days? Look at Europe, look at the US. I mean, maybe 4.6, why not? Do you think the government might take that posture?
So I think, Lata, for exporters, the benefit will flow through credit lines, through credit guarantee, and through other schemes like maybe interest equalization schemes, softer credit terms. Maybe some support or nudge through some of these factors. Risk weights can change. So there are many other tools apart from a direct fiscal handout, which will be given to the exporters, diversification, working on newer markets, helping them out in many other ways. So I think that would be the route taken rather than a direct fiscal handout that will be given. And the cost of that is defrayed over the years, as we have seen during pandemic as well, when the credit guarantee and other schemes were given. So that cost is defrayed over the years. It's not a one-time cost. So I think we should think on those lines, and that's what happened in Brazil as well, where credit guarantees and other schemes have been extended because they are also on a 50% tariff as we speak.
Okay. One would strongly argue that this is a penalty on India, but it is being borne by some exporters who are accounting for 50 billion, and they're all extremely labor intensive. Gems and jewelry, textiles, leather, all three very labor intensive. So some lakhs of workers are going to pay for something which is a national penalty. So, what are the bets, Kanika, that there can be a package and there will be a package?
So, Lata, first and foremost, in terms of package, like Brazil has given some $5.5 billion direct package for exporters. The numbers that you're talking about, possible. But I would still completely agree with what Sameer said, and this was done way back in COVID as well, that whenever the government has attempted to directly protect MSMEs, exporters in times of global growth slowdown or these tariff hikes, it's mostly in the form of guarantees, even though it's a 100% government guarantee. And that does not have direct fiscal impact or a significant fiscal impact in the first year. In fact, I would want to just make one more point in terms of GST as a reform. While the market today is debating that the near-term fiscal impact can be significant because a demand kicker comes with a lag, but the medium-term impact is very positive, which is why the question that you were asking, Neeraj. So while 10-year yield today is up 5 basis points, 50% retracement of the rating upgrade impact, the 30-year bond yield is down 5 basis points.
Okay.
Because it's a medium-term positive. So there are other levers. And of course, as you said, that the RBI dividend impact, some 50,000 crores extra that they got can offset even if they come out with a direct package for exporters, A. B, for GST also, the compensation cess is budgeted to rise from 60,000 crores last year. The compensation says fund amount, outstanding amount after accounting for GSEC redemptions.
Okay.
That is expected to rise from 60,000 crore last year to 1.2 lakh crores this year, to be equally possibly divided between states and center.
Okay.
So there are some buffers to offset fiscal impact even in the near term and maybe pay for that exporter package, if any. Thanks.
Okay. No, other things apart from what you're saying, I would strongly say that this is very different from COVID. COVID hurt all of us. COVID hurt all MSMEs. But here you have a specific set of exporters which are labor intensive and, for no fault of theirs. It's not a marketing issue. It's clearly a political issue. And I would think that if a package for specific companies is called for, this clearly is one. It's something the nation should stand up for. But Neeraj, all told, do you think the bond market is not going to be as celebratory as it was on Thursday when the news just came? You know, we were expecting that things would only get better from here on. There was a very, very cheerful sense. Is that going to be dulled because, you know, there could be a package for exporters, there will be a consumption boost because of GST cuts? So is the Diwali over for bond markets before it began?
So I think for the bond market, there are 2-3 things which are at play currently. One is that we are clearly looking at the end of rate cutting cycle. Maybe there is one more rate cut, maybe there's not. We don't know, but clearly a big part of the rate cutting cycle is behind us, and the market has already discounted that. We have seen a significant steepening of the yield curve, approximately 100 basis points in this cutting cycle, which basically tells you that the market's expectation of further rate cuts is kind of dissipated. Secondly, on the fiscal front, ideally we should not be talking about government abandoning its fiscal conservativeness on the day when we have received a rating upgrade. And we received the rating upgrade precisely because we have been fiscally conservative, right? I think that's a requirement from S&P. So I do expect that, having seen the benefit of that conservatism, the government will continue to be, very mindful of the impact on the fiscal of anything that it does. And I completely agree with the previous speakers that any intervention by the government to support some of these sectors could be in the form of easier flow of credit by way of guarantees rather than providing direct, financial help in some senses. So I think the upside for bond yields is limited, given the fact that direct fiscal impact is likely to be limited. But frankly, there is nothing positive for the bond market to look forward to at this point.
No, I agree with you that if even if there is one more rate cut for the bond market, it is anticipation of being in the start of a cycle that gives gains. One more rate cut is not going to really cheer, not the 10-year for one. But isn't there space for a rate cut, Sonal? Considering that GST is going to bring even CPI down, doesn't it absolutely increase the chances?
Yes, there is room and in fact need for rate cut, but not GST driven, Lata. I think the typical, the price level, let's say moderation because of GST tends to be a one-time adjustment. Monetary policy does not respond to the one-time adjustment. What we need to focus on is the medium-term outlook on both growth and inflation. So on growth, I think let's say the positive from GST, the lagged impact of monetary policy versus the negative shocks that will hit us on the tariff and the uncertainty and the other channels of indirect spillovers. Our view is RBI's projection of 6.5 is optimistic, and we see downside risk to that. And two, on inflation, I think the 3.1% that the RBI has set, our own forecast is through 0.7% for FY26, not accounting for any GST changes. Okay. The important message actually from the July CPI was that after 2 years of disinflation, we are actually seeing early evidence of further disinflation in the core categories. And I think that basically suggests that inflation remains significantly below the medium-term target of 4%. So we are still expecting a terminal rate of 5%, so 2 more 25 basis point cuts from here.
Unfortunately, running out of time, so economists, just tell me your rate cut expectations. Neeraj has more or less said that he's not expecting. What about you, Kanika? Not much time, so quickly.
So token 2550, Lata, timing contingent on when growth fault lines...
25 or 50?
I would say 25.
Okay. Sameer?
No, we don't see a rate cut.
Okay. I think bankers don't want the rate cut because they've had enough of margin compression. I guess there is an emotional element creeping into the ICICIs and the Axis at that point. But honestly, the fiscal part, if there is a fiscal crunch, it is going to hit the states more. And it is the states where the capex happens more than at the center. So, there are more dimensions to this unless we know the entire package. One should expect a raucous GST Council discussion because the states are not going to swallow a reduction in their revenues very easily. And such large GST cuts in the past have always happened by consensus. So, we are going to see a lot of uncertainty on how much GST cut, who bears the burden? Will it be the states? How much? How does that impact capex? A lot of unanswered questions. So to blindly say that consumption and capex will receive a boost is perhaps too much, but consumption clearly getting a leg up from the complex of announcements that came over the weekend. Thank you very much, Neeraj, Sonal, Kanika and Samir, for improving our understanding of the economy and the bond markets, but a lot of loose ends, a lot of moving parts. Let's see how things shape up for the economy. That's it on Indianomics. Thank you very much for watching. Stay tuned for more. Hello and welcome to Indianomics. The Independence Day weekend has been momentous for the Indian economy. Eventful, perhaps, is a more correct word. On Thursday, even before the weekend started, S&P upgraded India to BBB, one notch higher than investment grade, the best grade we've got so far. On Friday, the next day, that is, the Prime Minister announced that GST rates would be cut by Diwali. And over Sunday, our reporters were picking up that the US-India trade talks next week are postponed, which means the dreaded 50% US tariffs may happen after all, albeit for a short time. What does all this mean for the economy, for bonds, and for the cost of capital for companies, for their appetite to invest? I have with me ace banker and bond expert Neeraj Gambhir, Group Executive and Head Treasury Markets and Wholesale Banking at Axis. We have also got economist Sonal Verma, the Managing Director, Chief Economist at Nomura. We have Kanika Pasricha, the Chief Economist from Union Bank, and Samir Narang, the economist from ICICI Bank. Ladies and gentlemen, thank you very much indeed for your time. Well, first let me get the macro picture, then we'll get to the bond picture. Sonal, the rating upgrade and the GST cut consumption boost. One is a capex boost because it brings down the cost of capital. One is a consumption boost. Are you changing your macro growth numbers?
No changes as of now, Lata. I think there are lots of moving parts. The rating upgrade, of course, is an acknowledgement of what's been going right in India. So it's a sentiment booster, might lower the cost of capital for some companies. But in terms of a substantial change in capital flows, etc., I think there are other factors that are offsetting that. The most important being the US-India trade talks and the likelihood that the higher tariff rates are likely to stay for a while. So the impact of that on exports and investment is something which we will see September, October onwards. The GST is a positive surprise. I think typically what we've seen in the past when such tax cuts are announced is that consumers postpone their consumption decisions in anticipation of lower prices. So we could see a softer patch in terms of durable consumption in the run-up to Diwali and a bigger boost after that. So on net, lots of moving parts. As of now, we are still at 6.2% for FY26, and risk we still see skewed to the downside.
Okay. Kanika, your views? Overall, there is a negative from the tariffs probably for some time, but a positive in terms of consumption boost. Where do you stand in terms of growth?
So Lata, I completely agree with what Sonal said. There are a lot of moving parts, which is why we never changed our growth forecast as well. We maintained it at 6.3% from the start of the fiscal year.
Okay.
While 30 basis points is a direct estimate impact of that 25% tariff hike, we would also want to await the GST booster shot coming in the form of consumption once the taxes kick in from Diwali. But yes, details awaited A, and B, on tariff talks also, whether any penalties are imposed, because there are also news that the US authorities are not coming to India. That needs to be closely watched. So yes, moving parts, but I would just want to add one thing, maybe from growth perspective, there is a sentiment hit of these tariffs. So maybe the growth impact is delayed from these positive stimulus measures, but direct inflation impact may kick in from December quarter itself. It should be a positive to watch. Thanks.
Fair enough, of course. Sameer, your thoughts? I mean, people were talking about a 0.6% or 0.4% GDP impact even when it was 25 basis points, the tariff hike. Now, 50 at least for some time is a possibility. So what, do you leave your growth numbers unchanged?
No, I think, Lata, when we started the year, we had downgraded the growth estimates because of weak growth outlook. Then we upgraded after the front loading of monetary policy. And post the incremental tariffs, now we stand at 6.3%. We've lowered them a tad bit by 10 basis points again. Now, both these events of higher tariffs, as you correctly mentioned, the overall hit of 50% tariff for part of the year will be lower. For a 12-month rolling basis, of course, the number that you mentioned will be on the higher side, maybe 0.7, 0.8%. But there are a lot of mitigants as we see. And one of them is the GST announcement that has happened. That is one. And the second thing is that, even in case of China, where tariffs have been very high, re-exports have happened from other geographies. So it is very likely that in India's case, at least for the larger set of producers which are part of the supply chain, be it for gems and jewelry and even for textiles, there could be re-exports happening from other geographies. But for MSMEs, the impact would be larger. So on an overall basis, our sense is that the optical hit looks much higher. The eventual effective hit will be perhaps half of it. So our number is around 0.4% of GDP.
Okay. Well, the point is it may not be very growth positive considering so many factors may cancel out one another. But it's certainly a stock market positive because the GST and the income tax cuts are going to be EPS accretive for sure. And most important will be the cost of capital. To you, Neeraj, are you expecting we already saw a steep fall, a good, 7-8 basis points fall in bond yields on Thursday itself because bond markets could still take advantage. But today the yields have gone up from Thursday lows because of a feared fiscal impact. So net, do you think cost of capital goes down for companies?
Sentiment-wise, it's very positive. I think the S&P rating upgrade was a bit of a surprise. I don't think anybody in the market was expecting for it to happen now. If anything, there were expectations maybe next year we could see a rating upgrade. But the fact that it has happened now is obviously a positive for the sentiment in all the markets. The impact on flows will be a bit muted at this point in time, given the other, macro variables, particularly on the trade side, has been mentioned earlier, they play out. Bond markets, I think for now, have taken about 5 basis point net gain over yesterday and today, or the previous business day and today. I don't think we materially change from here unless and until some of the other things play out. The tariffs, playing out will have a bearing on the currency, which eventually will have a bearing on the flows. And therefore, I think that market will wait for some of these issues to be sorted out before, changing the direction.
Okay. But what about, your own sector, Neeraj, along with the sovereign rating being raised, all financial institutions' ratings are also raised, those that have a global rating, like State Bank, etc. The rating has already been raised. Likewise, we already hear that a lot of NBFCs are beginning to raise global capital since it becomes a tad cheaper. Can we say that the financial sector as a whole is likely to get slightly cheaper capital than we expected, say, up until Wednesday?
So not everybody in the financial sector is borrowing externally. Some of the public sector banks borrow externally to fund their offshore locations. And we have seen about 10 to 15 basis point tightening of the spreads in the dollar bond market since the rating news has been announced. As more and more of Indian companies, including the NBFCs, tap the overseas market, given the fact that we now have a BBB rating, will certainly help them raise higher amount of funding at a slightly tighter pricing. So yes, net, to the extent that financial sector is borrowing from external world, there will be some benefit in terms of pricing.
Yeah, actually, in our zest, we are forgetting, look at the way the financial stocks have moved today. This morning, Bajaj Finance, Sundaram Finance, Chola, M&M Financial, Shriram Finance, all of them up between 3 and 6%. So clearly they see a cheaper cost of capital coming their way. Will that I mean, PFC, REC, I think will be the biggest beneficiaries because they are always borrowing abroad. You don't see any capex impact of this, Neeraj?
I don't think rating per se impacts capex. Rating, as I mentioned earlier, that improves the sentiment. It makes it easier for the financial institutions to lend to the companies in a country, particularly the external world. But I think capex has several other dimensions to them, and I think at this point in time, the tariff-related uncertainties are the bigger play, and once they are sorted out, only then I think the capex cycle can have some positive impact.
Okay, let me toss that to the economists. Sonal, what's the sense? There is this expected consumption boost, especially cement. I mean, it's been at 28%, and there is a very good chance it's going to come down to 18%. Likewise, small cars, two-wheelers, very clearly those are... would that trigger a capex boom as well, considering that the cost of capital is going to fall? Not boom. Boom is a strong word, but it trigger capex.
I mean, I think in the overall scheme of things, Lata, right now, first and foremost, we need to see certainty on demand, both in terms of consumption demand certainty going forward and visibility on external demand before that triggers any capex boom. What the GST cut does is it will bring down the price of items that are considered more essentials in nature. And so to that extent, there could be some boost at the margin to consumption demand. Although, as I mentioned, most of this will come after Diwali. We could see some moderation ahead of Diwali. The more fundamental drivers of consumption ultimately will be the ones to watch, what's happening on job creation, how are wages and salaries moving. Lowering prices is one of the factors that drives consumption, but of course, not the only one. Similarly, on the exports, things look like we are going to see a moderation in our exports to the US. So I think it will take a bit of time for us to basically say that capex revival is here.
Okay. Actually, I forgot to ask you all the other big question, economists. What about the fisc, yaar? Sonal, would you think that what S&P is giving us in one hand, we may be losing by increasing the fiscal deficit?
We don't know, Lata. I think everyone's jumped to the conclusion that this is a massively fiscal expansion, but we don't know exactly what the fiscal impact will be. While bulk of the items are moving to the lower tax slab, what the revenue share is, so not the volume, but the revenue share of those items is also important because states will not want to lose any revenue from any GST rationalization. So if you are moving more items into the lower tax bracket, but some big revenue contributors to the higher tax slab, the net fiscal impact actually may not be as negative as is being feared. It will still lead to disinflation because the share of these essentials is a bigger share of the overall CPI basket, but it may not be as negative on fiscal is our sense.
Okay. So the bond yields, however, have moved up on fears that there can be a fiscal impact of the GST cut. But, there were also expectations that a small package, a temporary package, may be given to exporters who are being hurt by this likely 50% tariff from the US. Is there space for that? All those questions to my guests after this very short break. We are back on Economics. Welcome back to this very special Economics. We've been discussing the combined impact of an S&P rating upgrade, a likely GST rate cut for a whole host of items, and possibility of a segment of Indian consumer products reeling under 50% US tariffs. All the combined impact we are discussing with Neeraj Gambhir of Axis Bank, Sonal Verma of Nomura, Kanika Pastrich of Union Bank, and Sameer Narang of ICICI Bank. Before the break, we were talking about whether a fiscal package can come for the exporters. now that the government has already given away some of the money or is going to give away some of the money by way of GST cuts. So that question to you, Samir, do you think now even hoping for a package for the exporters is difficult? Or, will the government go ahead? After all, who is respecting fiscal boundaries these days? Look at Europe, look at the US. I mean, maybe 4.6, why not? Do you think the government might take that posture?
So I think, Lata, for exporters, the benefit will flow through credit lines, through credit guarantee, and through other schemes like maybe interest equalization schemes, softer credit terms, maybe some support or nudge through some of these factors. Risk weights can change. So there are many other tools apart from a direct fiscal handout, which will be given to the exporters, diversification, working on newer markets, helping them out in many other ways. So I think that would be the route taken rather than a direct fiscal handout that will be given. And the cost of that is defrayed over the years, as we have seen during pandemic as well, when the credit guarantee and other schemes were given. So that cost is defrayed over the years. It's not a one-time cost. So I think we should think on those lines, and that's what happened in Brazil as well, where credit guarantees and other schemes have been extended because they are also on a 50% tariff as we speak.
Okay. One would strongly argue that this is a penalty on India, but it is being borne by some exporters who are accounting for 50 billion, and they're all extremely labor intensive. Gems and jewelry, textiles, leather, all three very labor intensive. So some lakhs of workers are going to pay for something which is a national penalty. So, what are the bets, Kanika, that there can be a package and there will be a package?
So, Lata, first and foremost, in terms of package, like Brazil has given some $5.5 billion direct package for exporters. The numbers that you're talking about, possible. But I would still completely agree with what Samir said, and this was done way back in COVID as well, that whenever the government has attempted to directly protect MSMEs, exporters in times of global growth slowdown or these tariff hikes, it's mostly in the form of guarantees, even though it's a 100% government guarantee. And that does not have direct fiscal impact or a significant fiscal impact in the first year. In fact, I would want to just make one more point in terms of GST as a reform. While the market today is debating that the near-term fiscal impact can be significant because a demand kicker comes with a lag, but the medium-term impact is very positive, which is why the question that you were asking, Neeraj. So while 10-year yield today is up 5 basis points, 50% retracement of the rating upgrade impact, the 30-year bond yield is down 5 basis points because it's a medium-term positive. So there are other levers. And of course, as you said, that the RBI dividend impact, some 50,000 crores extra that they got can offset even if they come out with a direct package for exporters, A. B, for GST also, the compensation says is budgeted to rise from 60,000 crores last year. The compensation says fund amount, outstanding amount after accounting for GST, GSEC redemptions. That is expected to rise from 60,000 crore last year to 1.2 lakh crores this year, to be equally possibly divided between states and center. So there are some buffers to offset fiscal impact even in the near term and maybe pay for that exporter package, if any. Thanks.
Okay. No, other things apart from what you're saying, I would strongly say that this is very different from COVID. COVID hurt all of us. COVID hurt all MSMEs. But here you have a specific set of exporters which are labor intensive and, for no fault of theirs. It's not a marketing issue. It's clearly a political issue. And I would think that if a package for specific companies is called for, this clearly is one.
Hello, welcome to News Center. I'm Parikshit Luthra. India and China are all set for a reset in their bilateral ties, which has soured in the last 5 years after clashes in Galwan. The bid to revive ties comes amid US President Trump's tariff offensive. Prime Minister Modi is all set to visit China later this month for the SCO summit. This would be his first visit to the country in 7 years. China's Foreign Minister Wang Yi is in India on a 3-day visit. He met External Affairs Minister Subramaniam Jaishankar to discuss bilateral ties and trade relations yesterday. He also met National Security Advisor Ajit Doval for a dialogue on the border issue. The Chinese minister remarked that stability has been restored at the border. He added that the setbacks that India and China faced in the past are not in the interest of both countries. The sentiment was echoed by NSA Doval as well, who said, and I quote, "Peace and tranquility has prevailed over the past 9 months. Sources also tell CNBC-TV18 that China has lifted restrictions on exports of rare earth magnets, fertilizers and tunnel boring machines to India. The Chinese Foreign Minister has assured India that its concerns on import restrictions are being addressed. Sources have also indicated that clearances are being given to India and shipments are likely to be dispatched soon. I'm now joined by former diplomats Anil Trigunath, also KC Singh, Anjali Prasad, former Indian ambassador to the WTO, and also with us is strategic affairs expert Brahma Chelani. Let me go across to you, Ambassador KC Singh. Ambassador KC Singh, how do you see the developments taking place between India and China right now? Do you feel that we're now on the road towards restoring a close economic relationship?
Yes, but I think the context is important. I think to believe that the Chinese don't realize we are on a rebound from America would be a mistake. So the Chinese know that we are coming back, and is coming just a day after an extremely horrible interview given by Peter Navarro to the Financial Times. This is the White House advisor on trade, who's literally holding India responsible for the fueling of the Ukraine war by India giving money to Russia for buying oil. So it's going from bad to worse, the way it's going. Even yesterday, when Trump was meeting Zelensky and the European leaders, India, Pakistan slipped out of his mouth. So it's just not leaving him. So the Chinese know it. Chinese is not stupid. And remember, I don't think we've ever publicly realized it or analyzed it. Why did Galwan happen in 2020? It happened months after the 2019 Houston conference, where President Trump and Prime Minister Modi were holding hands and appeared like allies in the American political system. The Chinese tend to react. Same thing happened in 62, because Nehru had reached a peak in 60 of global acceptance, global role. They then try cutting India down to size. Now, to imagine that we can go back to hugs and kisses and it's going to be normal, but we also have no option. So this was the way to go. We are going down this route, but Chinese know what we are doing, and we should know what Chinese are doing. And therefore, it's a transactional relationship. And if we think they're going to forget about Taiwan, that's why they brought it in. And we have to correct them that we've not changed our position on Taiwan. And there's Dalai Lama, and there is the border. None of that is going to get solved. The Chinese will push you, and they will hand you out things because they know you are in rebound at the moment.
Okay. Brahma Chelani, how much of the restoration in ties right now is a result of India-US ties taking a rough turn? And how much of this is because of the understanding that was reached between Prime Minister Modi, Xi Jinping at the Kazan summit in Russia on the sidelines of the BRICS meeting?
The US-India relationship began fraying much before Trump took office in January this year. It began fraying under Joe Biden's presidency. So that fraying relationship was clearly one factor in India seeking to mend differences with China. And that's the reason why the Kazan summit meeting between Modi and Xi Jinping occurred. The problem is this, that China hasn't changed its fundamental attitude towards India. It still seeks to contain India strategically, economically, and militarily. It has not vacated the areas it occupied by stealth in April 2020. But we have given up our position. Our stance was status quo ante. Status quo ante has now been forgotten. And in a way, what is unfolding really shows why India repeats history. Under successive governments, it's been happening. Because in fact, since 1947, one factor has remained constant in Indian policy: a defensive, reactive, and ad hoc approach to strategic developments impinging on India's core interests. So if you take China's rolling annexation strategy against India, for a number of years now, under successive Indian governments, China has been incrementally changing the territorial status quo in the Himalayan region. And India has been incrementally legitimizing the Chinese land grabs, not in actual words, but by, again, seeking to befriend China. So what happens is that we saw that under Vajpayee's leadership, then it happened under Manmohan Singh's leadership, and under Modi's leadership. In fact, Modi is coming full circle because his courtship of Xi Jinping from 2014 to 2019 led to the Ladakh land grabs. And now he's on courtship 2. And we know the result of this courtship 2 would be that in a few months from now, you'll be discussing why did China stab India? Why were we taken by surprise? Something will happen within months that will again show that we are repeating history.
That's an important point. You're saying you cannot have an ad hoc approach to strategic relations, especially for an adversary like China. Let me go across to Ambassador Trigunath. Ambassador Trigunath, we know what we want from our relationship with China. We want those informal economic sanctions to be removed. We want less unpredictability in the relationship. But what does China want from India? If we want stable economic ties, which is our priority, what is it that we will have to address in terms of China's concern?
Well, Parikshit, as the previous speakers have said, and I would agree that as far as China is concerned, it is going to remain a major challenge for you in every geography, not only in the bilateral domain. So that is the bottom line. But that means that we'll have to work out together as to how to deal with this big power next to us. Our dependencies are very much there. How to reduce the shocks. As you rightly mentioned, that now they have agreed to lift, restrictions, export restrictions on the magnets, rare earth magnets, and the boring, the tunnel boring things and all. So those are very important things for India as well. Likewise, our trade with them is significant, even though this is greatly in their favor, but it is making your own industry drive until such time that you become self-reliant yourself. So we'll have to see, and China also looks at India as a major market. And that's why when we are talking about these border trade markets or some kind of a border trade, we are opening some of those borders. Now, that is something that is going to give us and the Chinese some kind of a CBM that, yes, we can move on. But the biggest problems remain unresolved as of now. And one of them is, of course, he discussed with NSA, and of course, both sides have mentioned that there should be a mutual respect. But so at the moment, I would say that whatever verbosity has been used in the statements coming out from both sides tends to give you that they both are at the moment committed to carry on some kind of a normal relationship. We can't be friends because still we have the center issues addressed. But it is very important to continue to talk to China, try to extract as much as we can to our advantage. And if we can keep them off from deteriorating any further, that could be useful for us. And China is also looking exactly the same way, because India is not a walkover.
Right. That's an important point. Anjali Prasad, if I can come to you, ma'am, do you feel that it's important for us to consider revisiting economic relations with China? Currently, there are restrictions on Chinese investments. Should we consider doing away with Press Note 3, which says investments from China, Land bordering countries cannot come in automatically. They have to be vetted. In any case, we are clearing Chinese JVs on a case-by-case basis in non-strategic, non-sensitive sectors. Do you think we should open up, give them a level playing field? Is this important for India's own national security and industrial interest?
Okay, thank you for having me on your show. First of all, I would like to say that we have a very difficult relationship with China all around, not only politically, not only geopolitically, even in the multilateral forum. So as Ambassador Trigunayat just said, that in every geography, we have a problem with China. We are going to, face them. And we are seeing that happen even in the multilateral forum. Now, when you talk of Press Note 3 of 2020, why should we, if I ask a counter question, why should we do away with that press note? We should not. It is not in our interest to allow or open investments to all kinds of Chinese firms. We already know their propensity, their way of working. So it will not be in our interest to open up entirely. This approach of a case-by-case basis, I think, should remain till we sort out our non-trade and non-economic issues, which I think are more important than economic relations at the moment. They affect our national security and our national pride much more directly than economic issues. On the economic front, of course, they are the bigger trading partner. They are swamping our market with their goods. We are unable to make standards or implement them. So we have all kinds of products flooding our markets. Even our big industrialists, I'm sorry to say, have become traders. And they import consumer goods of all kinds, mainly white goods from China, put their labels and sell them in the market, although somewhere inside it is written made in China. So when we say that we are taking anti-dumping action and safeguard action, and we are strengthening our manufacturing, I don't think any of this is happening vis-a-vis China. We may be taking a few anti-dumping actions or a few safeguard actions here and there, but that does not matter in the bigger scheme of things.
All right. So that's an important point, ma'am. I'm going to... You don't feel that Press Note 3 should be reviewed. Important sentiment there, important view. We're going to take a short break. We request all our guests to stay with us and hang on. Up next, we will be discussing the all-important summit that was held in the White House and whether we are close to ending the Russia-Ukraine war and the implications for India, which is at the receiving end of US tariffs. Welcome back. The other big story we are tracking today. US President Donald Trump hosted Ukrainian President Zelensky and 7 other European leaders at the White House last evening. There were meetings between Trump and Zelensky, as well as a gathering that also involved the European leaders. Trump's meeting with Zelensky was much more warmer and conciliatory than their previous showdown a few months ago. US President Trump hinted at security guarantees for Ukraine backed by European leaders, but stopped short of making any concrete commitments towards a peace deal. Meanwhile, the Ukrainian leader repeatedly thanked the US president. President Trump said on social media that he has begun arranging a meeting between Putin and Zelensky. He said he will work on a trilateral meeting after that bilateral takes place. The Ukrainian president at a news conference said he is ready for any format of a meeting with the Russian president. And we still have with us former diplomat Anil Trigunath, former diplomat KC Singh, former Indian ambassador to WTO Anjali Prasad, and strategic affairs expert Brahmachalani. Brahmachalani, if I can come with you, what's the biggest takeaway from this White House meeting between Donald Trump, European leaders, and Zelensky? Next, Trump is hoping for a trilateral between him, Zelensky, and Putin. Are we now on the road to peace?
First, in a world where the US, China, and Russia are the 3 leading powers, the Alaska summit underscored Trump's bid to redraw this great power triangle. Trump now recognizes that America's own missteps have helped drive Russia closer to China, fueling a de facto alliance that poses the gravest threat to America's global preeminence since the Cold War. So in that sense, the Alaska pivot represents good news for India, because India has been concerned right since 2022 that American policy is forcing Moscow to move closer to China, and a Sino-Russian partnership or an alliance would be very inimical to India's vital interests. So finally, we are seeing some movement in Washington, and we are seeing, though, that Trump's effort to undo that policy approach is already running into stiff resistance from the establishment, which means the US deep state. But if he succeeds in actually improving US-Russia ties, which will require an end to the Ukraine war, which is the reason why he is investing political capital in ending this conflict, because America is deeply involved in this war, and this war is not going in favor of the West. This is a war which the US and its allies could eventually lose. So Trump is seeking to cut America's losses so that the US can refocus its resources and attention to the Indo-Pacific, where the real contest confronts the US, which is with China. China is the only power in the world that can supplant the US as the world's foremost power. And the Trump foreign policy approach clearly is to shift from the current focus on Europe and the Middle East to the Indo-Pacific, so that the US can tackle the real challenge there.
Right. So Trump looking for an exit from the Ukraine war. Ambassador KC Singh, if I were to come to you now, some of the European leaders were very clear that we need a ceasefire before the next meeting. Do you think that is critical before embarking on any plan for peace?
I think it was mainly the German chancellor who raised it. And then President Trump kind of brushed it aside. They were like schoolboys. People have put a picture of that because he took them to the Oval Office, seated them in front of him. It wasn't good for the image of the European leaders. And as far as we in India is concerned, it would be good to see Europe united in putting up some resistance to America. Because in a multipolar world, if the Europeans already done a trade deal with America, and that kind of reduces the options that India has. And that's why you're turning to China. As yet, there's a huge gap between what President Putin wants and what Zelensky can concede. Because Putin wants the entire Donbass area. Will he settle for the status quo? We don't know. Will he sit down I don't see him sitting down and talking to Zelensky unless Zelensky surrenders. So maybe at best the two delegations can meet. The Europeans are trying their best to make sure that Trump doesn't go off at a tangent. They don't completely lose his support. So they were playing along to the extent they could. But finally, they are the ones who are really concerned. Why do you think the president of Finland was there? Because he said, look, we've had a problem. We have an 800-mile frontier with Russia. Because everybody with a frontier with Russia is worried that if Russia gets a win, and what is said is that if he gets the entire Donbass, then it becomes much easier for him to penetrate the rest of Ukraine. And that's what Europeans are worried about. The French president quite clearly was not happy with what was happening there. So there is disunity, and that's what President Putin wants. He wants disunity in NATO. He wants the European countries to be debating with each other and not with him. So it remains to be seen how it shapes up hereafter. The next few weeks will be important. And with Trump, you don't know what happens in the next week. He tends to change. He doesn't act strategically or think strategically. It's all tactical and day to day. So depending on that. But of course, I agree that it's important if Ukraine is out of focus, because then the 25% extra tariffs that Americans are talking about for India buying Russian oil, then that subject will be off. Then we'll be just discussing a trade deal and just 25% which has been imposed, and not the punitive tariffs. But that may not happen for 6 months or 3 to 6 months.
Let me now go across to Anjali Prasad with that question. Ms. Prasad, the way we are seeing things right now, Trump is not getting a deal with Russia on ending the war anytime soon. India is the leverage there, unfortunately, which he considers as leverage right now. We don't know how much of an impact it is having on Putin. But do you feel that, considering that US negotiators did not want to come to India for the 6th round of talks, which was supposed to be held on 25th of this month, that has been cancelled, would that indicate to you that the US is not wanting to pursue trade talks with India at this juncture, and that 50% tariff is now going to be a reality?
Well, I have felt all along that the US is not sure what it wants to do, frankly. My reading is that they will not go ahead with this 50% tariff, because they will have internal opposition to this. Their own economy will be affected if they go ahead with this. Although they've kept pharmaceuticals out of this, but the other sectors are also up in arms to some extent with his kind of trade anarchy that he's created. So I am still of the view that he may not go ahead with this 50%. He may, although they have cancelled this round of talks, they may still try and get a deal, as they call it, although I wouldn't call it a deal, because we are not the demanders here, and the products that they are interested in are very sensitive for us. So I don't think that Mr. Trump will go ahead with this 50%, frankly.
Right. All right. That's an important point. Let's hope so as well, ma'am. Final question to Ambassador Trigunath. Ambassador Trigunath, looking at what's happening in the White House, looking at Donald Trump's priorities, he's trying to get Russia to stop fighting. He wants to get an exit out of the Russia-Ukraine war. All the Europeans are there trying to put pressure on Trump, trying to put pressure on Putin as well. Do you feel that India will really have to navigate these geopolitical waters very carefully? Are we looking at certain hard reset also in our traditional geopolitical strategies? You know, Brahma Chalani spoke about the need of doing away with ad hocism. Do you think we now need to take a hard look at the way we are approaching our relationships?
Well, I think that we have to be a realist. We must realize in the old dictum that there are no permanent enemies or friends, and there are only permanent interests. As long as we can protect our interests, that should be the way to go. And that was precisely the Indian government is trying to do at the moment. I'm talking to you from Moscow right now. I must tell you that here, we are only looking at the Russia-Ukraine war as the primary mover of this discussion between Trump and Putin. Frankly, it was essentially the Russia-US relationship that has been the main mover of this particular thing, and not necessarily the primary thing is the Russia-Ukraine war. President Trump obviously wants to show it because he has been committing to it, that some kind of a deal can be found at whatever cost. It could be a frozen conflict for all that matters. But at the same time, I don't think that he has already laid out that Crimea will not be given NATO, they will not become a NATO member, Donbass might stay with Russia. So if all that happens, and I believe that ipso facto, it looks like that the Europeans are also agreeable to that. So they are all hinging on what kind of security guarantees are to be provided to the Ukrainians. As far as India is concerned, I personally somehow tend to believe that irrespective of the outcome of these talks, whatever happens, whether there's a deal or not, these 25% that he has put against us, additional penalty because of buying Russian oil, has nothing really to do with the Russian oil. It is more to do with his personal, grudge that he has against India for not being credited with this, the India-Pakistan, the ceasefire deal. So that's precisely what, as far as India is concerned, that's what's being driven.
Okay, so hopefully there will be some creative diplomacy and back-channel talks that may resolve things. We'll have to end there, but thank you very much to Ambassador K.C. Singh, Brahma Chalani, Anjali Prasad, Anil Trigunayat for taking out time for CNBC TV18 on these important issues. With that, it's a wrap on this broadcast. Thank you for watching. Goodbye.